All right, guys. Good morning. Good morning. Good morning. Sorry for being a little bit behind. I was getting a few things here together. Hope you guys had a great day yesterday. Hope you guys are doing well this morning. We had, I should say, two over 100% gains yesterday. 3 for 3, we were 3 for 4 yesterday. 3 for 4 on our trades. The overall markets were offering a lot of opportunity. So if you're not taking advantage of it, hit that like button, subscribe, hang out with us for the morning session and throughout the day. We have a 2-year bond auction today, existing home sales, and a few other things today that could bring some volatility. 2-year note auction, money supply, existing home sales year over year, month over month. So at 10 o'clock, if it feels like the trade you're looking at wants to, it looks like it's a long or it looks like it's a short, just be careful. That's what I'm going to say, because it may set up and you're like, oh, cool, look, I have a long here, and then it breaks the level. All right, so just understand that we do have data. If you guys could do me a big favor, hit the like button, subscribe. Let's get right into the watch list. Yesterday, we traded the Qs like a few times. We traded it 3 times yesterday, 3 for 3. We took a trade. That fourth one was on AMC. I'm still in that. It's a very small one. And these 3 trades from yesterday still paid for that position. So right now you can see what I'm going to do is keep my eye on Wednesday's lows, guys. I'm keeping my eye on Wednesday's lows. You can see that, we're going to have Google and Amazon, or not Amazon, but Tesla and Google earnings this afternoon. So yesterday, we reclaimed Wednesday's low. You made it support and you closed above it. Now it feels like we're about to close. Let's see where we close. If we close above, below 482, look for a rejection at 482. And look to test yesterday's low. That could be a trade. We'll look for pops into 482 rejections, and if tech is going to continue to be weak, then we know where we want to be. I got a few pretty good trades here lined up for us. So, NVIDIA. I was watching this for a little bit yesterday. This is a pretty nice setup. It had a nice move. I didn't take the long here. I ended up trading the Qs instead. And I kind of should have taken that. Yesterday was some funny price action yesterday. It really set itself up like it was bullish. And I mentioned it a little bit yesterday. I didn't dive into it in great detail, but just the price action from yesterday was pretty damn bullish. Let's see, Monday, Friday, Thursday, Wednesday. So NVIDIA has been, if we're looking at the Qs are below Wednesday's low. We are above it on NVIDIA's. So I'm going to look for a pullback into 122 on NVIDIA. 2 options here. We have a few different options. All right, we have a gap fill. That's the very first thing here. You have a gap fill with your 20-day moving average. That's gonna be coming in here. And we talked about this yesterday. I just again didn't trade it because I ended up trading the Qs. But oh shit, give me 1 second here. Did I? Yes, we're good. What's up, homie? How you doing, Mel? It's good to see you, bro. So again, let's see where we open up at 9:30. But NVIDIA, and you guys can tell I had my coffee and stuff this morning. I'm not all over the place and kind of tired because I have ADHD so bad. Let's see where we open up at. It looks like we're going to be open up this morning on NVIDIA, below yesterday's close. But I want to look to see if this pullback. Here's the thing, right? If we pull back off the bell in the 122, all right, we pull back off the bell at 122. Like, let's say not pull back, but bounce back. All right, we're going to bounce now. So this was yesterday's close, correct? Was at 123.74. Let's see, where's it at on here? 123.74. I just want to make sure. So look, I'm going to put a dotted line right here. Yesterday's close and yesterday's high. I'm going to make this a dotted line right here. Yeah, 123.75. Okay. So what I'm going to look for, and I'm going to show you guys here, is that you know, right now we're trading down here, right? Now you can see we're starting to pop into it. You've already rejected it once pre-market. You've already rejected it once pre-market. So what I want to look for off the bell is a pullback into 122 off of that area up there. Okay, and then I want to see, do we hold it? Can we hold 122? Can we finally get that 122 entry? Depending on also what the Qs are doing, but you know the Qs are kind of lagging here. You have some news with NVIDIA, so I'm going to be watching the 15-minute trade line is what I'm saying. All right, I'm going to be watching that 15-minute trade line because if we open up below it, and the 3-minute, right? If we open up below it, I'm going to look for a pop, something like, let me see here, real quick. I know it's a pain in the butt, guys. Just give me 1 second here. So it looks like we have a nice pop. So, you know, we could actually make some progress from now till 9:30. So I think we'll open up above it. If we are below it, I'm going to look for, if you bottom left of my screen, because we have this gap fill here, I'm going to look to see, you know, do we pop into it and then reject it and get a pullback into yesterday's low, and or that gap fill from Friday into Monday. All right, so I'm going to look for a pullback into like 120 if we're below it. If we are above it, or if we can reclaim it, I'm going to look to see if we can get a look for like a 2-point move to 125, and I really want to see if we can fill this gap here at 127. I get that we have the 20-day moving average, we have the support level here at 125. Which would kind of also fill the gap, but I think we could see this thing kind of wick up to like 126. 127 is the support that you did not make resistance yet as well. If you guys notice here, top right of my screen, you guys will notice 127, 128, support, all in this area. You know what? You did make it this little pivot low here at 126. Yeah, 127. So yeah, 127. We haven't turned, well, we did. So I'm just looking for the gap fill. 125, 127 on NVIDIA. Off of 122. The only way I'm getting long is if we get a pullback into 122. Sorry about that. I know that was a little much. But I will say this. Short term, I think NVIDIA's setting up for a small pullback. And the Qs are too. So there may be a trade there, there may not be. There's a lot of stuff still to look at. There's a lot of opportunity out here. So let's talk about banks real quick. Bank of America, beautiful setup here. All right, $42, $41.90 to $42. You can see we've already bounced off of it now, and it looks like we're trying to, you know, we got some buyers stepping in here. This could leave us some room for some nice upside here if we can hold this. All right, UPS didn't have too good of earnings. That so far hasn't put a hurting on the Dow yet. So far it hasn't. So I'm going to keep my eye on that. But Bank of America, $42, right down 42. If we hold, if we pull into $42, I'm going to look for a long at $42. All right, $42, I'm looking for a long. And I want to see if we can get a bounce into 43, 43.50, even 44. I want to see if we can extend this. You know, a dollar move with it. Let's go look at the deltas real quick. A dollar move. Let's see here. The 42.50 calls. You have a 42 delta and you're paying 30 cents. So that means you're going to make a little over 100%. Yeah, we'll look at Apple. It's holding up. Apple's holding up. I actually was, it's funny you say it because I was looking at it this morning. So, what was I going to say here? 42.50. We have a delta of 42 cents. Okay, 34, 36 right now. Yesterday, these calls were going for. So we'll make a little over double what we pay, dollar for dollar. So if we can get a pullback into $42, then I'm going to look for a bounce again into like 43. All right, I'm going to look for a bounce into $43. I think this could be a nice long. I might try to leave this on for a day or two. We'll give it some time. Also, So Bank of America, 42. If we break 42, guys, then I'm going to look to get short at 42 and look to take it to 41. All right, this is setting up pretty much both ways here. If you guys look on the daily chart, you also have that 20-day moving average coming in down here, so it should pop up a little bit. I might be a little early on this, but I still think this is a nice, that was some low volume. Do you have some tails there? Let's see if some buyers try to step in here. You also have this previous resistance up here that I want to see if we double top up there at 44 or 44.60. Give me 1 second. All right, so that's Bank of America. Same thing, guys, for JP Morgan. We'll get into Apple and stuff. I think it's going to be tough for Apple. I think you might be waiting on... I'm going to say this real quick. So JP Morgan has the same setup, guys. 210. I'm still watching 210. We break it, I'm looking for pullbacks. We hold it, I'm looking for bounces to try to get through Friday and yesterday's high. And see if we can extend. If we can break through Friday and yesterday's high, you have some room up to 215, 216 on JP Morgan. Sorry, there was a somebody was doing the weed and stuff. All right, let's see here. So let's go to a 30-minute chart real quick. Again, these will be some nice trades here that I think could set up for us. They've been holding up nicely. You have, you know, they've pulled back enough to where I feel like we should have some room to extend. We haven't gotten it, so, you know, I feel like the minute these things try to start going, you know, it's just a pretty clear level, right? We continue to hold. We get another test of 210 on JP Morgan, 209.75 to 210. Yesterday's low. We look for longs, right? We break it or we be patient. We break it. You also have a gap fill here on JP Morgan. All right, there's a gap fill down here at 204. So if we can get the 210 break, look for 205. You know, these things are going to, it's not going to take us much to get 70, 65, 50, 100, 120% on these names. All right. Now, if we get a crazy downside move, yeah, that could be a little different. But, you know, the big runners usually are with like Goldman Sachs. And you guys remember, we got in those at $1.80 on those calls, and they went to 1600 at the end of the day and woke up the next day. They were at 1800. That was over 1,000% on those. But so that's NVIDIA, Meta. So if you guys noticed yesterday, Meta, you know, this whole sector had a really nice day yesterday. All right, this whole sector, Google, Meta, had a really nice day. Semiconductors also had a pretty nice day yesterday. Okay, I thought that it was getting ready to get rid of it. Tesla had a nice day. Tesla's still bouncing. I didn't trade Tesla because of the fact that they have earnings and their premiums were going to be a little high. I kind of wanted to take my time. And again, you know, I'm coming into the week this week just to consistently take as much money as I can out of the markets. And I did it yesterday. All right, 3 green trades. All 3 of them did get above 100%. So you had a nice range from 20, 30, 50, 40, depending on how you held. You know, you want to be able to take it because you're seeing, again, remember, we have news. There's a lot of stuff going on. So this market's could possibly whip around. And if you're in a position and random news comes out and you wonder why it's going against you, you know, you got to take your profits. There's going to be breaking news all this week, guys. So keep that in the back of your mind. Let's see what let's see where, let me see real quick. So Meta. All right. So Bitcoin's running. I haven't looked at gold yet. I know gold was pulling back, but gold was running. I gave that out about a month ago. And I feel like I'm rushing, and we still have a half hour. Oh, I still have games. So AMC had news yesterday. We'll look at that. CarMax is going, which could send Carvana if the IWM is pulling back. Short those. So, all right, let's talk about Meta. So Meta, you had a bounce back into the 50 and 100-day moving average here. All right. This is a low volume bounce back too, guys. You can see that volume decreasing on this bounce back. I have a lot of levels in here that I don't need. CTO just had some news there. All right, so you guys can see here, 50 and 100-day moving average. Where are we at now? 488. So we're still up here at that 490. Let's see if we can get a bounce back into... Let's see if we get a bounce into 490. See if we can get that short. They may take this from us, and that's okay. But that 50, 100-day moving average, let's see if we can get a pullback. Again, remember, this is kind of what I'm looking for today. Let's see if we can get that pullback today. And this would be a nice support level that it regains on Meta. Okay, that would be a nice double top support that it would regain. Let me see here. Let me see 1 second, guys. I do apologize. I had a couple things this morning. I still have more. Like, my watch list is still deeper. I don't think I gave you guys Coinbase yet. That's pretty simple. Coinbase pulls back into 460. I think you have room to 480 if Bitcoin can keep going. But I would wait for Bitcoin's pullback to happen. You have Ethereum open up today. So spot Ethereum names are going to be going today. There's going to be a lot of volume in that sector. Tariq, what's up, man? It's good to see you guys. Hope you guys had a good day yesterday. It was nice that we were able to identify yesterday, just, you know, taking those scalps that were 10, 15, 20-minute longs. At the end of the day, I got into some puts around 10 cents, and I think I got out of those just right around like 18 cents, 20 cents. So that was a good 50, 60, 65%, whatever that would be. I had to sit in that for a little bit, but understanding, you know, we were getting those moves and we were getting paid for it, you know, and just taking our profits. And that's kind of the goal I wanted today, was just pack in as much money as I could, just get the move, you know, take my money, you know, because we have earnings. We're you know what I mean? We have a lot going on. So it's going to be a little hard to swing trade because I don't know what sector outside of like crypto that's consistently rising or consistently falling. It's like we're kind of, you know, waiting. We're in that little weird period. So banks did well. Banks are setting up. So I want to see if banks hold up and we look to get that, you know, I think we could get like a nice, you know, 2-day run or so. Just keep your eye on the Dow and then, so Meta, sorry guys, Meta, this whole area up here, even though we know we have the 150-day moving average, which we tested, we're still up here. So watch 492.50 to 490. It's going to be about a $2.50 area. It's a $2 area. So let me look at this real quick. What I'm doing is I want to see where MACD and some of these, so the volume, we may, sellers, yeah, let's do that. I'm looking for that, guys. I'm looking for that. This seems like a good plan here. This whole area up here at 496 to 492.50, yesterday's high. Look for this whole area. We'll look to see if we can't take a short on Meta. I'm going to watch it. Here's the thing that people sometimes forget. Like, if you haven't watched something, it's a little hard to trade it. Like, you want to be careful with just like randomly picking a stock out of a hat. You want to trade something that you know and you've been watching, because you're going to know how it moves. You're going to know and it's going to give you confidence as well. Keep your eye on that area right there. So here we go. I would like to see this. So I'm going to target 475. All right, I'm going to be honest with you guys. I'm going to target 475 on Meta for this Meta short. Damn, man, that daily chart is so overdone. Holy cow. This thing may not move. When does it have earnings? The 31st. So it has earnings next week. So we have the gap fill. Yeah, let's see if we can get a pullback on Meta. All right, I'm going to target Friday's low on Meta, guys. I'm going to target Friday's low on Meta. So short 490, 492.50. I'm going to write it down real quick. Meta 490. 490. $490 short, and then we're gonna look. I'm gonna target. I'm targeting Friday's low at 475. We may not get that in one day. We may not get this in one day. You also have a little minor support here, but I feel like this is the level you want to look for. I think that's the level you want to look for. Let me look at this daily chart and look like your daily chart too, guys. The support level on your daily chart is 460, but this feels like Meta's just been overdone. I don't want to spend a bunch of time on this, but let's see if we can get that. I think we can, guys. I think we can get pullbacks in the 480, 475 on Meta. So bounces in the 490 to 492.50. Yesterday's high. Let's look for the short and try to take that down to 480. I'm going to take profits if we break in front of yesterday's low. If we can break yesterday's low, take the rest of that off in front of 480 and then leave a piece on to see if we can get down to 475. All right, that's Meta. Let's see here. Google has earnings. Amazon. Let's look at Apple real quick. Again, I appreciate you guys. It's good to see everybody. I hope everybody is doing well. I was talking about a hedge yesterday, and I kind of forget where I was going with it. Let's see here. There was some weakness and strength that we were talking about yesterday. I'm trying to think of it, but I can't remember exactly what it was. So, all right, Apple's pulled back here to the 20-day moving average. It's been having red day after red day after red day. The cool thing about Apple is you have a nice island reversal up there. So pay attention to that on a daily chart before you leave. Oh, nice. Good stuff yesterday, man. Good shit, man. Yeah, let's, you know what I didn't do? Spotify this morning actually was a nice runner. Let me do this real quick. Looks like energy's pulling back like I thought it would. Okay, so I have that. Let's see here. All right, Apple. All right, so 20-day moving average, nice solid support level here. I would look for, honestly, I would look for an attempt to get back up to this island reversal. I would look for a move back to like 430. But see if you can get it. Let's see if we can take a long on Apple, depending on the market, or just at least Apple itself. Let's see if we can get some type of something going for Apple and look for a move back up here. Again, you have to understand it's a gap up and then a gap down. This is a bit of an island reversal here on that daily chart up here. It's not pretty, but it's still a gap up, holds, and then a gap down. So I want to look for a bounce back to retest that like 432 level and then reject it and see if we can't, you know, pull it back, you know, over the course of a couple weeks, you know, going into earnings or whatever. So I don't know. I don't really have that much conviction in that, you know, until it shows us, right? So I'm looking for bounce backs at 230. I think 230 is the level, you know, that you want to try to aim for on Apple, as long as you're holding the 20-day moving average. You know, we'll see what happens today. It doesn't seem like it can get off of its butt at all today. CrowdStrike had another down day yesterday. I do want to look for a reversal here, especially if like ARK, if some of these institutions can get behind this thing. Watch for this thing to have volume. If we can get this thing to have some volume, I would like to take it for a day trade. So I'm going to keep it on my watch list. Remember, it did have its inclusion to the S&P, so there are a lot of fund managers that are going to want to still own it. If they haven't bought it now is the time. I know it's below the 200-day. I know it's a falling knife, but I still think in the course of a few years... here's the thing. When something like this happens, you have to worry about lawsuits and like what that could possibly mean. So I don't know if the street knows something that we don't, but Delta is still down. So, you know, I haven't seen yet, and I also haven't looked. You have support there at like 248 to 250. If there's going to be any lawsuits from this happening, all right. If there is, then it's going to be a little hard to get some volume behind this. I do think we should be able to get a move back to 290 though. I think a move back to 290 and see if we can test Friday's low could be a perfect trade. All right, not a perfect trade, but you guys know what I'm saying, right? There you go. There's that pivot low from Friday. We have the gap fill. You know, we are right now, we are above prior day's VWAP, so I would watch for, where are we at? We're at 269. 269. So what I'm going to look for on CrowdStrike is a pullback into, see, we're at 269 right now. I'm just going to look for a pullback into prior day's VWAP and yesterday's close, if we can get that. You have a level here at 260, it's like 270. So let's see if we can break 270 and get some volume behind this thing. Again, I think you're going to have some people that are eager to buy it for the 10-year, 5-year outlook, unless you start seeing signs of if you start hearing news of lawsuits. That's when things could get ugly. All right, now I don't know if there is any. I haven't looked. I can look real quick. Okay, so CEO called to testify for the House Committee. Global infrastructure stock surged nearly 1% this week. See, it doesn't really say anything. So I know we have more. So keep that on your watch. It could be a nice little long there. I just want to. I don't want to forget about it for a day that it could have some nice volume. DJT, I'm still wanting to see if we can, like, what this thing's going to do. It's in a weird area where you have the 20-day, 200-day. You know, I don't think it's in an area where it can sell off that much or rally that much. But I would look for pullbacks down in here at like 32 to $33. And you can see it's already bouncing today. What I want to look for is, I want to see if we can get another bounce back rejection up there at 36. I'd like to see if we can get another bounce back reversal. See if we can reject 36 one more time. Possibly take the long to 36. This may not even really be a trade, but this is a nice setup. If you see that we get volume behind it. Look for $36. Longs to 36. You're starting to see right now we're regaining that 20-day moving average. Right? You broke it. You hit it yesterday. We broke it for a little bit today. And then you're getting that tail there on the daily chart down at it. So let's see if we get another bounce and look for $36. Longs to 36. That would be... It's a 6% move on the stock itself. So options on top of that have a pretty serious support level up there. Let's just look for a run back to 36. Take off the long. You have a mild level also at 35 to keep an eye out for. So DJT, if you want to look for a long to 36 or wait for the short up there at 35, 36. GameStop with this AMC news, which we'll go look at AMC really quickly. Let's see here. I know I'm forgetting a bunch of stuff. I know I am. So AMC is holding up. AMC is holding up now. I don't know how much this could help them. I think there was a movie that did pretty good. I don't know if you guys heard of it or if you guys are, you know, into like, you know, movie guys or girls. Not that I'm saying there's any girls here, but I think they said this morning like the Wolverine something was like one of the highest rated R movies possibly or something like that. I don't know if you guys heard that too or not. But AMC, you have a nice area here at, so that's $6 and we are at $5.29. If AMC gets above 6, watch out. All right, if AMC can get above 6, watch out. All right, watch out. 6. So what's going on right now is look at this 200-day moving average. You can see that turquoise line at the bottom right. Here, I'll do this just to make it easier. I feel like I'm forgetting a bunch of stuff. You have the 200-day and the 50-day right there, guys. So let's see if we break out to the upside. You have a gap fill up there at $7, $6.80 to $7. Or if we break down. If we break down or if we break up and out. If we crack the 50-day, I'm looking for $4. I'm looking for the 100-day moving average. I'm still in 450 puts. So we'll see what happens. I only grabbed a couple just to put it on. And I tried to get out. Yesterday I got in at 6 cents and I tried to get out at 10 cents. I was a little too slow. It just reversed on me real quick. So either way, for me, you know, that option is still paid for and I'm up on the week from yesterday's trading. So we'll keep an eye on AMC and we'll try to relate that to GME if it gives us the opportunity. You can see here GME tried to run and rally. You got to 30. That's why I always said, let's worry about 27 before we worry about 30 or 40 or 50. Let's worry about 30 before we worry about $48 to $50. You know what I'm saying? So you're below the 20-day. You guys can see here that green box to the right. You guys can see here you're below it. You can start to see it. It's curled below it. Look at that. And then it turned it into resistance. All right, broke it. Resistance, resistance, resistance. Nice wick. And then what are you doing again? You know, we're going to find out soon here if it's going to act as resistance again. I think for the most part that is it. GameStop moves back down into $24. That's what I would look for. Moves back into 24. Let's look at Microsoft real quick. Microsoft is above the 50-day. You might get a nice trade here. Look at Microsoft, guys. If you can get above 445 and you're not above it yet, if you get above yesterday's high, you could look for this gap fill. Look for a gap fill to 450. 449.50 to 450 on Microsoft. All right, it's about a $4 $5 move on Microsoft. You may get more. I mean, your resistance level is at 455, so if you catch this thing correctly, you might get a $10 move out of Microsoft, and that could be a nice little day for you. So you can see that double top from yesterday. This would be a nice setup, by the way. If you break yesterday's double top and you hold it as support, I'm looking for a run back to 455. All right, I'm going to keep that one on my watch list. All right, so we have that, Schwab, NVIDIA. I know there's a lot that I'm missing. Coinbase, I gave you guys that. Watch Bitcoin. We 1 o'clock, by the way, 1 o'clock, we have a 2-year bond auction. We have 10 minutes here. Tesla. Let me see something really quickly. I know I'm back and forth. See, that's my ADHD. So look here, 68,000 we rejected, right? Look for 66,000. You can see here on an hourly chart on Bitcoin, you can see us pulling into the bottom of this box, and we've had this box up here for a while. So look for that to try to become support. If it does, that's the pullback I'm looking at Coinbase for, to see if we can take that long in Coinbase and start to go up and test those highs. Now you have Ethereum. That's also going to add to the catalyst of Coinbase today. So watch Ethereum, as this thing could also, just like Bitcoin did, get a nice run and start to rally for a few days. It's very possible. You know, it's very possible. I mean, they may have gotten it out of the way with the Bitcoin move from before, but I think Ethereum could have a little more room to run. So we'll keep our eyes on that. Look at it. Look at that setup too on Ethereum. I don't really know the spot Ethereum's, but look at that break of the 50-day. It pulls back into the 50, holds it. I'm looking for Ethereum to get back to 3,800. That right there is a really nice setup. The only thing that it doesn't really have is the volume, and I want to see if you get that volume today. Do me a big one. Do me a big favor. Hit that like button for me, guys. I appreciate you guys. It'll help others find the stream that would like to get some help and ask questions and all that fun stuff. Subscribe if you haven't subscribed. I'm doing a giveaway once we get to that subscriber mark. And let's continue to have a good week. Let's keep putting money in our pockets. Let's understand what it is that we're trading it. Why are we trading it? So basis that we have right now is we're in the middle of earnings. We're going to have a 2-year bond auction here in a little bit. Coinbase is running. All right. There's some strength in Coinbase. You're having the Ethereum spot ETF open up today. So we want to still look for those names of like MSTR or like really Mara, right? MSTR had a nice day yesterday. Riot. I don't know if that really has anything to do with whatchamacallit. You know, I don't know if these have any, if I don't think they do, but you know, really Coinbase and those exchanges like Robinhood. Watch Robinhood. Right? Robinhood has a really nice setup here too. Fuck. Alright, on the daily chart. It's a really nice daily setup there. Look at that. 50, 100, 200, all where they should be. Nice little bull flag pennant there. I think Robinhood's going to be back to 30 bucks before you know it. I do. Let's see if we can get above 23.88. You're at 23.20 now. Pulling back into yesterday's low. Closing in on yesterday's low. Mild support level here at 23 flat. You have some nice volume building up here as well. So let's see if we can start to break out. You have a nice little wedge here. Let's see what happens. That's a nice bounce off the 20-day. Yes, you have some tails there. We're going to find out. All right, we're going to find out. I think today's catalyst could open up for some volume in the crypto names. Okay. Just want to keep that on our radar. Yeah, this is... I got to be honest, guys. You have some solid support levels right there. $22.98, $23. I think we got to look for holds there. And if we don't hold, okay, cool, great, grand, wonderful. Get short to 22. You know what I mean? And you had the 50-day right there. So... if we break 23, look for the short at 23, take that $1 down to 22, and also not only do you have support there at 22, you have the 50-day that's going to be coming up into you as we pull back. The 50-day is going to be coming up at us to give us that bounce up higher. All right. You have a wedge forming here. A nice little wedge. So keep that wedge on watch. Just because it may not be a level like of resistance like Friday's high or yesterday's high. It may come in just shy of because of that wedge that's forming. So Robinhood's going to be on my list. All right, where are we going to take this? Or where would I look to take it? 30 bucks, honestly, but that would have to be a swing trade. Oh yeah, this level here, man. This level's mean. So, $24. Man, if we can get above 24 and start turning 24 into support, I'm going to tell you guys right now, we start turning this $23.80 to $24 into support, oh, we're going. It's on. All right, I think this thing has room. Look here at this daily chart here on the left-hand side. You see that pivot high? That's where we're at now. That's at 20. That's at 23.90, 23.98-ish. So it's right there at 25. You can see here on the daily chart. Pulls into it, support. All right, 23.98 support, breaks it, turns it into resistance. So if we can reclaim this level, I think you have a nice solid room, nice solid shot up there to 27.50. 27.50. 27.50. Yeah, we'll keep it at that. Really, it's like 30 bucks. Yeah, $30. Yeah, $30. 27.50 and then $30 is that resistance level. And we'll worry about 35 and 30 after if we can get through and hold 25. Okay, so we'll worry about what we need to worry about first before we get crazy. And look at that pattern right there, guys. Look at that pattern. Right? That's a nice pattern there. Nice resistance. You break out on an increase in volume. Low. Look at that low volume, guys. So that's a really nice low volume pullback. Let's look for this to hold. Again, this is going to be 23 to 22.75. I'm going to give this about a quarter of room. You know, and until we break it and then turn it into resistance is when I'll get worried. Because, again, you know, that's really the buy zone. It's an area. All right, so let's have a great day today. Just want to just say I appreciate you guys for being here. If you guys have any more questions or anything. Sorry that I did not have the live chat up, so I apologize for that. Exactly. Look before you leap. All right, so I got some banks in mind. Let me log in real quick. I'm not even logged in. I got to get all my stuff ready. Tesla has earnings later, so that's got to be up to you to trade it. So again, QQQ. Watch Wednesday's low. Watch Wednesday's low. All right, QQQ Wednesday's low. All right, what were we talking about? NVIDIA. Here, let me do this 5 minute. So here we go. Right, NVIDIA is below. Looks like it's rejecting. NVIDIA. Let's see, Tesla. Tesla, you have a little area here that's resistance. You'll probably pop into 250, 258.50, and then reject and look for a move back into 250. Or pull back into 250 long. All right, Coinbase. All right, Coinbase is still pulling back there at 260. Let's see if we can get a nice little breakout to 270. All right, good luck today. Qs are pulling back, so we're already seeing tech is a little weak here. Let me make sure. So you can see the SPY got above yesterday's high. This did not. This as in the Qs. The Qs never got above yesterday's high in pre-market highs. So there's your little bit of divergence from the jump that's showing you, hey, tech is kind of weak. Snowflake, I haven't brought this up, but Snowflake. Let me grab my charger. Snowflake is on watch. I want to see if we can get a trade going here. Let me pull up Meta, because Meta does have a nice setup, and that whole sector again did pretty well yesterday. I'm just curious, like, because again, what catalyst do we have? Bitcoin. Yesterday, Google, Meta, those names did pretty well. Okay, there's already news coming out right now about Ethereum ETFs. All right, Snowflake pulling back. WD. Okay, so CrowdStrike still pulling back. We'll wait on that. Let that do what it wants to do. Not Hood or Good. Hood. Hood is not moving just yet.
Dow Jones Industrial Average of 9.29 points after the open. S&P 500 up 1.25. Nasdaq down 22.91.
I think Coinbase is the one to really benefit from this. They're at 260. Come on, man. Come on. I usually do this beforehand, but... Okay, so there's that pullback in the Friday's close. Let's go ahead and look at NVIDIA. I got the 3-minute up right now. Up here. Look for this little level right here if you can't get above 264. Watch 264 on Coinbase. 264. Alright. Let's look at NVIDIA and then Meta. Alright, so there we go. What did we say? Look for that 15-minute chart and look for a bounce into it and a rejection. Let's do it. Let's go. I'm going to look for that pullback. Let's go. Let's go. That pullback on NVIDIA, man. I mean, we tested 120 yesterday, but I got to be honest with you guys. I am conflicted with NVIDIA. I'm really conflicted because I really want to hit that 126, 127 gap fill and this 20-day moving average. You have this solid gap up here, man, and I just think she's really wanting 126. But 125, you have that resistance level and the 20-day. Okay, so look, the 20-day is starting to curl up now. So it feels like today is landing on a weird day. You can tell how it's moving. Let's look for volume, guys. Let's go ahead and look for volume. You did have some stocks trending today, like Roku, Neo, for whatever reason. I don't know why Roku... Look, none of this is saving. Wasting my time with that. Dude, why is this not... What is going on? Coinbase. It feels like the markets are quiet. Dude, what is going on? Apply. And look, another reject. Let's see if you can break above it. 264. I mean, I think you will. I just... Keep your eye on Bitcoin.
Meanwhile, guys, while we're on travel,
So here's a 2 times Ethereum ETF here, guys. I don't know of. Let's go look at ETFs. Vito, FBTC. Do you guys know of any Ethereum ETFs? All right, Apple AAPL. Dude, what is going on with my charts? Why? I don't understand why my shit is not saving here. 3 minutes. Sorry that the mouse is front of. I still got to get that fixed. I got to move my mic. Bro, why is this doing this? All right, CarMax pulling back. It still has some volume though. I want this thing to pull back for a few days. AMC. AMC pulling back. I don't have. Okay, yeah, because that was good for the day. So no, I don't have a limit order out on AMC. Just watching video. Let me pull up. Okay, so NVIDIA has some nice volume, guys. So here we go. Here we go, guys. Let's do it. You're going right up into Friday's high. Right up into Friday's high. 126. Shit, that should have been it right there, guys. Fuck. I didn't catch that. That was a nice entry right there. Look. Damn. I didn't. Oh, man. I was sleeping. I was sleeping on it. That was a nice. That would have been a really nice entry. ATZR is going. Let's go, Amazon or NVIDIA. Look how low the volume is today, everybody. That's a little concerning. Not really concerning. It's just a little crazy to say that, but. Nice move, 487. 487 would be the target on the Qs, by the way. I think we mentioned that yesterday, too. 483 is yesterday's high. got some room to go higher, just a little bit. Let's see. Yeah. Remember, if you need to hear it, be patient. Okay, be patient. Look at that run, guys. There's the gap fill. She just going.
Shares resume trading after a circuit breaker hold off the highs now.
Nice job, NVIDIA. Nice job. Beautifully done. Beautifully done.
Coming back to earnings movers this morning again, GM we mentioned down 4%. Comcast shares now, our parent company, down about 5%. It was a lot of different. We're watching it closely, as we often do, of course. The stock had seemed to be flat to up, but when it finally opened, it has gone down. It's down now 5%. Concern,
Again, we could get a nice little trade here off 125. Nice little support, pivot, retest. Short off of that area into 123 and then get long, take it off, and then get long 123. I still think this thing has a little more room to the upside here. As you guys can see, that's really low in volume.
Down some 3.3% with no news, simply on fears about the parks at Disney. If there's follow through from what we saw.
It's a nice move. It's what we were looking for again. You had this really nice gap fill up here. Support and resistance zone up there at 125. You also have this gap here from 123 to like 126, 127 in your volume profile. So there's not much price action there to keep you like sitting there, right, in one area. It's not a crowded trade where there's a ton of sells and a ton of buys and the stock can't move. It can't get out of its own way. So that was a nice, that's why you're seeing that easy low volume run up to 125, 126. And I still think you still might have a little bit of room on this. Might. Let me do something here. Let me fix my charts. You guys can see that volume already. Like if I go to like a 5-minute chart. All right, so 15-minute chart. Let's see if we can't get ourselves a little pullback here. Keep your eye on the QQQs, or keep your eyes on the NASDAQ.
He's rearranging the portfolio in a really fantastic fashion, and I really like what he's doing. That is a very strong story there.
I was hoping to get 122 as my entry long, but that didn't happen. It's all good.
Looking for 5, although they did raise elements of the guide. Wasn't all bad. Yeah, I mean, I got to do it because I think Mike Chu's done a fantastic job. But then again,
there's issues with some of these soft goods stocks. I don't want to pronounce this one dead though. It's been terrific ever since the announcement.
How about the divergence between Pulte today?
Again, guys, 127.50.
In different directions.
I know. Now I sure
127.50 looks prime.
very good job separating themselves from the pack.
126.
He was set up, frankly, by how
127.50 looks really good. But we'll find out here in just a minute
looks like Horton's a little bit more sui generis, as they say. And
if we're going to get a pullback.
let's go on Horton. That was a great quarter. There was a downgrade of Lennar yesterday, which I thought was kind of
I wonder if it's going to be home sales that
high-end.
try to do us in here.
Did cut to neutral.
Yeah, I thought that was fabulous. You don't go against Stuart Miller, son of Leonard Miller, Lennar. But I do think that that was a straight-up parabolic move. But Doug Yearly is remarkable at toll, and I really think that anyone who knows him is just extraordinary.
Oh, shit. China names. That's what it was. Baba, JD. Bro, what happened to this? The 2650. What happened to these names?
In other words, the ability to charge different customers different prices. The agency wants more information about how AI is used to change pricing,
I don't know what happened to China's names.
customers' behavior, and other characteristics. So the FTC is now demanding the information from 8 companies, all of which advertise their AI and other tech tools with a trove of customers.
All right, Bank of America. Dude, look, it's not saving. That's so weird.
Companies, MasterCard and Chase. You've got Pros, which was just named Microsoft's Internet Service Vendor of the Year this year. Consulting giants McKinsey and Accenture. Task Software, which counts McDonald's and Starbucks as clients. Revionics, which counts Home Depot, Tractor Supply, and grocery chain Hannaford, among many others. Bloomreach, which services Fresh Direct, Total Wine, and Puma. I mean, these are all retail names that our viewers and their families would recognize.
All right, JP Morgan broke down.
Release that firms that harvest Americans' personal data can put people's privacy at risk. And now firms could be exploiting this vast trove of personal information to charge people higher prices. She describes it as a, quote, shadowy ecosystem of pricing middlemen. And the FTC is demanding information about the types of products and services they offer, how the companies collect consumer data, who are their
All right, there it goes. Did anybody get it? Did anybody hop on that? That bounce up into 495, 492 short on Meta?
6B authority, which authorizes it to collect information for steady
Bang, bang.
law enforcement action.
Let's go.
It's important to note none of
Let's go, guys. Do me a big one. Hit that like button. Subscribe if you haven't already done so. Let's have a wonderful day today. Remember, existing home sales and a 2-year and the money, whatchamacallit, is that, well, existing home sales is going to be out at 10 o'clock. So watch out for this. The market will move off of this. We're negative. All right, so GDP is contracting, not expanding. That's going to hit earnings. That when GDP contracts, the market doesn't expand on a contracting GDP. I'm going to just give you guys that. Richmond Fed Manufacturing, 2-year note and money supply at 1 o'clock.
same steak, same meal, different price.
So, cheerio. So here goes Meta. See if this bounce back gets rejected. Again, I would like to get a pullback to 480. I'd like to get a move back to 480 here. Dude, what is going on?
If there's targeted populations, in other words, are rural customers more
Let's see here. Right there. That's a nice area right here. 490.
the surveillance pricing? But you can see how, I mean, MasterCard, though it's important, interesting to note MasterCard, not Visa, but MasterCard, which does a lot of
Man, that volume was turd burglar. That thing was turd, bro. We need some volume here.
I don't get it. How could I agree with good report? Really good report. Maybe I'll be on the show. You do a fantastic job.
Fantastic, thanks. As we go to break, watch bonds today.
Watch 487 too. Well, it's just level right there, 487. Might get a little double top up there. Let's look in at the SPY real quick. So that's bouncing. 5, 5. Okay, so the SPY and the Qs are going. Coinbase rejected. Tesla pulled back. I told you guys, 256. Pull back 250 on Tesla. That's working out pretty well. I feel like I gotta find something here.
shows up about 600% at the high $12.
Video on 23.
Mitra,
I'm forgetting something here.
the company.
And using Workday to put finance and HR on one platform, Tim, you are a rock
Using the social AI doesn't make you a rock star.
So AMC's pulling back. GME. What else do we have? PLTR, Palantir. Palantir's bouncing. Let's look at semiconductors. AMD.
Overstock.com is working hard to deliver the goods on top brands in home goods, clothing, outdoor, collectibles, jewelry, and so much more. When we find great deals, they go from the warehouse.
Coinbase pulling back.
Do you have a life insurance policy you no longer need? Now you can sell your policy, even a term policy, for an immediate cash payment. Call Coventry Direct to learn more.
We thought we had planned carefully for our retirement.
But we quickly realized we needed a way to supplement our income.
Our friend sold their policy to help pay their medical bills.
What sector's strong today? Is the IWM or is...
Policy could help with our retirement.
No, not really.
So I did some research and called Coventry Direct. They explained life insurance is a
Is it the
valuable
Dow?
asset that can be sold.
No, it's not the Dow.
Our policy or
So, weirdly enough, it looks like the SPY is your leader right now.
our policy. Now we can relax and enjoy our retirement as we
Yeah.
had planned.
See, the SPY's above that pre-market pivot high. This is below it. And it's... The IWM is also... Come on. Look, it's also just got above prior day's high. This one's been above it. It's pulling back into it. So, we'll keep an eye on the QQQ for tech. With that being said, Meta... Dude, come on. See, tech is... Qs are weak. It's just a SPY. So it must be like gold and energy. GLD. That's a nice little pullback.
SOAR, Volato,
CCJ,
here now, San Diego.
XOM, CCJ pulling back, XOM. Let's go look. Let's go look. Let's go find out. I think it's healthcare. I'm feeling like it's healthcare now. Nothing really. Damn, everything's pulling back. Okay. So we said for the Qs to watch.
Program with additional differentiated benefits, that is SOAR, Sandy Oscar Alpha Romeo.
We said watch Wednesday's low on the Qs. SPY pulling back. QQQ. And we're above it. We're above it. Looks like semiconductors, I guess, are still the winner. That's a double top on the Qs, but
Good RX, popping to the highs.
be careful. Might be a day where we gotta look for small caps or something. Gotta overcome and adapt. You know, it's why it's good to be a versatile trader. That you don't have, like, you can trade options, you can trade large caps, you can trade small caps, right? You're always, once you can build that depth as a trader, you know, it's important to do that. And I don't think people understand the importance, especially if we go back into like QE and there's not as much volatility. It's going to be hard to make money. And if people out there want to be full-time traders, you know, and that's their sole income, you're going to have to be diverse. You're going to be able to need to trade small caps, large caps, options. You know, you need to practice too if you haven't already, and really think about that, because it's important to be diversified. Let's see here. So we're not really moving. I think we're waiting on this data. We have about 5 minutes left here until we get this data. If you guys see anything with volume, you know, anything, guys, let me know. Or let us know in the chat. Let's work together so we can all, you know, find where we should be in the markets. It's important. Let's go look at Rivian. Oh, shit. Rivian, guys. Rivian. Rivian's pulling back right now. That was so random. Holy shit. That was so, oh, that looked bigger than what it was. Okay, so there is support there at 1650. 1650 support level. That trade's about over with. Damn it. Meta.
Coming up, existing home sales. 3.99 million expected, and the Richmond Manufacturing Index -7.
Spotify has been an earnings beast, guys. It's been a beast.
Yeah, in about 3 minutes now at 10 a.m. Eastern Time.
Dude, that's another pullback. Okay, CrowdStrike. Look at CrowdStrike, guys. I told you. CrowdStrike. There it is. I told you. Watch for it. Let the institutions pay us. Let them pay us. All right, looking for 290 to 300. 290, 300. All right, let's do this, guys. Damn, they're so expensive. Holy shit, they're so pricey. There's no way, man. There's no way. 2,000, 5,000. That's so far out of the money. This is some serious volume. 280. Give me a pullback. Give me a pullback. I might try it. I don't like that it's so far out of the money here. Is that 310, 315? 275, 280.
I mean, to me, I'd like to see the invitation to his funeral, obviously.
Yes. How about tonight, Jim?
Okay, I've got Mattel now. A lot of people feel like Mattel. Did they get approached? Did they not get approached? Why don't we just answer that question and define it tonight? So better, everyone's got to watch this, because if you believe they got a takeover bid, we will get it from Enoch Prize. He's terrific. And then we've got Hanukkah from Logitech, who's Logitech reported a great quarter. People don't realize the Hanukkah favor is no relation whatsoever to David favor. None. Passover favor, Hanukkah favor.
Hanukkah, yeah.
267.50. 267.50.
Mad Money, 6 p.m. Eastern Time. Now down 30, S&P up 9.
I mean, that's just a lot, man. Doesn't it feel like a lot, you guys? It feels like a lot. Like, I feel like I would much rather...
Well, hope isn't a good retirement strategy. You've worked for a comfortable retirement for years. Now you need to plan for retirement income. Learn ways to avoid common mistakes, like being too conservative or not setting retirement goals. Have someone on your side to keep you on track. Call for Fisher's Comfortable Retirement Kit with the help you need to make your retirement
AGIL, Dow Pharma shares popping to the highs.
13 retirement
Following their news this morning, up about 170%. $2.85 now. Alpha Delta India Lima.
There's a plan to keep you on track for a retirement you want. And as a fiduciary, we do better when our
You might even be better off going with next week options, you guys.
1-800-759-4477. If your retirement
I gotta be honest.
$100,000 or more, call us today. You don't have it coming to you unless you plan for it. Call 1-800-759-4477. Carbon emissions monitoring has become a multi-billion-dollar business due to EPA carbon emissions regulations. Now, Spectair, a NASDAQ company based in Massachusetts, stock symbol SPEC, is commercializing AirCore, a patented technology
It's still a low volume pullback. so we're all aware. Still a low volume pullback.
Spectator's system revolutionizes emissions tracking, and that could be worth a fortune.
Richmond Manufacturing Index minus 17.
I got this. Here's a better way to get fast small business.
Hold on, guys. Sorry, I know I'm moving it around.
Consensus was minus 7. Existing home sales 3.89 million. Consensus was 3.99 million, minus 5.4%.
Let's look for this bounce. Look for that bounce. Look for 280. Look for 280. You want to see that volume off of that level, though.
S&P futures moving towards the highs again, 56.20. Following the 10 a.m. data.
Come on. I'm sorry, guys. I didn't mean to yell on the mic.
You can't be too young or too old to start investing. It's an investment in your future, in your children's future, in your retirement.
So there's a pullback there on JP Morgan. Bank of America's going with some with a little nice volume there. But watch out. Watch out. Be careful. It should still have some room. It's not that much volume, but it's still bouncing. I mean, I you know, like I said, $43. I think this has some room. And look, and it's going to extend, of course. Look at Bank of America, guys. It's just extending on like no volume. It's so funny. I forget, what did we pull up? We pulled up like the 4250s. 50 Delta. So, like, look at that thing, man. Unbelievable. I didn't take it. I wasn't watching. I didn't take it. Okay, so I'm still in these AMC puts, guys. I still have a long ways to go before I can get anything going, but okay, here goes Meta. Let's see if we can get ourselves a move here now. See if we can get ourselves a little move. All right, here we go. Here we go. This thing, I just don't know if this thing wants to move. I feel like we don't really have a catalyst to move. Might take a few days, so maybe I'll have to, maybe I could do a swing trade with this. Fucker. Dude, that's crazy. That's insane. There's no way. They want $4 for a 480. You want me to pay for a 475 put for a 478? Like, and I got to get the 475? Are you crazy? $4 for a 4% move? Doesn't sound too bad, but I'm good. I'm good. They want too much for that. They want way too much for that, and any reversal is going to hurt you. Come on, banks. Let's go. Let's see if we can start getting these banks, names like Robinhood, stuff like that. Let's see if we can get these things going with this Ethereum. Let's pull back, see if we get a little double bottom here. What else? We have a big watch list. Come on now. Oh, GitLab. We've been watching that. China names. Okay, so GitLab, guys. GitLab finally breaking back above that 100-day. I should have took the long down there so you guys can see this pullback. Held. We're at the 100-day. Let's see if we can break out through the 200-day on this buyout news. Keep GitLab on your radar. Keep it on your radar. Let's go look at Apple, Microsoft. So Apple's trying to bounce here. I don't know why Apple struggles to just come correct.
4.1 month supply. That's because it's coming off record lows. 6 months is considered
Like the chart is like always screwed up with Apple for some reason.
sitting on the market longer, increasing supply. Average days 22, up from 18 days on the market a year ago. And even that new supply not helping ease prices. $426,900 was the median price of an existing home sold in June.
It's a nice pullback on Microsoft. There's your double top we talked about. You guys see that? And we have a gap fill right above us. Another setup that looks pretty damn good. Look for that move back up into 450, 449.50.
Sarah, good to be on the high end. I guess. So is there any indication that the lack of activity is going to bring prices down at all? You know, we asked
Dude.
and he said, well, maybe he hopes so, but he didn't seem particularly convinced. They're seeing the traffic now up slightly
Dude, everything is like flat. Okay, Sunrun. Sunrun looks like it's trying to do something. Maybe. I don't know. Yo, what is up with these charts? Does anyone see anything with volume? Like, is there anything out there that has volume today? Anything at all?
prices because we're going into a Fed meeting next week, and one of the reasons inflation has remained stickier than expected at this time of the cycle has been shelter price inflation, right, which is a third of CPI and 45% of core CPI.
GE right now has
And he looked at all this is rent. So Diana was just talking
some volume, BHP, DHR, NXPI from their earnings.
all of these market prices in the latest releases, year-over-year changes for rental prices. And as you can see, they're not nearly as high as the CPI shelter, which is at the bottom of that list at 5.2%. Now, part of this has to do
Did they have a shit job on their earnings or what?
prices.
You can see that wedge and it. Oh shit! Look at NXPI, guys.
Tenants are going to pay.
I don't know how these earnings like.
The new rental prices and the existing rental prices that tenants pay. So his bottom line is that there is a significant lag for the CPI shelter index to catch up with some of the market prices on rent, but that it is coming. And we've been saying this for a while as rental prices have trended
So
down.
see here on the daily chart, this double top here. If you break that level right there, look, we're at it right now. You're at it right now with the 100-day.
Making a move or
If you break that, I think you gotta watch for like
November cut. I mean, that's already baked in the case.
239.
Is okay. Are we gonna have a November cut? We're gonna have a December cut. We're gonna have 4 cuts next. Is it gonna be quarterly? Is it gonna be monthly? And I don't think the Fed has any idea, and neither does the market at this point. But a lot of it will rest on how fast that
240.
inflation number can get to 2%.
We're gonna go with that.
Deteriorates from here, and both are sort of question marks at this point.
As you'd expect they would be.
Yeah, it's a
We're gonna go with that, guys. 238, 240. You guys see that on the daily chart? Support, double bottom here. Support, support,
INMD,
bounce,
pharmaceuticals,
gap fill. Test it and reject it. Just for a day. Just hit it, pulled back, and then you ended up breaking it. So 240. 238, 240, guys. Is the level.
we expect from Powell, given how he's framed all this before. We're also getting
correction,
commentary
India November
from
Michael.
corporates. It's earnings season.
238, 240.
Takeaways.
That's crazy. Like, look at that wedge, you guys. You guys see that wedge there? You see how perfect it lines up from the daily chart wedge here? Look at that wedge that I drew. Right? You can see that wedge. It pulls back into the support level, breaks out, comes back in, and then look what it did today on that daily chart, or just on the 3-minute candle. Look at that. It pulled right into that wedge at 268 and rejected it.
On a related note, the macroeconomic environment has been softer for longer than many economists anticipated at the start of the year, and it is unclear.
All right, Starbucks. Once again, the 3-minute chart is fucked up. Why does it keep doing this?
Environment has been much stronger than many economists expected. But if you're in Sherwin-Williams and you're in the housing market and you're very sensitive to
Okay, GE with some relative volume here. GE with relative volume. Nice breakout day. It had earnings today, it looks like.
economy, just pulled out this quote from Jenny expected market conditions, which are tempering demand, particularly in
And look at that setup.
US and European
Holy shit. Look at that nice bull flag wedge to break out.
consumer. The GM CFO actually sounded relatively upbeat.
We've been saying for a long time that our consumer has held up really well, and it's been resilient, and we expect that to continue to be the same way.
GM is on.
Part of that is
Okay, so we're out to new highs there.
about being very disciplined in inventory and the more data flow about producing the vehicles that we know that
Okay, so let's see here
when you combine that
if we can get this run to continue. We'll go back and
So the bottom line, guys, is that
see, because again, it's important to have that volume on your side.
environment, but it's still
So we have MCO, Coinbase starting to get some volume now too.
recessionary,
MUFG,
highly uncertain,
I guess that's a bank.
challenging.
BHP, SAP. There's SAP guys had that news. I think it was like some buyout news or something, or joining or something going on. Sherwin-Williams. So you're seeing some of these industrials. Danaher, I haven't really heard of it. Disney has some nice volume here. I ended up looking at that this morning, oddly enough. Let me see. What happened with Disney this morning? Did anybody see that Disney shares are trading lower? Impossible sympathy with Comcast reported a decline in content experience and revenue. Oh, nears a death cross in Magic Kingdom lost its spark. Let's see. Dude, Magic Kingdom's awesome. Have you guys been to Magic Kingdom? Has anybody here been there? I mean, it's been years since I've been. I haven't been on a vacation in years, but... Okay, so that's a nice pop. This thing's dead money. Disney's just dead, unfortunately. Netflix.
Well, I think that, if I had to call a market direction from here, it's higher. But I think in the near term, there are a lot of reasons to maybe pare back exposure, especially to big cap
Just
stocks.
being patient here.
Think about where you want to really pick your spots. And that's why my conviction in the index level itself is, not as high. We're not as bullish as we were at the beginning of the year because a lot of other bears capitulated. And we've also seen the market move significantly higher, led by, again, very narrow.
That is kind of... Watch this neckline here with the SPY. So if you guys look here, we've been watching this even on the Qs. This little neckline there. But usually you'll have some volume on the breakout, right? That shoulder should usually be... Should have some nice volume with it, but it doesn't.
The VIX generally jumped by about 25% from June or end of June to November of election years.
Alright, I wonder if we're going to pull it back. Are we going to start pulling it back? Keep an eye on the size. Keep an eye on the size here. If we can get another bounce, watch the size on these orders. I think I might just go for it. Let me look at the Qs first.
Exactly. That's exactly right. So the idea here is show me the money, show me the fruition and the monetization of AI. And where we are now is an environment where folks are spending and the hyperscalers are spending, so they're cutting into their free cash flow generation. Whereas last year they were in bunker mode. They weren't spending on CapEx. And then you had this huge surprise of, AI, generative AI, and strength.
So we're above Wednesday's low.
Prices are, we think, baked into the companies, and they're spending more of their free cash flow. So it's a less.
Yesterday I had to sit in it for a little bit. I still kind of like this here. I think we could start to see our downside start to happen soon. Let's see. Monday, Friday, Thursday, Wednesday. So the SPY hasn't even gotten there.
Which is why we like old school CapEx, and we don't think that's getting a lot of attention. The growth isn't necessarily priced in those cohorts.
So right now I'm just looking at scanners and
Pharmaceuticals granted U.S. patent methods for treating vascular leak syndrome and cancer. That's Echo Yankee Papa Tango, EYPT.
That's where we really see the strength in the market.
What is old cap? Old school CapEx.
Old school CapEx.
What is that?
Yeah. Exactly.
so SLRX is halted.
CapEx is basically industrials, materials, even energy, oil, and it's the idea
SLRX is halted right now.
and also to support all of the
Bank of America, guys, great job. Whoever was able to take this, our target was $43. It's a nice move. Really nice move. Great job.
the engineering data is that the U.S. isn't
Great job.
infrastructure. We've spent the last 10 plus years underinvesting in manufacturing and
GitLab. Let's see.
now we just talked about
Feel like it wants to go.
so it's all coming to a head. It's not only just chips, but it's also reshoring and nearshoring. It's
Would like another opportunity down here at the 54, 53.90 level, but if I don't get it, I understand.
in over a decade. So I think that's where we're going to see some stronger names.
I think it needs a little more time.
When you look at industrials, when you look at these traditional old school CapEx plays, they're not necessarily pricing in as much good news as AI and chips and mega cap tech.
Savita, you're always a must read. Always good to follow up with the conversation too. Thanks so much.
Let's check up on NVIDIA.
Great to see you.
NVIDIA's starting to slide back down now. Consolidate. It's a good sign.
Stock is up a little bit. Company beat feeling confident enough to raise the full year outlook both for
It's a good sign here.
and for profits. For the year, Coke now expects organic revenue growth of 9 to 10%. Previously, it was forecasting 8 to 9%. The company also raised its outlook
I have not looked at ARM in a while,
6%.
actually.
Previous guidance of 4 to 5. That
Thanks
was
for
much
bringing that
lower
up.
for the currency impact that they had as well.
Alright. So, we have Ethereum,
Top line,
Bitcoin.
both volume and price, which are both drivers of growth here. He said it was broad-based in a mix of categories and in a mix of geographies. Obviously, I honed in on the pricing story because they are still seeing
The IWM. Oh shit,
gas. Where is inflation right now? He said it's landing. Pricing overall.
dude.
Last year, he said if you take out some of the crazy inflation countries like in Argentina, was about 6%.
The IWM's going again.
3%, which he calls a more normalized rate.
How is there not?
As for how the consumer's doing in the U.S., we talked about the lower income consumers. He said they've been under pressure. He said you see that in some of the trade downs in the grocery store, also in lower traffic away from home, so going out to events. But he said there's nothing new there. That's been the story for the last few quarters. As far as the global view, which Coke always has a good read on, China, he said momentum is tepid in the macro sense coming out of the real estate crisis there.
That's crazy.
Is strong.
Gotta be kidding me, bro. That's bullshit.
Volume growth in India had some weakness in Q1 and also a good quarter in Southeast Asia. And as far as the geographies, I asked him which market he's most bullish on right now for the long term. He said India, no question about it. They apparently have some good local brands there, not just Coke, Diet Coke. And then on away from home,
Alright, so it looks like IWM is
theaters, the concerts,
our leader with volume.
here has been done. The prevailing trend is affordability, and that would be a function of away from home. In other words, finding deals on food and how people spend their money.
Alright, let's see if CrowdStrike can give us another rally here.
Especially in light of what Pepsi reported recently, which was more of a strain
279, 280.
spending. And I think the explanation there is they're in
They
different
want
categories.
$5 for that shit. That's crazy, bro.
Alone in that.
That is seriously crazy that they want that much.
A bit different when it comes to Pepsi.
Because they know what they're doing.
Foothold in some of these growthier markets like Latin America, Southeast Asia. But overall, just another solid one when it comes to Coca-Cola. They've done some new innovations. They're spending a lot on marketing. The Olympics is going to be big for them. Powerade and Body Armor actually have been doing better. Those were some
Heard about
stumbles.
something called Fairlife earlier
Fairlife, the milk.
from Jim, which I was unfamiliar with.
It's very. You're unfamiliar with Fairlife?
Yeah.
Very expensive milk.
Is it?
Yes, but it's done really well. So Coke, this has been a few years in the making, and they've invested a lot. And
distribution system. So pricing in North America was more
Those 300s are moving.
4%, not 11%, but Fairlife.
And CrowdStrike, here it goes.
Why not go with rich life, good life, delicious life?
Here she goes.
David, it's been for a while and it's doing quite well.
Still wonder about the name.
The name?
Let's have a fair life.
I think a lot of people want to have a fair. You don't want to have a fair
Well, I
life.
want there to be fairness. This life is unfair,
Life
as you
is
well
not
know.
fair. Yes, we tell our children that when they complain about when one kid gets the other.
Anyway, I love chocolate milk, so maybe I'll
They
check
do
it
do
out.
chocolate.
300.
So we had to bring
Are they talking about
the rest of the hour. The SEC
breast
finally
milk
approving a long
on CNBC? My guy's like, I love milk.
We're going to talk to the CIO for ETFs at BlackRock about the road ahead next.
Plus the UPS breakdown.
All right, keep an eye on this, guys. It's a nice little bull flag here up above high a day.
And what investors need to know about tonight.
See if we can break this thing out.
And Tesla after the bell. Don't
I still think you have a nice opportunity for that. There it goes. Let's see here. Come on.
Meticulously crafted to stir your imagination.
The volume is pretty low there.
Luxurious three-row dreams.
SLRX, I guess, opened up, guys.
Could be just right. Introducing the all-new three-row infinity.
SLRX must have opened up.
At US Bank, we know how good it feels to reach your milestones, but we also know what really goes into getting you there. That's why we introduced Cobras, which connects you to a real banker in real time to help you do anything.
Excuse me, sorry.
Learning how to save smarter, even
Look at that. 160 already.
with Cobras, we're always there for you on the road to here, because there's nothing as powerful as the power of us.
The moment I met him, I knew he was my soulmate. Soulmate.
Fuck. I'm upset I didn't get that, man. I was trying. It took me a little bit to get in. There's no way I could pay $1.60 for that now. That's a nice trade, guys. I probably could, actually. But
Well, if we got Xfinity, you wouldn't have to mess around with the connection.
3.
Therapy's tough, huh? It's like a lot about me.
A home router should never be a home wrecker.
Alright, guys, so I'm looking at this. It's going to be a high risk, high reward play. You have to manage your positions. I would go out until next week. Next week, 300 calls on CrowdStrike on pullbacks. Watch the volume.
Windows, the cool air is no longer for the birds.
If you know luxury, it's not just award-winning, it's rewarding. Sofa mattresses supports all types of sleepers with durable steel coils and plush organic cotton. Luxury is handcrafted in American factories.
She's just playing. She's wanting to be tricky.
Free in-home
This stuff's lagging.
service, which is why 80% of
IWM's really. IWM right now is also pretty strong. If you guys could give me hit that like button, subscribe if you haven't already done so.
SEC has approved the launch
If you have, thank you.
ETFs beginning to trade this morning.
It helps out the stream a lot, tremendously.
And importantly, of course, finally, we've been waiting many, many months for the Ether ETFs to launch. All of them are launching. Samara Cohen is here, Chief Investment Officers of ETF and Index Investment at BlackRock. You got a lot of skin in this game here. First off, they're all launched. They're all up and going. Are they tracking Ether? That's what people ask about. And do you have any sense that this could be the big hit that Bitcoin ETFs were 7 months ago?
Well, it is early days, but it is a really important day for investors, as you said, Bob. They have been trading first in the pre-market, and now after the open, they've been trading since about 9:30. They are tracking Ether. They are trading with tight premium discounts. They are trading with tight spreads, and importantly, they have broad market maker support. So this is what we've been looking for, really, a successful integration of cryptocurrencies into the TradFi ecosystem, where we have more than 20 market makers who are actively making markets and engaging with these ETFs.
There's been $17 billion in total inflows into ETFs since they started 7 months ago with Bitcoin. Any sense that of the size of what this could attract? I mean, Bitcoin is 1.3 trillion in assets under management. Ethereum maybe 400 billion, so it's a third the size. I'm trying to get a sense of what kind of inflows you're expecting.
Sure, everybody's trying to get a sense, but the important thing to keep in mind is that this is early days. We are 6 months into the trading of Bitcoin ETFs and 15 years into transactions on the Bitcoin blockchain. We are 4 hours into trading of Ether ETFs and 9 years into transactions on the Ethereum blockchain. And Bob, these are totally different use cases. So while Bitcoin is really known for its scarcity, its 21 million finite supply, Ether is a totally different use case. Ether is known for its utility.
How is MSTR one of the biggest holdings in the IWM? It's so funny. I mean, it makes sense.
So for people like us who are, really interested in what the next phase of markets will look like, and is there the possibility to deploy the technology to create innovative use cases?
Regionals are still going.
This is a really important space to watch in Ethereum.
That's a great pitch for Ethereum.
Regionals are still going.
Ethereum enthusiasts say that this is different than Bitcoin. Bitcoin is essentially just a digital currency, but Ethereum uses smart contracts.
I have to use the restroom, but
And uses blockchain in a completely different way. Are people going to understand that? Is this going to attract people who are actually interested in learning about this new technology that's different than Bitcoin?
Bitcoin may be easier for people to understand.
be right back. I have to use the restroom real quick. I'll be right back.
Bitcoin to understand in a very high level pitch. Bitcoin has gotten a lot of attention by people calling it digital gold. It may take more time for people to understand the applications of Ethereum, and that makes sense given the breadth of applications and the breadth of potential use cases. I think, Bob, they are complements to each other, and it's going to be really interesting to see how both play out in the portfolio.
Do you think the election is driving activity and enthusiasm for Bitcoin and other cryptocurrencies? Former President Trump says he's the Bitcoin president. He's speaking at a Bitcoin conference this weekend. Does that move the needle?
I think importantly, what's moved the needle this year, actually, even before this week, in the last couple of weeks, is that there's increasingly bipartisan support, probably based on the interest and adoption we're seeing from investors in digital assets legislation. And how do you create competitive and resilient U.S. markets that allow investors to participate in cryptocurrencies through ETFs?
We got to go, but just very quickly, will this open the floodgates for other crypto ETFs? We now have 2 of them. Is there going to be more?
Bitcoin and Ether, in our view, are really the ones that meet the bar in order to provide the liquidity, market quality, and tracking through an ETF wrapper for investors. So you'll have to have me back at a later date, Bob.
We're definitely going to do that. Thank you very much. Always appreciate it. Tamara Cohen, Chief Investment Officers of ETF and Index Investment over at BlackRock.
Thanks, Bob. More on the results of UPS, which is sending shares plunging right now. Don't go anywhere.
Dude, this will not save. I don't understand. It's not saving at all. And it keeps going back. Like, it's getting old. It's getting old. Settings. Time. Keep time zoomed in. Apply. Okay. Stay there. Stay right fucking there. Please.
I'm here with Ted Coons, the project manager for Renewal by Anderson, to talk about it. Yeah, one of the big things we hear from homeowners is there shouldn't be replacement windows.
Come on, Hood. Let's break out. Let's break out here.
Bathrooms and low-end windows just aren't that good. So even if your windows are only 7 to 10 years old,
This is the level right here that it's got to hold at 2320. Or I'm sorry, 2325. 2325. Let's see.
they don't want just any old window or any old installer. So your standards for installers are pretty high, right? Yeah, Brian, you can have the best window or door in the world.
I know it. Let's do it. Let's see here. Can we get it?
So we don't hire these jack of all trades installers to do gutters and siding on the side. Our window installation teams do our windows year in, year out, and have done thousands of them.
It's just weak, guys. It's just weak. Let's keep it moving. CVNA, Carvana. Carvana with the little rally. The reason I'm looking at some small cap names again is because the IWM is where your strength is at. Okay, so Carvana regained this low, this prior low. Let's see if it's able to push up.
Before July 31st, buy one window, patio door, or entry door
It might reject.
12 months. This offer ends July 31st. For a free appointment with
Might.
Rule by Anderson, call
That might be it.
918-0808.
CNBC. Live ambitiously. September 10th, CNBC joins two-time NBA champion Kevin Durant and Gordon Rowe for Game Plan. Industry leaders explore the intersection of sports, business, and entertainment. Register now at cnbcevents.com/gameplan.
How frustrating.
UPS is the biggest loser on the S&P this morning after fresh numbers there. Frank Collins has been tracking the action, and Frank, it's especially starting
How frustrating.
to what FedEx reported and how their shares have been performing lately.
Yeah, you know, a report that's obviously, you know, upsetting for a lot of investors. You see the sell-off right now, so obviously you can look UPS lower after missing on earnings and lowering its full-year revenue guidance.
Amazon, really nice pop. Really nice pop with volume. Okay.
Executives on this call, however, they said they expect volumes to improve in the second half of the year, and they also expect a strong peak with surcharges for large.
Let's go have a look.
This quarter, again, UPS saw its first volume growth since the pandemic. It was
Let's have a look.
volume growth. Remember, that was 9 quarters ago. However, customers lost over speed of shipping. That weighed on pricing.
I would love to know what happened to these names.
We experienced a shift toward value products, with shippers choosing ground over air and SurePost over ground.
Rivian reversed. Man, Rivian puts in these mean reversals, guys. Rivian's a crazy nut stock to trade. That thing is a nut, bro. Seriously. ARM, Boeing. Alright.
The UPS capitalized on the nearshoring trend. UPS also announcing new details for its stock buyback plan. $500 million in buybacks this calendar year, with plans to buy $1 billion in stock next year and possibly the following year as well.
Come on, let's pull it back in video so we can get ourselves a position going here. Let's see what's the Q's going to do here, because the IWM is going to grind higher. It's going to hold the market up. The IWM keeps grinding higher like this. It's just going to hold everything else up. So be careful trying to short anything, because if the IWM continues with this volume, it's just going to keep going higher and higher and higher. What does GDX look like? GDX is getting a bounce. What are some names here in the small cap world? Oh, that's weird. No.
Okay, team. Oh, thank you so much. I couldn't have done it without you.
Honestly, I don't do a whole lot here. I'm really just here for the AT&T internet. It's super fast.
So any pre-launch concerns?
What if nobody buys them?
That's me.
Or what if everybody buys them?
I hadn't thought of that. That's probably not going to happen.
Can we handle that kind of traffic?
Coinbase is up to 270 now.
Hours of true crime stories just during our last video call. I'm learning a lot.
Biden's the one who's got cocaine in it. Sorry, I'm not even going to do it. Not even going to do it. This commercial. Oh, they got to throw the Palestine in there. Oh, it was The Economist. It wasn't. I guess it was just a. It was something. Never mind. Anyway, ARM. Let's see if we get a. See if we get resistance up here on ARM at 170. See if your ARM rejects at 170. 170 area. And NVIDIA's pulling back. AMD, SMCI. So ARM is really the only one. TSM pulling back. MU pulling back. NXPI pulling back. Okay, so all those semis are pulling back. Damn.
FLYE Flight E Group shares halted at the lows now on a circuit breaker, $3.99.
Yeah, GE, Boeing, this aerospace defense is doing really strong today. Amazon's doing really well. So you're seeing travel and travel doing really well today for whatever reason from UPS.
BBLG, Bowen Biologics.
BBL Drizzy.
BBLG shares up about 75%.
It's fucking hilarious. BBL, my G. Look, 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 look. BBL, my G. Pop. Bone Biologics. Give me that BBL. My BBL is different. Big black Latina. Big black Latina. I don't know what Drake is on, but 200-day moving average up here at up at $3, $2.85 for this previous pivot high at 295. Look for low volume pullbacks, and you are not getting a low volume pullback. Sellers just hopped on that thing and just slaughtered it right there. Be careful. BBL Jersey. I feel like this one you can just look at this chart and tell that it's a promotion. You can just tell it's a promotion. GameStop bouncing. AMC 520 looks like possible resistance level here. It popped up, made it support. You now broke it. Let's see if that becomes resistance. No, I'm just. Hey, LOY has a nice day. Moderna's popping. Myrna's popping off here. Man, if we can really get this thing going. Hold on, guys. Give me 1 second. I just got to do something here. What's everybody looking at? What are you guys watching? Like, do you guys have anything you guys are watching or trading that, you know, has volume, is moving for you?
Logitech CEO tells Reuters company on its way to sustainable growth. Really optimistic on B2B market. Recovery is happening. Search for the CFO progressing. We're expecting news fairly soon. That's Lima Oscar Golf India.
What Mary Barra's been talking about in terms of the kind of robo-taxi kind of revenue they can get in the future. So I think a lot of things in there, but overall it was a good quarter. Their pricing.
Logitech shares right now $90.14 following their earnings report. LOGI.
Logitech had a pretty nice... Oh, never mind. I take that back. Man, the market's fucking flat, man. The market is so flat.
If you look at the automakers, whether it's Ford or GM, etc., listen, they're doing a lot of work on EVs, a lot of work on obviously generating kind of new revenues through.
I want to know why it keeps doing that.
But at the same time, investors.
Why it thinks it's okay to just like send it to the right.
NVO, Novo Nordisk's weight loss drug Wegovy gets UK approval for heart disease. That's November Victor Oscar, NVO. Novo Nordisk shares are getting a small pop here, 133.53 now. Initially moving higher, now pulling back. Shares up 35 cents for November Victor Oscar, NVO.
NVO, Novo Nordisk, NVO.
You know, EVs used to be a little bit of a political football, but in this time it's different with Elon Musk supporting former President Donald Trump. I wonder if you think there is a big difference on either side.
Once again,
the upshot economically and financially for the auto economy and EVs in particular.
Well, Sarah, as you said, you know, I never thought Mike Murphy would see, you know, automobiles become political. You know, but clearly, depending upon, you know, which administration kind of comes into play here, there's going to be some puts and takes in the auto industry.
This is horse shit.
I kind of describe when you look at
this is horse shit.
Candidates or the parties, you know, you look at their policies and it's a bit like a box of chocolate, right? You bite into some you really like, bite into others you don't. But clearly there's some, you know, ramifications around EV incentives, supports for EVs. But overall, the industry over time is going to transition to this propulsion system because, you know, oil is a non-renewable resource, but not at the rate everybody expected. And that's why you're seeing all these changes by the established automakers and the pressures right now that Tesla is facing because, you know, again, going from early adopters to mass adoption is really hard. And we saw in the first half of this year, you know, the growth of pure EVs was about 8% in the U.S. And last year, through the first half, it was about 50%. And also the premium from a EV to an ICE vehicle, an equivalent ICE vehicle, is down significantly. It's only about $1,500 more now on an average EV versus last year it was almost $9,000.
I know, so it's not price at this point, Mark, that's figuring into the decision to stick with an ICE vehicle. What is
Let's watch Apple.
Well, I think it's two things. One, you know, this all comes back to the consumer. There's not enough.
Apple's trying to bounce. Boeing, Nvidia. Nvidia pulling back. Okay, let's watch Nvidia here. Let's keep an eye on Nvidia here. See if it tries to hold this. Alright, so we're at yesterday's... Man, we rejected yesterday's high. See if we can get another run to break through the highs. I think the volume's kind of just out of it today. And it's not really coming back, unfortunately.
Appreciate it. Thank you.
You bet.
Coming up after the break, the CEO of New Balance with his read on the consumer and the company's new deal with the WNBA. Also a quick programming note, Friday does mark the opening ceremony of the Olympics, and CNBC will be there live, bringing you coverage of the games, interviews with athletes, and of course major corporate sponsors. It begins Friday, 6 a.m. Eastern Time. Don't miss it.
Real-time exchange sector story sponsored by Sector Spider ETFs.
So right now, if anybody's curious, you have some healthcare names that are running. You have Boeing, right, that has some volume. GE has some volume. It's a nice grind higher. Really nice grind higher, actually. Xi Jinping's government hopes U.S. firms can play a strong role in China's economy as a top executives visit Beijing. Okay, so I guess there is. Revenues are high single digits from low double digits prior. Adjusted EPS 395 to up 380 to 450 prior. Okay, so this was.
Fisher Investments' disciplined approach will help see you through the market's ups and downs and give you the confidence you need to reach a comfortable retirement. And our fees are structured so we do better when our clients do better. Call now for your free retirement survival kit. 1-800-213-5317. See if your dream retirement is on track. If your retirement portfolio is $500,000 or more, give us a call. Call 1-800-213-5317.
For decades, venture capital has arguably been one of the highest performing investments. But for most investors, it was out of reach until now. With the Fundrise Innovation Fund, you can invest in some of the world's top tech companies, including those leading the AI revolution before they go public. Now it's your turn to get in early and start building a portfolio of industry leaders, disruptors, and pioneers with the Fundrise Innovation Fund. The future is now.
All right, Q's, let's go, baby. Let's pull it back. Let's pull it back, Jack.
Now Bioaffinity, a NASDAQ company, is commercializing CyPath Lung, a groundbreaking, non-invasive early detection lung cancer test, addressing a market projected to reach $4.7 billion by 2030.
Let's pull it back, Jack.
Innovative lung cancer test has the potential to
It's gonna pop.
improve the survival rate of lung cancer patients. Bioaffinity, stock symbol BIAF on the NASDAQ.
Bonjour from Paris. Squawkbox is jetting off to the Olympics. Becky, Andrew, and Joe live from Paris while the U.S. takes on the world. Squawkbox brings you exclusive interviews, highlights from the games, inside stories, all the excitement. Say bonjour. 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 With Squawkbox in Paris. Starts Monday, 6 a.m. Eastern. CNBC. And the Olympics from Paris starts this Friday on NBC and Peacock.
Welcome back to Squawk on the Street. New Balance is now an official partner of the WNBA in a multi-year agreement aiming to elevate women's sports. Joining us to talk more about that, the health of consumer, the business, New Balance President and CEO Joe Preston. It's a CNBC exclusive, Joe. You never do television, so thank you very much for the opportunity.
Well, thank you, Sarah. It's nice to be here.
I wanted to ask about the WNBA deal. How does it work? Because it's not like you're the exclusive partner. A lot of the big companies like Nike and Under Armour are in it as well. So what do you gain from that?
Well, it's similar to deals that we have struck with MLB and NBA. So it's licensing, it's activation, it's an opportunity to bring stories to life for athletes that participate in there. And, our journey began as a push back into basketball in 2019, and then we signed a similar type deal with the NBA just a couple of years ago. And then in 2023, we signed Cameron Brink to an NIL deal, and she was the number 2 pick in the WNBA
This sucks.
draft this year. And, we've been using her in our
Oh shit. Hope everybody's doing okay today. It's just one of those days. It's just one of those days. It's just one of those days.
as an example, and we think that's allowing us to get younger and to appeal to a broader audience.
So what does the growth look like overall, Joe? It's a private company, so we don't have a lot of data on you, but it feels like you're making some real inroads.
so 21 through 23, we've had really strong growth. We essentially doubled our business from 2020, and that growth is continuing into 2024. Circana, which formerly was NPD, is reporting that we have the highest market share gains out of anybody in the industry. So we feel really confident coming into back to school and into the back half of 2024.
What is driving that? Is it the fact that kind of like the wider dad shoes are more popular? Some of those retro styles. What is it?
Well, it's definitely product, and it is our product teams that have been reimagining some of our old classics as well as creating new product. It's the brand activations that we have going on across the world right now, and these gains that I'm talking about have been taking place everywhere around the globe. And it's also about being able to create a strong consumer experience all the way from where they are interacting with your product, where they're buying it, whether it's in one of our stores or one of our partner stores. So that operational excellence is a really important part of it.
When she's talking about dad shoes, she's talking about me. I know that.
So let's go through here and let's look and see what names are. So Meta, Bitcoin, Twitter, GME, Palantir, Uber. Uber, okay. I don't understand that one.
The Olympics this year, and by the way, over 55 of them, I should say, are women. So we have some of the biggest names in sport, from Coco Gauff in tennis to Gabby Thomas and Sydney McLaughlin in track. So we're expecting some exciting things, hopefully some gold medals, hopefully some world records.
All right, AMC breaking down here.
We've been preparing for it for years, trying to make sure that
Another rollover in stocks here after an early bid. Equities losing it. Diane's back with us from New York, senior markets correspondent, and Mr. Dan Grant, senior specialist of retail trading, here with me in the studio. Fading rallies again, Diane. Not the best look, but we had a good day yesterday, so I guess we're kind of evening out.
Yeah, it looks like some evening out, especially when you think about kind of where we go from here. The focus really is getting set up for the beginning of results from Mag 7. We'll hear from a couple of those after the bell today. So it seems like some of the attention is diverting when you think about Alphabet that's reporting after the bell. It's really got to clear the bar, or not just clear the bar, clear it handily to kind of set the stage for the rest of the Mag 7. And of course, we've got Tesla in focus after the bell as well. So it seems like there is some pullback as we await kind of the door opening for those results.
All right. Yeah, that's, I think, pretty much spot on. Tesla down 2% here this morning. Dan, we've got Alphabet coming out. That one's okay, but, I mean, this is a huge quarter for tech because it finally broke a little bit in the last 2 weeks going into earnings.
Yeah, I mean, we're testing the weak hands, right?
Oh, yeah.
The market's exponentially going up this year. People are getting longer and longer and longer. So you have any kind of pullback, and the people that have not so, don't have the strong hands have to get out right away.
How do you define strong hands? Are those the ones with the hardest margin calls? Are they getting calls from Dan Grant?
Cash accounts are not getting the calls. Those are the strong hands. The weak hands are the ones where are carrying the margin debit.
So you guys are going to start hearing the phones ring off the hooks, basically, on your team pretty soon.
If the weak hands continue to get tested, right? And if they don't do anything on rates, right? If they keep rates steady, then we could potentially see some vulnerability going into the election.
Is Tesla still generally the one though where people have built up like highly levered positions and stuff?
Yes. Absolutely.
Right.
I see some very highly levered positions in Tesla.
Yeah.
Like dramatic.
Because that's kind of just the nature of the game with Tesla, right? Isn't that how people approach it? It's a little different than Alphabet.
It was a meme stock for a long time, right?
Sure.
I don't know if I want to include that in there, but it has had quite the turnaround. And my understanding, they don't get that tax benefit anymore.
Right. Well, this is where things get a little nuanced around, the election. Okay, but in the meantime, this is going to be robo-taxis on the talk and maybe some energy credits on the trailing. Cars probably not going to impress too much, but given how people approach Tesla, levered positions, high beta, that's what I'm excited for, Diana. I'm ready for some movement.
I know. I'm certainly ready for some movement there, and it's clear that you have the big you have critics on one side for when it comes to Tesla, and then you have the big supporters on the other hand. So a lot of attention is going to be paid to what their numbers look like, especially when we think about GM and them giving us a clue about what the EV space looks like. EV adoption hasn't been where we expected it to be this year, so Tesla really needs to show us more than just tell us.
Absolutely. This morning, too, I guess we should maybe for a second, Dan, talk about data because existing home sales, one of the worst.
Fed,
yeah.
And Richmond
Fed. And Richmond Fed. Okay, yeah, I keep forgetting, even though I'm from Virginia, I got to stop doing that. That number was weak. And it looked like stocks tried to almost rally on it for a second, but I'm trying to argue good should be good, bad should be bad at this point.
You would think, but if the Fed is still in play, that the Fed could still cut rates.
Yeah,
right?
But not if we don't want that if it's for a bad reason.
Correct. Yeah, I agree with that. But if you're having bad news, that's more of a chance of having a Fed rate cut. That is true. That's the reason behind that. We have a 2-year note auction today.
Yeah.
Right? And we're 30 basis points down from the last auction?
5-year tomorrow. How important are the twos though? Aren't those a little bit more predictable?
They're more predictable as far as what the Fed is going to do.
Right.
It's going to be closer to where the Fed is going to pure Fed.
Purer.
The 5-year note's at the bottom of the curve. Down at 416. You miss on that, that's a problem.
Okay, so tomorrow 5 years got to go smooth.
Yeah.
Okay, and we get a 7 this week too.
That's a 7.
Start to move into the belly of the curve.
Yeah, and I don't think that's going to be any kind of an event. I don't.
There was one a couple. Remember,
I do remember that. I still don't think it's going to be an event.
Okay, the great 7-year auction of I don't know what that was, like 18 months ago. All right, appreciate it, Dan Grant and Dan King Hall. Thank you guys for the closing thoughts there for the morning. Trading 360 with Nicole Petalides is up next. Thanks for tuning in. Nice. There you go.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on next-gen investing. 1 p.m. Eastern, only on the Schwab Network.
Welcome to Trading 360. I'm Nicole Petalides, live on the floor of the New York
ARM just popped off, guys. I don't know what's going on with this. If there was news, something going on with ARM.
Back and forth action we've been having, and we have a lot to look forward to throughout this week. On today's show, we'll provide a mid-year update of the aerospace and defense areas, discussing these stocks and where they are headed, possibly. Our disruptor today, Qualcomm, this after a bullish note from Baird. And our panel standing by to break down the earnings from Lockheed Martin today. Want to take a quick look at the markets right now, because you are seeing that we've had back and forth action already this morning, and it's really evident here. And while there are a lot of story stocks making big, huge moves, you see the major indices not too far off from the unchanged line, with the S&P fractionally higher, the NASDAQ and the Dow fractionally lower. It's only the Russell, which is up 0.75% almost. The gold and oil trade, oil is lower by $1.29, and gold is gaining by nearly $11. 1466 on the VIX, 104.23, and Bitcoin and Ethereum in focus. We continue to focus on that, no doubt. Bitcoin 67,240 today, down 1.6%. For a look at some of the top moving stocks, I'm joined by Jenny Horn, taking a look here at Spotify. Earnings recap. Good morning, Jenny.
Good morning, Nicole. And a nice recap at that is that we're up 12.5% roughly in real time here with Spotify, as they were obviously able to excite the street. And I think that you see a company that's utilizing its basically best-in-class offerings as an app and platform, and really starts to hone in on their profitability. This company has raised its prices now for some of its previous plans and its baseline plans over the last years here in the U.S. and overseas. And I think that it seems like its price hikes are paying off, as overall they posted really strong second quarter earnings, record profit margins after they are charging more for those premium subscriptions. So Spotify has managed to increase its prices despite facing competition in the music streaming world from Apple as well as Alphabet's YouTube. Now, they reported second quarter operating profit of around 289 million. That was above consensus. That did slightly come in about 20% higher than last year. Monthly active users rose 14% to around 626 million in the quarter. That was below the 631 million estimated, but total premium subscribers came in around 246 million, in line. So that was also, I think, the more closely watched metric, because again, you're making more money off those customers, and the fact they're able to retain so many, I think, speaks to, again, their best in breed product, really. They did also say overall, I mean, like, they're really positive into the back half of this year, and management commentary was very much in accordance with their results, and they said they actually were able to shrink their expenses by about 16%. So not only raising prices, continuing to see retention, but they're also able to then make their overhead costs just lower. I mean, that is like pretty much a dream come true for a company, especially in this market environment where everyone is fighting for share of course, that streaming pie.
All right, Jenny Horn, thank you for that. As I noted, this would be an example of there's so many stories on Wall Street with earnings season, even though the major averages are not too far off the unchanged line. Look at this one, up 12.5% today. So it's a busy week ahead. Jenny Horn, markets correspondent, thank you. Let's get some insights to the news shaping the markets. And for that, we welcome in William Lee, Chief Economist at the Milken Institute. Thank you so much for being here. We see a market that is uncertain.
Yeah.
To what do you attribute that?
I think the political scene has really come on to be a little bit more clarified, but that clarification brings along with it some risks. I think one of the things that we should expect from whatever administration gets in is that growth is going to be pretty good. We'll be growing somewhere in that 2% range, but the inflation outlook now has become highly uncertain. If the Republicans get in, we can expect a huge amount of deregulation and a lot of drilling, so a lot of energy costs will be going down. And if the Democrats get in, it's the opposite. We're going to expect some more regulation and less drilling, and energy costs will go up. But I think the trade policy is the most important thing that that markets should keep in mind. Whoever gets in, the trade policy is going to be continuing to bring production back onshore and back home. They're going to be shortening up the supply chains. And I think a lot of the globalization vulnerabilities that we saw during COVID will be reversed by either party. So I think those kind of uncertainties, I think, are things that the markets are having to deal with right now.
And I think that was well said, Billy. Also, how about what the Fed does or does not do? What do you think the Fed should do, and what will they do, right? Another element of uncertainty. I mean, we could go on all day. Tell me a little bit about your thoughts on the Fed.
That creature that's down the street on Pennsylvania Avenue called the Fed is certainly on the market's mind. I think the Fed is in a position to start lowering rates. One of the vulnerabilities in the U.S. economy right now is that high interest rates are holding back a lot of growth. The auto sales are going nowhere because of financing costs. Home sales are going nowhere because people have locked into their high mortgage, the low mortgage rates, and supply's not there, and the new buyers are not getting the mortgage they need at the lower rates. But the Fed is telling us they're ready to move. They have to see a couple of more good data points on inflation, and bang, they're there. And I think one of the things that we'll see from the PCE numbers this Friday is verification of the downward trend that Chair Powell has told us has given him some good vibes about cutting probably in September and at the latest by November.
Yeah, you were in the camp that they should have cut some time ago, right?
I thought they should have cut depending upon where the data points came in. I said to everybody, it takes 3 to 5 data points to get a trend. And the Fed just wasn't confident that it had a downward trend going. And now that we are closer to that 3 to 5 data points that gives them that downward trend, I'm getting more and more convinced that they're ready to cut, especially as the economy starts to slow. Although I should say the market commentators are going nuts about how weak the labor market is. And I want to emphasize to our audience that unless the unemployment rate pops above 4.5%, that's not going to get the Fed all excited. For them, 4 to 4.5% unemployment rate is normal. And that's exactly where we are right now.
Yeah, look, we have a busy week ahead. You mentioned the PCE on Friday. We'll have consumer sentiment, GDP, new home sales. We have a lot to digest ahead of the Fed's meeting. Any of these stand out to you? Durable goods. What are you expecting and watching for in particular?
Durable goods. That to me has been always a good indicator for where investment spending is going. When the GDP numbers come out, everyone should focus like a hawk on the line that says business fixed investment on research development and software. Those are the components of investment that have always led to higher corporate profits. So regardless of where the Fed goes, even if they delay their rate cuts, if the markets see that businesses continue to spend, especially on the AI and research and development and new tech type stuff, that will lead to higher corporate profits regardless of where interest rates are. So I would focus on those elements. Is durable good spending still there? And more importantly, are the GDP numbers showing that companies still want to invest?
Yeah. I was listening to Vice President Kamala Harris last night, and she was talking about higher wages for everybody and more affordable health care for everyone and child care for everyone and so on and so forth. And I began to wonder, it sounded like a utopia. I just don't know how we pay for that. How do we pay for all of that?
Exactly the point, Nicole. In fact, the one place where the markets have not focused enough worry about government is how do we pay for all the goodies that government is promising? Both parties. We at Milken are nonpartisan, and we both are sounding the alarm about how high the debt burden is growing. The CBO is telling us that right now the debt per GDP is somewhere in the 90% level. It's going to be over 110% by the time 2030 rolls around. By the time 2035 rolls around, it's going to be knocking on 120%. Those are the kind of numbers that freak markets out. And people are going to continue to ask the question: will U.S. dollar remain dominant? Will countries continue to absorb the kind of excess spending that we're on our trajectory now? As Chair Powell says, 94% of GDP is manageable, no problem. But as we start to push into the 110, 120% of GDP levels of debt, especially as interest rates normalize at a slightly higher level, because our higher productivity would warrant a higher real interest rate, those are the things that should worry markets, and the markets have not begun to even think about that yet.
Yeah. Quickly, just would you tell folks to invest in the market currently? Do you feel confident enough in the economy, I guess, and outlook?
I don't need to tell people. Global investors are coming in droves, and that kind of capital is what we need to keep interest rates low. As long as the U.S. remains the best place in the world to invest because our technology is and innovations are better than anywhere else, that's going to assure that the U.S. will continue going. Our big competitor out there, though, is China. They are on a track of trying to spend like crazy on exactly the same high-tech and AI products. So we need to watch out what's going on there.
Billy, great to see you. Thank you so much from the Milken Institute. Always love when you're on the show. Thank you. Plenty more to come here on Trading 360. Up next is the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein goes through the technicals. Joe Tagay of Rational Equity Armor Fund will take us through the trades for Taiwan Semi, Microsoft, and Palo Alto. Next, here on Trading 360, Schwab Network. The Dow is up 19 points. We'll be right back.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing,
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides. Time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Joe Tagay of the Rational Equity Armor Fund. Thank you both for being here on this Tuesday. We have been bombarded with so much information. I mean, the usual of economic news and the Fed, but we have the Washington news and, waiting on more, right? So, Joe, how are you feeling about the market, which last week had the worst week? Yesterday had the best day since whatever, you get my point. Today we've had back and forth action. Some of your thoughts today.
Yeah, and I don't think Ben's going to disagree with this one. There's a lot of news out there. Some of it can make us really feel very emotional. We need to just tune that out focus in on the charts. That's going to tell us everything we need to know. And, you know, we've seen some rotations. We've seen a couple things that might be causing us a little bit of concern. But as long as these stocks keep on going up, as long as the trends continue, everything will be just fine. When that does change, we're going to see it in the charts. So it's hard to do. I know the news can be very emotional, but if we can keep that on the back burner and just focus in on the charts, that's going to be everything we need to know.
Right, understood. Let's take a look at Taiwan Semi. One of the names that, when we look at the semis, seems to have been a little bit better of late. We know the group has been all over the place, the likes of NVIDIA back down below 120. The group's been volatile. Some of your thoughts on Taiwan Semi and where it's headed. Today, we see it up about 0.75%.
Yeah, today, you know, maybe not doing as well. So more of that rotation trade happening on. Again, we had that big rotation out of the mega cap, out of some of the biggest winners that we've seen so far this year, into some small caps, into some value names, and we started to see Taiwan Semi get hit by that. We also saw, you know, to avoid the news, we also saw them get hit on some political news, but it found some support, and that's what's crucial for me. Yes, it came down significantly from a higher level, but it found some support, I think, crucially at the 50-day moving average, and I think this is just a fantastic stock. It's a stock that makes so many chips for so many companies, and they're also making, they will be making a lot more in America soon with the $6.5 billion from the CHIPS Act given to them. So I think this could be a buying opportunity. Again, very cautious. I like that it's above the 50-day moving average. As long as it stays above the 50-day moving average, I think it will be a green light for me. So this is a spot where I'm nibbling and looking to add more to my portfolio.
Yeah, so watching that 50-day moving average very closely as well. Ben will take us through the charts, please.
Yeah, I like the cautious optimism. The first chart we're going to look at here is not a pretty picture. We have seen some weakness, but this is more on the short term. And as Joe mentioned here, possibly just stacking up for a longer-term buy opportunity, and that's where we're going to kind of give the benefit of the doubt to the bulls, is that longer-term chart, as Joe was mentioning, taking a step back and kind of letting the chart tell the tale here. We will do just that. But again, leaning on the bigger picture. The 5-minute candle chart is where we're going to begin, though, and some of that short-term weakness down to 162 to begin the week. We're trying to form a little bit of a bottom down here, so just wanted to establish a couple key areas to keep an eye on should we do that. You've got, well, the upper extreme of this range, we'll call it 178, 179, 187, the next kind of line in the sand to really start to see some momentum to the upside. But I wanted to step away from the 5-minute candle chart and just look at
I ended up
a nice trend up off the end of April lows.
Sorry, I didn't see that, Tariq.
25, 130 level all the way up to 193. Now, again, I'm just sort of focusing on this as kind of one larger area consolidation. There is a little bit of weakness playing out here because we did try to auction higher.
Hold on 1 second.
Form this balance after topping out around 194, and we have rolled over, so taking out a key area.
Hold on, my stuff. Like, I don't know why my charts are not saving today. If you guys notice, the top right, I have went and saved it over and over and over. I'm wondering now if we can go back and try to grab this long into like 126 on NVIDIA. It's got some volume today. It doesn't have like great volume, but it's nice and consistent. I think there could be a nice little small trade there, and I may just go ahead and take it if I can get this. So look, look, it's going to go without me. Let's see here. Here's a daily chart. So again, I want to see if we can. I wouldn't mind trying to take this up to 127. Like trying to get this gap fill here at 126.30. So that's our gap fill right. Let me see here. Shit. I keep messing this thing up. Okay, there it is, right. I guess there's a fire or something. So they have the road closed. They're doing a median, so these fire trucks got to go around. Dude, he was flying. And there's like a sharp-ass bend there where I'm at. So they're working on like the road up kind of by where I'm at. Like the intersection to the highway. and they're putting a median and stuff. So I guess these fire trucks and everybody has to go around. So I don't know if you guys heard the fire truck or not, but he was ripping down the road. Let's see here. So the gap fill on NVIDIA is up there at 126.25. I would like to see if we could get there. I would like to see if we can get this gap fill up at 126.25. And we kind of already have it though. Here it goes. You said Sunrun, right? You said Sunrun or Sun Power. I don't remember. SPWR. That's right. I didn't know what the ticker was. Oh, nice. Dude, this thing is already a small cap? Like it's... Holy shit. I didn't know that this thing got tore up like that. And why did the overall markets just bounce out of nowhere like that? Yeah, there's something going on. There's more coming down the road. Either that or they're lost. I mean, look at this thing. That's crazy. Sun Power was really doing something for itself, and that's crazy. And it's that low. Thursday. Dude, the queues, guys. Look at the queues. They're screaming. They're screaming to the upside. That's insane.
What about Meta? What do you see as the key debate here for investors?
Well, last quarter, the company introduced this concept that they were
holy shit.
cycle, not only around the metaverse, but also around AI, and that there could be potential disruption in their business model as a result of that investment.
Let me see here.
That was met with a fairly negative short-term reaction. The shares have recovered since that reaction.
Let me see here. So it looks like the SPY has some room to 557. 557, 550. Okay, so we're already up above 556. Let's just keep it moving. 557, 558. I don't know. All right, I guess. Like, look at that double bottom on Meta.
That's likely going to be a dynamic that continues to be something investors focus on. If you think about it, you know, teenage users today are users that can be on these platforms for decades to come. If you were to act in a manner on the regulatory front that would create headwinds to those new users, new subscribers, that would be something.
Bank of America couldn't hang on. So I don't know if there was any news. I don't think there was. I mean, Amazon was really strong. And then did Apple get going? Microsoft. So Apple did start to get going. Microsoft, same thing. That's absolutely crazy. It really is. That's crazy. GitLab should have room to 5750. Just wanted to check that real quick.
likely using both in a lot of different ways and for different workloads.
Damn, that fucking 2 hours is tough. I'm not giving up on the day here for a move. We saw it yesterday. We were able to catch moves all day long. So
The most interesting dynamic is the rate of change on these models is actually not getting dramatically better. So if you look at benchmarking scores across some of these models, they're being trained on a lot of the same data. They're being trained at scale. So the likelihood that you're going to see big leapfrog improvements in models today versus 1 quarter ago or 2 quarters ago is starting to diminish a little bit. The next chapter for AI is really about how are these models utilized day to day in consumer computing and enterprise computing, and what causes the rise in use cases as opposed to the
all right, watch this previous high here, guys.
The usefulness of these smaller language models, which some argue that's where the magic is a little bit more targeted.
All right, so there's that. Let's see, go to 30. Yes, Chinese names did drop like crazy. I don't understand why. I was watching JD and Baba, like I was looking for JD to pull back and it never did. And then this morning it gaps below where I wanted to get in for an entry long. And we came in today with the gap below it. I'm like, whoa, what? So they just mentioned that on CNBC. And I noticed that too today. It could be like a shake, like where they're trying to shake people out. And then they just rip it. You know what I mean? They come in, they're down on their positions. They sell it. And then they just run the market up. And they're like, damn. I sold the bottom. Like, you know what I mean? Market makes a fool of them. 484. Let's see here. 484. 5 minute. All right, so I guess we're going to look for a test of this 20-day moving average up there at 488. This little double top. I can't believe that reversal. Does anybody have any idea what that reversal was all about? Does anybody have any idea? Like, and I'm still waiting to see if we can get a move back down here to this gap fill. So I am personally a little bit hesitant here to get, I just don't want to get caught getting too comfortable. Like, look at that. Like, that level right there that I just pulled up. Looks like that was a fail to get up. Yeah, exactly. There you go. Good job, bro. Good job, Mel. I said bro, and then I said Mel. Similar to think I got your name wrong. Let's see here. I don't, like, did you guys see anything or... like anything at all or hear anything on why technology just ripped and soared like it did? I know we had Apple and Microsoft and stuff like hanging on up at highs and they don't necessarily have earnings. I wonder if they're just pricing in a possible good earnings release in case it comes in good and then it's like the market doesn't go higher and they're like, oh, Google and Tesla did good. Why isn't the market going higher? Because it already did and we're already at highs. So I don't know. I didn't hear anything specifically on why. I mean, like, look at this. And we did that yesterday too. We did that same type of move yesterday. And I told you yesterday that type of move speaks volumes. So here you go. Watch this level here at 227. Can we get up there? 230, 231. Let's see. It's a nice break, retest. You have to watch this level here. Watch yesterday's high on Apple. Keep that 228 on watch. because it's going to be hard to break 228 or to get to 230 if you know you don't have the volume to break 238. You got to get above 238. I think you can do it. I think Apple could do it, especially if it starts going. It's a nice increase in volume on the way up there. And oh, you are out? Nice job, man. Yeah, that wasn't... I thought about it. Mo. I thought about taking Apple because this was a nice pullback into that 20-day and hold. And I'm like, man, Apple should at least, like, run up here to test. Again, I just thought there could be, like, some money to be made, but I just didn't take it. I didn't think, you know, the markets weren't really moving. So, it's just being patient. I'm still curious, man. Let's see if we can get up there. Like you say, 230, 230, 50. Alright, so I want to see here. I wonder if this is it. I wonder if we're getting ready to pull back again. Let's see if we pull it back. Oh, we already are. Alright, I'm going to try for some QQQ. Dude, I'm not going to be able to get it. It's taking me too long. Dude, if this thing sells off. It's not trying to sell off. Wow. What I was saying was, let's see if we could get a move back to VWAP. 483. What time is it? It's 11:30. Dude, it's so late. It's already 11:30. Bro, this could be a huge move. Like, if we reject here and you start to see us, like, sell off for like, no reason, that could be a big move back down to 475. Again, I don't have any trades on. I haven't... Well, I'm still in AMC, by the way. So, AMC, you guys will know, I got into that yesterday, but I'm still up. Even with that trade, I'm still up. So that thing could go sideways on me and it really wouldn't matter. Look, it looks like they're trying to suck people in on this trade. Like, you see how yesterday we sold off and then just boom. We sold off, boom. Same type of price action. 11 o'clock. 10:50, 10:54.
Teams up with both NVIDIA and the U.S. Army. We're going to talk about all of that when Money Movers comes right back.
Crypto Watch is sponsored by Grace.
Yo, they want $1? That's crazy. What's today? The 23rd.
Crypto investing begins with Grayscale.
I'm Brian Gary. Today we're talking about the biggest misconception there is about replacement windows. I'm here with Ted Coons, the project manager for Renewal by Anderson, to talk about it. Yeah, one of the big things we hear from homeowners.
Again, sometimes we just have to be patient and realize, you know, we got to trade when we're told to trade and not just randomly.
So even if the windows are only 7 to 10 years old, they may still need to be replaced. Ted, there's so many window companies out there. What's different about your
ARM is just a beast. ARM is seriously a monster, guys. This thing is a beast.
particular about their home? They don't want just any old window or any old installer. So your standards for installers are pretty high, right? Yeah, Brian,
Like, look, another example of the chart not saving. It's all the way to the left. Why is it doing that? Chart scale, let's see. Chart scale, all the view studies for markers. View study for markers.
With us, there's no finger pointing or blaming each other. We're both the installer and the manufacturer.
Sid, is it easy for a homeowner to get a price?
Very easy. We'll come out to your house, we'll assess your current patio door or windows, and then we'll give you an exact price that's good for an entire year.
Sid, that's great information. Thank you.
Before July 31st, buy one window, patio door, or entry door, and get the next one 40% off. That's 40% off with a minimum purchase of 4.
Okay, so what we have here is this VWAP from Thursday and Friday that we are, or I thought we were, turning it into resistance. Not that that's a key area, I just watching this. I'm watching to see here. Watch AMD if you start holding 156 or 157. If you can get a bounce off 157, you could see this thing make a move into 160 by the end of the day. I could be wrong there. Let's see. Meta had some news. Look, once again. I don't understand why it's doing this. I don't understand it. I really don't. We'll go 2 days.
I've done the diets, all the diets. Before Golo, I was barely eating, but the weight wasn't going anywhere. The secret to losing weight and keeping it off is managing insulin and glucose.
Oh no. Oh shit. That's what I did wrong. Fuck. Sorry for my language. Show marking line, show roller line studies, options, corporate actions, bars to the right.
About 2 hours into trading, we're climbing again. Let's go post to post with Bob Pisani for a look at what's moving. Hi, Bob.
Well, the important thing is about even on the advanced decline line. If you look at tech stocks, which are leading, the big cap techs are doing okay, but split elsewhere. So Salesforce up again today, and remember what happened? They've been a pretty bumpy ride. They had a rather poorly received earnings report. That was at the end of May. They're still climbing out of that. This is the highest it's been, I think, since that report back then. But elsewhere, for example, semiconductors are down. I suspect that this is because of the NXP report. Remember this Dutch semiconductor company? They have some rather poor guidance and poor results out of there. So some of the big names, ST Micro, I don't know if we have it up here. ST Micro is trading down right now. Some of the other big names, Texas Instruments,
So energy is your worst. Energy is the worst performer on the day. Industrials, DHR. So it's kind of like you have some of these banks also making a rebound. Software infrastructure is doing really well today. Boeing, GE. Spotify's up 12%. CrowdStrike bounced again. Shit. Did anybody take CrowdStrike today? It's still bouncing.
It's a little strange here. So the long term is Bitcoin ETFs definitely track Bitcoin. I expect the same to happen with the Ether ETFs. Carl, back to you.
Good stuff with BlackRock earlier this morning, Bob. Thanks. Bob Pisani. Still ahead, Tesla, of course, tonight after the
Football's around the corner, so keep your eyes out for DraftKings. Keep your eye out on DraftKings. This thing might start to may start to try to do something here down at the bottom end of this range.
If you're shopping for a home, Realtor.com's Real Commute tool lets you find homes close to work, school, even grandma's house.
Don't all apps do that?
Not really. Trust the #1 app real estate professionals trust.
I'm Marcus Lemonis. Our team at Overstock.com is working hard to deliver the goods on top brands, home goods, clothing, outdoor, collectibles, jewelry, and so much more. And we find great deals to go.
I'm just trying to see here on DraftKings. So, oh, sorry about that. Isn't no sell-off on Apple really good right now? Just consolidating, holding. Yeah, yep, that's what we said this morning. Sorry, I didn't see your question there. I was looking here on DraftKings to see if I could find a level. But yeah, Apple, yeah, for sure. You know, and you just have to watch out for like you know, some of the other earnings. They don't have earnings, I think, until next week. You know, these pops, take your profit and look for the fades. It looks like you're you know, going up to test 227 again, 228, 227.50. I'm just wondering when they're going to say, all right, like, you know, obviously it's like it's got to break above or break below one of these levels. I'd like to see like another test of like 230, 231, or I'm sorry, 230, 250, and just like get up into that gap. You know, it's ultimately what I'd like to see here out of Apple. But for now, watch out at 227.50. But that is a good sign. But you know, I wouldn't put too much into it because it's like the market itself is feeling kind of heavy. I don't know of any type of news that Apple has, and Apple's getting ready to report. You know, we've recovered a lot already. You know, so I think this is about where it belongs, is what I'm getting at. So I'll move back to 230, 235. Pull it back, you know what I mean? It kind of just play the range. Try to start putting in a range here until they report earnings. Would be nice. So what was I doing? What was I doing here? CVNA, PLTR. Like, look at this. Once again, guys, like, I don't know what's going on with my charts, that this thing keeps like pinning my chart all the way to the left like this. I'm like, usually like when I save it, it'll save, right? So if I do 2 days right there, it'll save it just like this, and every time I come back, it should stay just like that. Apply. Okay. Like the 15 minutes doing it, 1 minute is doing it. It's just the 3 minutes going crazy. Give me 1 second. I'm going to use the restroom real quick. Grabbing me a bottle of water.
Right, understood. All right. So how would you go about an example trade, George?
Yeah, so if you look at the chart, obviously it's pulling back, and I'm still a little bit cautious on the market in the near term as this correction may manifest lower. I think if you look at the chart on a 3-year weekly basis for Qualcomm, interesting enough, going back to late 2021, there's an area of support, which was resistance back then around 185, and that also coincidentally corresponds to the 20-week moving average. So this may be an area of line in the sand, if you will, support. So what I'm going to do is I'm going to go out to the August monthly contracts, and I'm going to sell a cash secured put at that level at the 185, and you can actually earn about $6 a share or $600 in credit. So the other thing about that 185 strike is it's about a 32 delta, which implies a 68% probability that by expiration in the next 24 days or so, that the stock will stay above 185. And that's where you want it to be, because you retain that $6 credit. But if you do place this trade, you have to be willing and able to take ownership at a break even of $179, which is, about $15 lower, or about 8%. And that'll give you some flexibility just in case there's a little bit of a pullback in the stock on earnings. I'm going to use NXPI as an example. We talked about that one, and it has pulled back based upon some challenging inventory issues, but they're exposed to the automotive space, where Qualcomm is more exposed to the mobile chip space.
Yeah, understood. All right. Good to see you, George Sillis, with our Disruptor every day. Thank you. A good look there at Qualcomm, and that price target raised to 250. All right, coming up next, we'll take a close look at Lockheed Martin in particular. But what do we need to know about the group? We have Nicholas Owens from Morningstar and Chris McMahon with us. They'll give me some insight. We'll be right back.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope, Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Young lady who was mid-30s, a couple of kids, recently.
There is a report on LVMH, guys.
She came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Welcome back to Trading 360. We continue our focus in our 360 round on Lockheed Martin and some of those aerospace and defense names. Joining me right now, Chris McMahon, Okeanis Wealth here. I know that you have a price target here of 557. You like the dividend. You do think Lockheed Martin is a good play. Why?
Well, I think they're uniquely positioned just in the aerospace and the defense industry, but more importantly, we believe there's going to be some culling of the herd in the broad markets over the next 12 to 24 months. You know, even on a kind of a rocket ship in terms of the indexes, and I think Lockheed Martin has been uniquely positioned also in down markets. In 2020, did well when the rest of the market did. In 08 and 09, I think it was up 5% when the rest of the world fell off a cliff. So I think Lockheed Martin, not only is it kind of having some unique proprietary technology. The helicopter division is coming out with these kind of, you know, it looks like a futuristic movie when you watch their promotional stuff. So there's some real products that are coming online. They're going to be transformational, but uniquely, I think, positioned, particularly as we head into a cycle of negative market returns. I think that Lockheed Martin, its dividend, and also the fact that it's securing some significant government contracts is going to allow it to perform well, even in this what'll be you know, a more bumpy next 24 months, we think.
Yeah, understood. So you do think that Lockheed Martin brings something unique to the market. You also think that overall spending, I'm not sure which administration you're referring to because we're getting close to the election. Do you think that will also be helpful?
I do. The good news is it is, we're not sure which administration it'll be, right? But I think either one, the good news for Lockheed Martin, either one's going to spend some money. Certainly the Trump administration has made tremendous promises about spending, and they did that historically last time. They spent more money in certain government sectors than others did in defense, beefing up our defense. But even if the you know, the current administration continues, or the Harris administration continues, there is just some there's necessary spending that's coming online that we think is going to help. Obviously, our price outlook includes the idea that the Trump administration takes over and, you know, Katie bar the door in terms of spending on defense. But either way, we think they're going to be a solid company now, and that dividend's almost 3%, Nicole, which is
Coinbase is breaking down.
Yeah, there was a lot of excitement not only about the better than expected profits, but also about the F-35 jet progress. When you think about the group and some of the other names,
look at Coinbase.
You mentioned that Lockheed Martin is unique. Do some of the others stand out in the same way?
It's a good question. I think we like Lockheed a little bit better, and I think when we think about that, particularly some of that stuff, that Radar X helicopter they're coming out with, and a few other things, we think that they're probably the one we're recommending to our clients. We're the one we feel closest to them, and we feel that the differentiator is the dividend probably. So Lockheed's the one we're going to probably give our 5-star, you know, our 5-star to for sure.
Yeah, and I was going to ask you about the dividend, and that's something that makes it at least an attractive player in the group. Boeing has been plagued by many problems.
I'm trying to.
Where does Boeing fit into?
I'm trying to. I'll just let you guys know if I trade something. I don't know if there's anybody here. Yeah, there's nobody here. Fuck. All right. Let's do it. I'm trying, guys. It's tough to really take something. You know, I'm thinking about NVIDIA down here to 122. I'm just looking at the volume, and I'm like, yeah, that's probably a dumb idea. Just wait for the pullback and go long. Like, that's really where you're, you know what I'm saying? If you really look at this, where's the moves happening? It's to the upside. You've had one decent move to the downside yesterday. You had one. And, like, this move here was interrupted by that. You know what I mean? So it's like you come down, you come right back up, down, up. You don't want that. You want continuation and no sorts of, like, look at this rally from yesterday. You didn't take back some of that move, right? You didn't, like, rally, pull back. So those options just stayed going up, and you didn't really have to, like, sell them. So that's kind of what I was looking at there. Was like, you know, is it even worth it trying to get a short? You know? So these are like some of the things that I think about when I'm trading. That, you know, that's what I'm thinking about. I'm really analyzing the chart, and it's like, you know, really kind of just like being a part of it and like seeing what, like really feeling what's going on underneath, and you know, is it worth it? You know, at the end of the day, is it worth it? I had a nice day yesterday. I'm green on the week. We still have GDP numbers. We still, guys, at 1 o'clock, we still have a 2-year, we still have a 2-year bond auction that could give us some volatility. So it's not over. The day is not over at all. And look, Qs are starting to pull back now.
FLYE halted on a circuit breaker.
There's a lot of small caps that are getting halted and flying around this morning. They're not really consistently to the upside or downside, but let's go. Apple. So Apple's still really nice. CRWD, CrowdStrike. So CrowdStrike worked out for the long, pullback longs. ARM. What's ARM doing? What else? What else was on the list? DJT bounces to 36. Didn't get that. AMC. AMC, if I can get 50 cents, man, if we can break yesterday's low, these contracts should start to go up a little bit, but I doubt they will because AMC, I'm sure, will bounce. GameStop. Look at, so GE, RBLX, Boeing. Damn, guys, look at Boeing, man. This thing had a hell of a day. Delta Airlines. They're still, I think Delta is still, as of right now as we speak, they may have already fixed it, but this morning, they were still, having like backups and cancellations. Not necessarily cancellations, but delays. Bank of America, it's got some nice volume. You know, it's not a lot, but it's enough to, it's on the side that we want it. So that's bounce consolidated. Let me go grab a water and a Red Bull real quick. QQQ. Look, here goes the Qs on low volume. Fuck. There it goes. Damn it, I'm an idiot. Alright, I'll be right back, guys. We'll see what this turns into, if it turns into something. What I'll probably do is potentially look for the reversal on the Qs, guys. So let the Qs sell off, and I'm going to look for a reversal long. I'm going to look for a long on the Qs. 482.50. 482.50. But where the fudge would I take that? Left shoulder, head, right shoulder. Damn, we might have a good ways down. Just like yesterday, we didn't do it. All right, guys, give me 2 seconds. I'll be right back.
coming out later on as well is another Mag 7 name, one that maybe some argue shouldn't be there, but is still there, and that's Tesla. You can see coming up there as well. This is a name that's been polarizing, but the volatility has yielded opportunities for people to get into this stock. We don't maybe expect the same kind of movement with Alphabet or Microsoft, but is Tesla a name, Josh, and I'll look to you for this one, is Tesla a name that becomes attractive at some point with any kind of hypothetical downside volatility, or is this one that people should
Tesla
still wait and see, sit on the sidelines for?
Is always
This
a
one's
one.
not for me. I would
He's an
say
idiot.
that I think demand will be good.
Come on, Josh Brown, listen. If you guys had the opportunity to buy Ford in the early stages, would you guys do it? And hold it for the 20, 30, 40, 50 year? Yeah, you would. You'd be a millionaire, a bajillionaire if you had the opportunity to do that. So yes, you should be buying Tesla. Absolutely. Tesla's more of an innovative company than Ford is.
We're probably in a space where the company's going to pivot and talk about humanoid robots if they, if it's not a great number. So I don't think that the Tesla shareholder is as overly focused on last quarter's deliveries. So yeah, you might disappoint analysts, but still get a decent response out of the stock. This is just not an area that I have historically been involved with, and I don't see anything going on with Tesla that would make me want to jump into the stock right this minute.
Does anybody feel as though there is a compelling reason to want to take a significant or notable view on the future of EVs and use Tesla as the way to do it? The global EV trade has taken a beating over the course of the last several months. It had such promise a year or two ago, and now folks out there maybe don't even want to touch it. So what gives?
Yeah, they're pulling back, actually.
Right.
They're not, they're all of them, even the traditional OEs, right? So, I mean, the problem is it's the margin story. You might get the demand, and there'll be puts and takes. Some will be winners, some will be not, maybe losers or whatever, or laggards. But it's the margins that are the problem. That's the thing that actually holds me back from Tesla, because I like to buy when margins are troughing, and you have a view of higher margins ahead. And then you have the top line. That gives you massive operating leverage. You actually have the reverse with this one. And in addition, you also have the valuation is really hard to get around.
Right, and so I think it's interesting because it's like, do you want to bet on EVs through Tesla as a company? Yes. Do you want to pay 60 times earnings for Tesla's shares now? No. And so when you ask the question, Dom, I had this like internal, challenge where I'm like, yeah, I'd like to bet on Tesla as a company. Absolutely not at this share price. And that's where I think we bump into ourselves a lot in this business is the conflict of the story and the business itself versus the valuation. And there's no, we're going to talk about UPS later, not to jump the gun, but like part of the problem with UPS is that their margins are like 10%. Well, guess who else's margins are like 10%? Tesla's.
Yeah.
Right? Do you pay 60 times earnings?
Those margins have been going down
right.
hard at Tesla. That's the problem.
So that's the challenge. Like, yeah, I'd like to bet on that company as a long-term winner. No, I'm not buying the shares.
There are other parts of mega cap technology and related parts of the market that maybe aren't as polarizing as Tesla is to certain shareholders. I will mention that there are a handful of analyst calls out today hitting names like Microsoft, because you've got the target being raised at Microsoft at Piper Sandler to 485 from 465. They're saying that capital expenditures are to support doubling of Microsoft cloud revenue to over $200 billion. Amazon's target price is being raised to 240 from 220 over at Morgan Stanley. They say it's the top mega cap pick, all about AWS growth and the slope of North America's profit ramp. And then you have Apple and Tony Sacconaghi over at Bernstein. Outperform, reiterated, $240 price target. Recent enthusiasm is likely to persist in the near term as Apple is increasingly seen as an AI leader rather than a laggard, and the stock is also in its seasonally strong trading period. That's so funny because nobody had talked about Apple as an AI leader
right, you hear
over the course of the last year. But, Tony Sacconaghi is saying this. That's a broad range of mega cap names. Kevin, out of all of those, this is a would you rather game. Where would you want to be?
Well, the narrative with Apple changes on a dime, to your point, but the growth at Microsoft far exceeds the growth at Apple. The growth at Microsoft is 13, almost 14%. Apple's barely 1%. Now, we believe in a refresh cycle. We think it's going to work. But what we love about Apple, and this is no new story, is the commitment to share buybacks. You know, there's not much you can do with the cash if you're a company. You can make acquisitions, you can invest in CapEx, you can pay dividends, or you can buy back shares. Apple's bought back $87 billion worth of stock over the past year. That means they believe in the company. I do as well. We like it here, and we think it's going to move higher.
Josh Brown, this is a basket of names that you own more broadly speaking, but is there one that you think stands out more than the others? You gave us your case for Alphabet, but with regards to Apple, Amazon, even NVIDIA, to bring that into the conversation, where do you think the overweights should be?
I've been saying for a while that Amazon is my favorite name for the year. It's up about 20% on the year, so has not completely lit the world on fire. But when you think about the companies that have the most ability to monetize their user base, the stickiest offerings, the companies that are the most entrenched in some of the most profitable areas of tech, Amazon literally checks every box. And in the meanwhile, they have really spent the last 2 years leaning out and getting themselves ready for much bigger profits that I think are now headed our way. So this is really a stock that has underperformed most of the other names in the group. It kissed $200 a share the other day, pulled back. While it's still under $200 a share, this is the one that I want to accumulate. In fact, I have. I've doubled my position in it and then doubled it again. So Amazon is the one that I'm most excited about.
Stephanie, you're excited about the other A in that Mag 7, and it's been an underperformer for a good while. That's now played a decent game of catch-up to the bigger Mag 7 trade. That's Apple. Just how important is the upcoming iPhone 16 refresh cycle and, of course, the rollout of AI or Apple Intelligence in their ecosystem?
I mean, it's huge. It's the story, right? But you're right. It's had a nice run from the lows. I had been adding to it in May at closer to the lows because I just thought there's such a pile-on of hatred. Now it's a little bit different. After the stock has rallied, you've had a couple of upgrades, you have all these reiterations of buys now and that sort of thing. But that being said, I think that in Asia, you've seen a stabilization in iPhones, in China specifically. I think this is going to be the one last bad quarter, negative growth in China. And I think then you have easy compares, and then I think you do have the refresh cycle that will help them. And then you do get this iPhone refresh cycle. You know, there's 270 million phones that have not been upgraded in the last 4 years, and AI is going to probably change that. And that's why there's such tailwind to the numbers. And AI is also going to accelerate the apps business, which means higher margins, right? So that's about 26% of their total revenues, and I think that's going to get to about 30-35% by this time next year. So it will have really big implications on the margin front and on the earnings per share side. You've got possibly doing $8 a share in earnings. I know Tony has that as his numbers. I'm not sure you get there. Maybe it's like $7.50 or $8 or so. But it's cheaper than it actually appears because numbers are kind of at the trough, if you will. And then, of course, you've got the $110 billion buyback. But by the way, I do also own Amazon. Those are the only two Mag 7 that I own. And I think I think Amazon is going to crush it. They've got the momentum in terms of North America margins, in terms of AWS. Only 10% of workloads are on the cloud. So
Wells Fargo increases their dividend.
And then the logistics
WFC.
business, but basically UPS just told you that they're losing share.
Pop. There's
So
our bank.
so
There's
I
our
think
bank
Amazon's
news
gonna
to get
crush
us
it.
moving.
It's only trading at about 14 times EBITDA versus 18 times its historical average. Apple is your turnaround story. So it's kind of like you have the growth and then you have the value-ish.
All right, let's talk about value. It's not necessarily synonymous with some traders to
Let's
say Mag
see.
7 and value in the same sentence.
Of course, it was Wells
But Jenny,
Fargo,
let's
not
talk about
JP
the
Morgan
value
or Bank of
orientation
America.
again. Which of
The ones
these
we've
Mag
been
7
watching.
names comes across to
Wonder
you
if it'll
in
help
your
the sector,
screens
though.
as the value
Yeah, like
play
look at Bank
with
of
regard
America
to how to
breaking
play
out
mega
here.
cap tech, media, and
Or
So
JP
it's obviously
Morgan
Meta, and that's what we own. So you've
possibly
got
gonna
all the rest
run
trading in the 30 times range.
another,
They all have
leg
great
higher.
kind of like 20 to 30% earnings growth ahead. But Meta's trading mid-20s
There it goes.
with mid-20s earnings growth ahead. And I think that I think what I take from that is that the valuation doesn't reflect the euphoric pull forward of
I wish I
expectations
could get like
that
this
some of the
pullback.
peers
So we
do.
have
So
a
as we
bond
go into next
auction
week,
here in another
if
hour.
anyone is a little bit, or
And
let's
a
say they were all
couple
a little bit squishy,
little things.
which I don't think they will be, but if they were, Meta should lose the least because it has
gonna
the
be
least
one of those
fluff in the
days,
valuation.
guys.
So that's it.
Okay.
Yeah.
This whole trade is being set up as the focal point of this earnings season, and there's a good reason. And I want to kind of hearken to what's happening with a note out from Bank of America this week with regard to the expectation for second quarter earnings season. And I want to show you what it is. We got a chart that shows what the second quarter expected earnings per share growth is going to be, right? Versus for the Magnificent Seven, you can see there, which is, again, the yellow bar, versus the blue bars, which are all the other 493 stocks in the S&P 500. There's no doubt that the Mag 7 is going to drive the fundamental earnings story of this season. They say, whereas the S&P 500 has been growing EPS year over year for the third straight quarter, the other 493 have been flattened down for the past 5 quarters. On the other hand, growth is expected to slow for the Mag 7 for the second straight quarter and again in the third quarter. Given the high correlation between tech's outperformance in stocks versus earnings, we expect the narrowing growth differential to be the catalyst for the market to, guess what, broaden out. That's the trade, right? And that's what we've been seeing for a while. Kevin, I'll turn to you for this one. This broadening out, in spite of what's happening with the earnings story that's about to be reported, that's widely expected to be reported, does it have legs if that story plays out?
Yes, but full disclosure, I've been saying that for a year, and maybe I've just been a little bit early. But the idea is that the bulls still have the momentum, and growth is solid. The Fed's going to cut rates. Inflation's coming down. But to your point, Dom, it all comes down to earnings. And at least for this quarter, as that chart indicated, and there's no doubt about it, and the next one, you need the mega tech stocks to absolutely fuel us through it. And then we need the rest of the world to kind of come to join the party. So I do believe that the broadening out can happen, but I don't know it's going to be at the expense necessarily of Mag 7. So don't sell all your big tech stocks to buy the stocks that are underperforming, but absolutely look at those as opportunities moving forward. That's how I would play it.
It's interesting though, like only 20% of the S&P 500 companies have reported so far, so it's early. But you're running at 9.7% growth.
Yeah.
Without the big tech. So to me,
and that's mostly financials, by the way.
That's exactly right. And so, like to me, in a 2-3% GDP world, you can get 8 to 10% growth, and then you add on Mag 7, and that's great too, right? You'll probably have higher than 9.7% growth at the end of the day. But earnings have held in remarkably well. The estimate figures are going higher, and that's why stocks are where they are.
But Steph, you're bringing up an important point, which is to get to the $244 of 2024 earnings that we need, right? That's 11% growth over last year. So even when you're saying 9.7%, I'm thinking like, okay, that sounds great, but it needs to be better if we're actually going to meet year-end earnings.
When you add the technology companies, you absolutely
I think so. I think so.
Absolutely.
But I don't think we're going to exceed it. You know?
No, that's a pessimist. I mean, everybody else is ratcheting up their expectations. Yeah. You don't think it's going to happen, though?
Doesn't seem like it. Do you think?
I do, because I think that, as I say, like in a 2-3% GDP world, you get like mid-single-digit revenue growth. But people are basically thinking that margins are going to roll over, and I don't think margins are going to roll over. I do think companies have pricing power, and I also think that inflation coming down is going to be a big help for companies. Look at Coca-Cola today.
Yeah.
I mean,
but look at Pepsi before. I mean, they weigh out. But I see S&P price targets going up with like expanded valuations, but I haven't seen a lot of like I haven't seen like, okay, we're going from 244 to 260 in 2024 yet.
No, I don't think you're going to get multiple expansion by any means. I think it's going to be the earnings side of the
I
story.
hope so.
All right,
just
Josh,
listening
I heard
to
you. I'm here.
this
I heard
conversation
you.
here.
What resonates with you in that conversation?
I have to jump in and agree with the ladies. Look at the companies that have raised guidance, guided above expectations. General Motors, Coca-Cola, Lockheed Martin, Kimberly-Clark, Quest Diagnostics, and SAP. What do these companies have in common? Nothing. And that's the point. It's tissues and missiles. These are really important companies. They may not be really important in terms of how the earnings math works for the overall S&P 500 and how we get from 244 to 246. Okay, fine, stipulated. I understand that. But just psychologically and frankly, anecdotally, even though they might not be big weights in the indices, these are companies touching a lot of different aspects of the economy, from consumer to government spending to business spending. And what you're hearing is exactly what you want to hear in the opening 2 weeks of earnings season. And so I have to believe that augurs well as we get into some of these media reports. We may not get a significant revision higher for the overall S&P, but I would argue that's not really what's needed here. I think what's needed here is follow through. And that's what companies are delivering so far. So even look at Spotify. This is the consumer writ large.
Of course, it starts to go now. God damn it!
On music, Netflix is telling you they're spending on entertainment. There are no signals here of a pronounced or worrisome slowdown in consumer spending. They're not there.
All right, we're gonna get one quick word to Kevin Simpson, who's actually made a move with regard to the consumer spending picture that is kind of discretionary and kind of not. And explain to us why. Which stock did you buy and why?
Yeah, well, it's not tissues and it's not missiles, but we like TJX. We've been adding to this over time, and again, it speaks to Josh's point of companies increasing their
Oh my God, it's still going down. You got to be kidding me. I sat here this whole time and missed it.
For the year, they did 376 last year. Their margins are increasing. If we see
crazy.
a consumer trade down, people are still going to go to TJ Maxx. If we see the economy stay strong, these companies are going to do incredibly well. So we've been adding to this position over the past few weeks, and we've added more this week.
All right, there's a great conversation to kick things off for the show. Coming up, we've got today's big earnings movers and how to trade them, including one committee stock hitting a fresh 52-week high and another that's on pace for its worst day ever. Those names and those trades are coming up next. Keep it right here.
That's ridiculous. I was fucking waiting for this move all day.
And everything. I think you guys have seen this. That's the first time I've seen it. Now, do you guys like the color? Comment below. We were thinking about doing white again, but Mr. Essa said this specific color is really cool because it's very easy to touch up. It's also
I'm going to target 480.
have a fixed here. Yeah, a lot of stuff happened here. I like how I said rebuild it. That's how much I build cars, hey? Put a new starter in it. It's a full rebuild. I told you I'd let you in on a little secret. Dave has a secret project going on he doesn't want you to know about. You want to go look at it? Yes.
This is ridiculous, I swear. It really is.
Cold start.
Now,
Welcome back to the halftime report. Let's get a check on our chart of the day. It's UPS. Those shares hitting a new 52-week low after missing earnings and then cutting guidance as well. And Jenny, this is a stock, painfully, that you recently bought into.
Right.
So let's talk through what your thinking is right now and whether you still want to hold it.
Sure. So as you may recall, we bought this about 3.5 weeks ago. And I'd been working on it for over a year. I started working on it in early 2023. And all the work pointed to that I should buy it in the low 130s. Because I thought in the low 130s, really I was looking at 132, there'd be a deep enough margin of safety that if I was wrong, if I was early, if there was another misstep in the process, I wasn't going to lose my shirt. And then I got a little impatient right after a year and change of waiting, and I paid about 136 for it. So right now I'm down about 5%, not the worst. And so what do? As a professional investor, I always tell people your starting point is today. And so what I look at today is the investment thesis still intact? And for the most part it is. I'm not 100% committed to adding to it. Oh, by the way, I added it to the portfolio at a 2.5% position. My normal size is a 3%. So I've left myself room to bump it up to a 3% position if it came down lower, which is where we are now. And so we all know what went wrong, which is earnings were a bit light, revenues were a bit light, margins were a bit light. To Steph's point earlier, they said like Amazon's taking market share, but that was already known. And so what we did see that was positive this quarter was for the first time in 9 quarters, volumes increased. The reason all those numbers were down was because the revenue per package was worse than expected. People were doing things like instead of sending it via air, they were saying, hey, let's choose the cheaper option and send it over land. And that could be an economic factor, it could be a mix factor. I don't know how permanently it's going to, like, is that revenue per package, is it on a real decline or is it a plateau? Is this consumers feeling pinched? I think with respect to Amazon, part of the biggest part, the most challenging part of buying it initially was trying to sort through what the competitive landscape looked like. What was going to happen with Amazon, DHL, FedEx? And my thought on that in the end was it is a large pie and it's an expanding pie. So to some degree, they can trade around market share and there's enough money to be made for all of them. So here's where I am today. I've got a company that's going to produce $93 billion of revenues, $5.8 billion of free cash flow. They're going to pay out $5.4 billion this year in dividends. That's over 5% yield right now. It's $6.52 of dividends per year. And so with the adjusted news out today, this year's earnings go down to $7.55. My investment thesis was largely predicated on 2025 and 2026 earnings. I think 2025 should still be in the $9 range. That would still mean that the stock's trading around 14 times, which is in line with its historic average. It's not up to the nosebleed almost 20 times that it had gotten to in the pandemic distortion. After that, it should grow still. So I think there's still earnings growth ahead. I think we've got a cheap stock, well-protected dividend yield. Oh, by the way, on the call, management said they're going to cut CapEx by $500 million, which is great, and they're going to buy back in the years going forward $1 billion of shares a year. So I think probably the investment thesis is there, but this is like tough, and I just need to recontemplate it. But I'm glad that I waited and waited and waited because the margin of safety means I'm not taking that big a bruising on it.
All right, Kevin, let's move on to materials and specifically Freeport-McMoRan. Quarter was fine, right? But the stock is not reacting well to it necessarily. It's although near session highs right now. You can see only down about 2% right now. Is this a name that you want to remain with?
Yeah, I mean, I would be adding to it. I thought the numbers were good. I thought the initial reaction was a complete overreaction to the downside. If you're buying,
I want to look to see if we can pull it back into like 480.
Off of its high earlier this year. The trend is still lower, so you may be able to wait. If you're buying it for a China play on EV, I think I'd wait on that as well. Be
careful, though.
We own it for the gold play. We own it for copper. We think Freeport's best of breed. But there'll be opportunities here for you to add into this position, and I think it's a very, very good stock to own for the long term, and I'm comfortable with it.
It always trades down on the earnings reports, right? Because they always say that cash costs are going to be higher than expected. They're being conservative. They just beat on cash costs. So if you're selling the stock because of that, that's crazy. Because price realizations are the more important factor because that determines free cash flow, and that was actually.
I eat too many crackers.
All right, let's move on to another name, Stephanie. I'm going to stay with you on this one because
it's just too easy.
When we talk about GE these days, it's GE Aerospace, right? The legacy engines manufacturer, parts, and that sort of thing. They came out and they're solidly higher on an earnings beat and an outlook increase today. Let's talk about whether GE Aerospace, you're obviously happy.
Yeah.
Would you continue to be happy and what you need to see?
Absolutely. I mean, they executed flawlessly this quarter. They had supply chain issues, which is the only reason why revenues were slightly disappointing. But they beat on earnings. They beat on free cash flow. Their engine and services.
Bro, Coinbase is pulling back pretty heavy, guys.
That's huge. And oh, by the way, margins also really big positive as well. The engine services business.
Look at Coinbase.
Division, their margins beat.
Is there news or something with Coinbase right now? Coinbase is really, really falling, guys. 255. Possible wake up. Watch prior day's low. Watch today's double bottom and prior day's low on coin. I'm watching this level here. Wednesday's low. I told you guys Wednesday's low. Thursday and Friday's high. And yesterday we closed above it. So we've sat here all day. Boom, boom. Now we're back below it. So, you know, we keep not being able to hold it. You should then look for a move back down to like 478, 475. All right, so we'll take it step by step, though, and look for 480. All right, 480 was where we would look for pullbacks, because if we're not going to hold this level, then we're going to turn it into resistance. It's as plain as simple as that. So, yeah. GDP, I think you're still probably going to see GDP negative and pulling back. Unless that's a ticker you're referring to, but let's see. They're saying 1. They're saying like 1.9, 2.5. I don't think that's the case. How are you going to have that? How are you going to have positive GDP when durable goods orders are going negative? You know what I'm saying? Like, look at the durable goods. Look at it. It's 0.1 previously. Chances are we're going to get a negative. Maybe you get a little pickup, but 1.9 to 2.5. I'm going to say at best 1.7. That's just my guess. But I think it's going to be like 1.7. I think it's going to come in under this consensus number at 1.9 and 2 and under forecast. I'm going to say 1.7 for GDP. But it's just a guess. It's just a guess. Just my thoughts on what I think it would be. I wouldn't be surprised if it's lower. In fact, I hope it goes lower. Increase in initial jobless claims, a decrease in GDP. This is all contraction. So these are all signs that the, not just the economy, but the market. All right, watch here. Watch the cues here, guys. Look at this bear flag. It's funny how all that stuff works out, didn't it? I wonder if I should have just played NVIDIA. We have a little bit more room to go. Again, be careful because we still have bond auctions and stuff here in the next 20 minutes. Keep that in mind. Keep it in mind. Keep it in mind. Keep it in mind. I'm just eating crackers till the day I die. Most people be smoking their ops. I just eat my crackers. I'll let you guys know as soon as I go to enter these. And just see if we can like just pull some money out. You know, I won't be surprised if we could catch a bounce either to take it higher. Let me go back here. Go back to watching this video. Oh shit. I just think it's weird that like you can tell that the market is we could it wouldn't surprise me, but here's the thing. So if you look at the chart, right? And if you look at what we did yesterday, looked at how we finished the week, look what we did yesterday and look what we did today. Like yesterday we had some bullishness like that. Those buyers aren't here today. This level right here, right? This 480, 482, right? This was Wednesday's low. And then Thursday and Friday we had, this nice down day. So if you pay attention to that Wednesday's low right there, we got above it. And we got above it yesterday. Dude, what is going on with my charts? I don't know what's going on here, man. My shit's fucking up. Sorry for the language, but
restorative solutions, Hair Club has you covered.
If you're determined to get your hair back and live the life you deserve, just call Hair Club. You can get your own free personalized consultation with a hair loss expert and be on your way to the finish line in no time. Call now.
Call Hair Club now to schedule a free consultation. Save 20% on select solutions using promo code Frankie. 800-829-5032.
Welcome back to the halftime report. Take a look at shares of CrowdStrike right now. They're not lower. They're higher. They're rebounding after losing nearly a quarter of their value over the last 2 trading sessions following that massive global IT outage. So that got us to thinking, what would you do? What do you do?
Sorry about that. So Wednesday's low right there, right? Look, resistance, right? Look at that look at 482. Sorry about that. 482. 482, 482, 482. We can't get above it, can't get above it. Yesterday, we tried to get above it, We finally get above it to hold it yesterday afternoon. And then again today, we open up above it. Oh, hold. Rally off of it, fail. Think about that. Think about it. Like, not really think about it. Like, you got to feel that. You know what I mean? Feel that. Resistance. Or not resistance, but support. We break it. Boom, resistance. Boom, resistance. Try to make some progress. Can't get there. Finally, at the end of the day, you reclaim it. And then today, you open up above it. Or we don't open up above it, but we pull back, rally above it. Boom, we hold it. Okay, cool. And then, look at how weak it is. Boom, we try to hold it. It breaks. But then we quickly recover. And then it's like, oh, we break it again. You know, I think we could get some upside too, but I think we need a reason. And I think this is kind of, there's a sign here. I think your strength right now is in the IWM. And you got to remember, a lot of the names that are in the queues are pretty much at highs. So you're going to have more money leaving than going into. Right? You're going to have more money going into the IWM than going into the queues. I don't disagree with you. Like I said, I don't disagree with you. My personal opinion is I don't think we do. Because on light volume days, we should be able to hold it. But clearly today, sellers are here and buyers aren't. It's just clear. Yeah, I mean, technically we've made new highs and we haven't really made new lows. But that's also about to end. Like I say, I think this level here at 482 is really important. 481.75, 482. All right, let's go. Let's see what happens here. Fuck. I'm not on it. Let's do it. Let's do it. You know, I gotta wait anyway. We have 10 minutes until that auction comes out. I think that's really going to tell us what the direction of the afternoon will be. Possibly. So 42 came in the same. I'm going to laugh my ass off if the 2-year goes higher. I don't think it is, but I would laugh my ass off. So 10 minutes until we get this auction.
Instead of just retreating, it's good so far, but you know, a broader rally is not always a smoother one, as you can see, as the S&P 500 itself just has this erratic movement all day.
Have you even been concerned at all about interest rates over the last week or so?
They've kind of gotten out of the way, and so I would say no at this point. At these levels, 4.2 on the 10-year feels like we're familiar with that level at this point, and it doesn't get in the way necessarily. So we'll see. I mean, commodities going south. It seems like we're very secure about the inflation picture right now going into Friday's number.
Comfortable with interest rates at these levels. All right,
Mike. If we're too comfortable. Yes.
We'll see you later on this afternoon at the closing bell. Final trades are coming up. Keep it right here, guys.
fiber.
Okay, let's see what happens here. Excuse me. Damn, bro. I wish I could sit here and
Final
talk.
trades on CNBC.
Let's see what happens here.
To get better results, get a better platform. The best informed investors choose Interactive Brokers.
Morgan, HON Honeywell, final trades on CNBC.
All right, 60 seconds left in the show. Final trades are up. Josh Brown, you first.
Corn and GLW had a big rally, has been consolidating. I think waiting for the next leg up.
All right.
All right, 60 seconds left in the show. Final trades are up. Josh Brown, you first.
Corning GLW had a big rally, has been consolidating. I think waiting for the next leg up.
All right, Kevin.
Honeywell, they've bought back 10% of their float over the past 5 years, $8.44 in free cash flow, all-time high. GE Aerospace had great earnings today, and I expect Honeywell to follow suit.
Jenny.
All right, licking my wounds, so I'm giving you something super safe. Kinder Morgan, they announced last week earnings were perfectly great, 5.3% yield.
Pipelines are safe at Jenny's mind. All right, Steph.
Truist Financial, my latest buy in the financials. They beat earnings and revenues, trading at 1.1 times book value.
And you don't even worry about interest rates on that one.
I do not, actually. I think NII is bottoming,
All right.
and so do they.
There you go. A smaller regional size bank. That does it here for the halftime report. The exchange.
In an early bull market, that's got to be the stupidest shit I've ever heard of. The stupidest shit I have ever heard of.
Thank you very much, Dom, and welcome to the
Listen.
exchange. I'm Kelly Evans. Here's what's ahead.
I'm gonna turn it up.
We're in an early bull market. An early bull market, says one of our guests, calling it also the...
So early she had to reiterate and say it twice. So early she had to say it twice. Contracting GDP and initial jobless claims at lows going higher.
We'll ask her if she's adding
That's
to
not
that
an early
position.
bull market.
And a credit card backed by your home equity line of credit. Is it a great innovation or risky business? We'll have those details ahead as well. Let's get you...
Nobody cares. I just want to know what the heck this 2-year came in at.
momentum behind what's been this very strong period for big tech, even amid last week's reversion to small caps. And keep an eye on yields as well, because the 2-year auction is underway this hour.
21.3 in the money supply.
Better tone lately for treasuries, but still a lot of bill issuance and more on the short end than the long end. Oil is also slipping down more than 2% to its lowest level since mid.
Energy is slipping, which should help tech out. Let's go invest. Come on, trading economics. What was it? Here, let me go look. Actually, hold on 1 second. As soon as I click on it, it comes in 4.5. Was that? Dude, it just showed it. Oh my God, bro. Okay, 4.4, so that's down. Down a lot. So there's a sign that GDP may come in really low. We should figure that. We should figure that. Should have figured that. I mean, it's kind of weird, right? Because if risk is going, if things are going to get riskier here sooner, then you technically should see yields go higher. But because the Fed controls the short end of the curve, you're going to start to see them cut rates, so that's why. So, like, technically, if we had a free market, we should start to be in a stage where you would see the 2-year rise. You know, and I could be wrong here. I'm not an economist, but where if things are about to start getting fishy, you know, the shorter dates should start to really climb, but they're not going to, because the Fed's going to control them and start cutting the short end of the curve. So 4.5, expected 4.7. Don't quote me, I'm pretty sure. 4744. 44 previously. Excuse me, sorry. Came in at 4.4. All right, so energy's pulling back. Bitcoin was starting to pull back. I don't know if it had changed. It started to sell off at all today. I think this Ethereum daily chart is beautiful. I'm a little reluctant to trust it, but this has to hold. If it doesn't, it's pretty clear what's happening next. That red line is your 50-day moving average. All right, Bitcoin, nice solid pullback. I think Bitcoin's coming back in to test this 64,000. Damn, I wish Bitcoin would hold 66 and then like extend higher. I just don't see it happening. It could, because if the dollar is going to... Let's go look at... I haven't looked at the Dixie in a while. Let's see. Yeah, that's it. We're going lower. I know you guys have heard me say on here that I think the dollar could climb higher, but I think, you know, we could. Yeah, look at that. Look at that inverse head and shoulders. The dollar could start to really bounce here. Look at that. Left shoulder, head, right shoulder. That's pretty damn clear. It don't get no better than that, honestly. And look, there goes Bitcoin. Let's look for Coinbase, guys. Look at Bitcoin. Get ready. Look at Bitcoin cracking to 66,000. The volume really isn't there though on the sell side. Still a lot of buying pressure here. 64. I think I might just go ahead and grab. If we get one more bounce on this, I'm going to go ahead and just grab some Coinbase puts. Because I think this is going to go lower. I think we're going to see Bitcoin just a tad bit lower. I could be wrong here. I could be wrong. But I think we're going back to revisit 64,000. So let's go ahead and I'm going to go look at some puts on Coinbase up here.
We have a 2-year auction to get to if you'll sit tight for just a moment. Rick Santelli has those results for us. Rick, what do they tell you?
Well, first of all, we should cue Twilight Zone music. This is the strangest auction I've seen in years. So the 2-year note
I'm on to something here, folks.
69 billion of them at a yield of 4.434.
It is weird.
Well below the when issued market, which was hovering around 4.46. So basically, it stopped through well over 2.5 basis points. Price excellent. And, well, here's the odd scenario. If you look at the bid to cover, it was 2.81, the best since August of 23. If you look at indirect bidders, 76.6%. I have over 20 years of auction.
Told you
results.
guys there was something
I can't
about this
find
thing.
A higher one. I believe that would be an all-time record, which is really difficult for an old issue like a 2-year note maturity. Direct bidders, exactly the opposite. 14.4%. That's the weakest since Jan of 22. I gave this auction an A-. That was the reason. Otherwise, it would have probably been an A+. And the dealers take 9%. Twilight Zone music again. I can't find a smaller takedown of dealers in the history of 2-year notes. And of course, what that means is investors were very aggressive. So if we really put a face on it, the weakness was in direct bidders. That's like insurance companies, pension funds. They've been going wild on the longer maturities, which matches their liabilities better. And on this auction, think Fed, to think that indirect bidders, foreign entities, were so aggressive, the only thing it could mean to me is they're expecting a rate decrease, a cut in rates. Now, whether that means July's on the table for some investors, which I would highly seem unlikely, or they're just all in on September. But either way, I think the Fed helped this short maturity auction ride really aggressive over the finish line. Back to you.
All of our problems are solved, Rick. There, you heard it here first. Thank you very much, if only. Rick Santelli on those auction results. That was the 2-year again. Senator Schumer and Representative Jeffries are speaking right now. Let's listen in as we wait to see if they will endorse Kamala Harris.
And to do so from the grassroots up,
Diddy party.
not top down.
It's a Diddy party.
We deeply respected that. Hakeem and I did. She said she would work to earn the support of our party.
She would work?
And boy, has she done so in quick
order.
You
can't even make this shit up.
Vice President
Listen
Harris
to
has
what
done
he
a
just
truly
said
impressive job
about Kamala.
securing the majority of
Oh,
delegates
she
needed to
worked.
win the
She
Democratic
sucked the
Party's
out of
nomination
that,
to be our
you know
next
what.
president of the United States. The vast majority of my senators
She took a
quickly and
beat down at them
enthusiastically
Diddy
endorsed
parties.
her. So now that the process
get
is
it
played
reversed.
out, from the grassroots bottom up, we are here today to throw our support
bottoms up.
behind Vice
They getting
President
drunk.
Kamala
They already
Harris.
know what's up. It's bottoms up.
I'm clapping. You don't have to.
He's a fucking retard, ain't he?
Again, that's New York Senator Schumer.
Does anybody else just want to just backhand him? Like fucking fix your face type shit? Slap the shit out of him? Like, not punch him. Like, just slap the shit out of him. You ain't gonna wipe that teenage white boy with the gun killing people smirk off your face. Oh, Kamala's gonna keep our war with Russia going. What's up, bro? Here we go. Pull it back. Just go ahead, Spy or Q's. Go ahead. Go do it. It's all good. Just do it. Just do it. Just pull it back. 480. There we go. See? See how easy that was? See how easy? There you go. Just pull it back. Fucking boring day, man. I might be out of here soon. Because there's just nothing going on. Like, literally nothing going on. NVIDIA is starting to pull back, too. Fucking Kamala Harris. Fucking Kamala Harris. Holy shit. I really don't know what, like, it's so crazy. It really is. I don't understand it. I really don't. I don't get it. I don't know where this, like, turn of events and putting your faith and trust in these people. And to think that they have any right to continue to, like, overstep their boundaries and say, yeah, you can smoke a blunt, but you can't have a Newport cigarette. Oh, it's got menthol in it? Yeah, you're going to have to get rid of that. Bitch, who the fuck are you? First off, we gotta ban your assault weapons. I didn't know assault was a weapon. It's just crazy. It really is. It's just fucking crazy to me. To run on taxes. To run on raising taxes. To run on taxing unrealized gains. Taxing unrealized gains. All these people not only have to pay more for all of their goods and items and home and mortgage rates, but they have to pay on their retirement that they haven't even touched, that they get penalized for. What the fuck is going on in this world? Seriously, who the fuck would trust Biden? Here's the thing. People get too caught up. Oh, he sounds good. Oh, Obama sounded real good. Kamala, from time to time, sounds good. Bro, that is the whole point, to make you like them because they sound good. Sounding good is not working for you. That sound good just tricked your ass into sipping the juice. Notice how the past year and a half, 2 years, all that Janet Yellen and Biden and them have done, have tried to figure out where are we going to pull more money out of businesses and people. They've already started charging your ass $600 and more transfers. You're getting taxed. The IRS is going to be knocking at your door, wanting to know where that money was for, what were you doing with it, like it's their business. Second of all, I lost that train of thought. I already lost it. I already lost that train of thought. It's fucking mind-blowing. It really is. It's mind-blowing. It's crazy, man. It's absolutely fucking crazy. Yeah, I'm cool with high gas prices. I'm cool with it. Let's see here. Let's see here. Let's see here. Man, today is so fucking boring. Today is so boring. I don't think there's really anything. Do you guys see anything that has volume or continuation? I know GE and Boeing had a really nice day. Oh shit, Coinbase. That's right. We said Bitcoin. Oh, this is what I was going to say. You know what's so funny, guys? Look at this. You know what's so funny? Look at this. This is what I'm talking about with Biden. This is exactly what I'm talking about, like the administration and the cabinet. So they let NVIDIA buy a small robotics company just recently. But Amazon couldn't buy iRobot and save the jobs for all those people that ended up getting laid off. Because the owner was wanting to sell it. Or had to sell it. I don't know what the thing was, but Amazon was going to buy it, and pretty much those people were still going to have a job. But it was okay for NVIDIA to buy a robotics company. How does that make any sense? That's not a free market. Like, why is the government deciding in the first place? For the most part, I can see why the government would want to, like, have some oversight on some things. Yes, absolutely. There's a place for government, but, like, the fact that NVIDIA, a large cap, just as big as Amazon, if not bigger right now, you know, in a sense, for what it's worth, was allowed to go buy a robotics company, and yet Amazon just 2 months ago could not. They turned them down. I guarantee you it is because of who they are voting for. I guarantee it. And you know what else? Guess who else is long NVIDIA? Guess who just got long NVIDIA again 2 weeks ago for this buyout? Mrs. Pelosi. Yes, you heard it first. You heard it first. You didn't hear it first, but you guys may have already known about it. I don't know if you guys did or not, but there's Spike power turning. Service enable enterprise. Anyway, so yeah, that was that. Let's go. We'll go scan through the markets. It's just one of those days, guys. One of those days. Just one of them days. Did anybody go long CrowdStrike? That was one of the top trade ideas that we gave out today. We, as in me. Long CrowdStrike. A lot of people weren't down with this. They just, oh, it's a falling knife. Southwest Airlines. All right, here we go. Here we go. We have room down to $26, 25, 26, 26. I'm trying, guys. I'm trying. Fuck. I was trying, guys. I tried to get on that. Now the spreads are going to be crazy. That sucks. Alright, well, I tried to get that. That didn't work out too well. Okay, so there's some news here with the FAA. I wonder, never mind, let me not do that.
Oppenheimer has a 12 to 18 month price target of $150 on Montana and CNA.
Bonjour from Paris. Squawkbox is jetting off to the Olympics. Becky, Andrew, and Joe live from Paris while the U.S. takes on the world. Squawkbox brings you exclusive interviews, highlights from the games, inside stories, all the excitement. Say bonjour. Bonjour.
All right, guys. I'll be right back in like 5 minutes. I'm going to go do something real quick. I'm going to go grab a bottle of water and like look around and see what's going on here in the markets. That's crazy. I just tried to get that Southwest play, man, but so the last one was 44.
Turns at the same see falling rates, improving affordability. People start to think, okay, maybe there's somewhere to go because there's more inventory. So falling rates mean falling prices or squishier ones where high rates have been higher prices. So it wouldn't have made sense 15 or 20 years ago. But I don't know what you think about where that leaves prices today.
Well, prices did decelerate in this month's report, and we expect further deceleration as inventories are rising. And one thing I'd point out in the markets in the Southeast, Southwest, those markets more so than Northeast and Midwest, where there's a lot more new home construction, we're seeing a lot more competition because they do have alternatives. And I think the builders are continuing to start a lot more homes, and they're significantly incentivizing. In fact, the premium that a new home used to warrant was, call it 25%, in some markets 25%, that premium's gone completely, and they're on par with existing homes. So builders are offering a lot more value. So that's going to mean that the existing home seller is got to come away from their aspirational asking price and come back to realization that they're going to have to reduce their price if they want to buy that new home, and that will be a better value for them.
What level of mortgage rates do you think we start to really see a sea change in the market? Because I'm not sure if it's 25 or 50, but again, we're talking about the overnight rate, and mortgages usually key off more like the 10-year. Maybe that's anticipatory. I mean, so, do we need the 10-year to come below 4 and rates come down half a point? I'm curious what levels you think are significant.
Well, we think about, call it 50 basis points kind of equates to 5-6% decline in home prices. So if we're, call it now on new homes, we're a little bit better, call it 15% above trend line. Again, an existing home, 20% above trend line. We'd probably want to see mortgage rates come down at 100 basis points. They're hovering below 7 right now. So I think if we had a 5 handle, even in the high 5s, I think the market can start to see more momentum. I think that many people that are locked in, again, over 80% of homeowners today that have a mortgage are locked in below 5. So again, that disincentive and thinking, wow, I don't really want to give up this low payment I have, does give some pause. But now when they say, oh, it's not that much different, maybe, I can think about moving and it doesn't feel so bad.
That's interesting. So really a full point of cuts is where we could start to see a bigger change. Okay, the next I'm going to ask you about, last thing before you go, is placed all my
Sure.
favorite things. Contrarian, favors New Jersey, and all the rest of it. The San Francisco Fed has just done a little study suggesting that migration from colder parts of the country to the Sun Belt is slowing. And you've probably heard this. I've heard this in REITs and certain real estate markets as well, this idea that climate change will make the South so hot that people will start to move back. I mean, tell me, do you think this could ever possibly happen?
Well, I'll get on my soapbox now because I do agree that that can happen. And in fact, the migration has been slowing. We just saw the Allied Van report that showed a double-digit decline.
You might be able to cheaply add leverage or protection in either way. Carter, thoughts here on that trend channel? Because it looks an awful lot like the NDX.
Yeah, I mean, it's a big move off that low. That's 45%. It's a bit above trend as measured by the moving average. And so the question is it going to be fair? The last quarter was a big resounding positive. Again, there's no such thing as good or bad earnings. There's good results in terms of price action. Stock gapped up 10%. The presumption is you get a second gap.
Let's take a look at Tesla, Dan, something near and dear to your heart. Obviously, a stock that's probably rallied some 90%-ish off the low, but a stock fairly that's still significantly lower than its prior all-time high. And you've seen, listen, we saw a move of this magnitude last year as well. So it's not like it's unprecedented. So let's take a look at Tesla and earnings as well.
Yeah, so 9% implied move in either direction. Obviously, this is a stock that is notoriously volatile in, after its earnings. And if you just go and you look at the last 4 quarters, I mean, we had a 12% gain last quarter. We had a 17% drop the quarter before that, and then down 9%, down 9%. And so one of the things I think is interesting, Guy, and we talked about this heading into their Q1 delivery number in the early April, we just said that estimates had been coming down so dramatically, you know what I mean? And it gapped lower on that. But for the
Q2, they've been coming down dramatically. And what did the stock do? It had that big bounce. It consolidated, and then it started to rip on some other things that had nothing to do with making cars, right? And I think that's a really important point. So once again, the focus as they report tonight, and investors are going to be digesting, is like, what are the auto gross margins, right? Have they shown any improvement? Because if this price war is still going on and they haven't meaningfully increased their deliveries in this quarter, which are expected to be down year over year, then I think you see the stock pull back possibly to that 200-day moving average. It's making a little bit of a flag here. You see that kind of 2-year downtrend that it's been in. But if you look at it on a 5-year basis, it's gotten above that downtrend from that kind of 400 level in late 2021.
I don't know how they're going to. I don't know how margins going to be better than the street is expecting. And I've thought for a while that it is a margin story. And when that was the story, the stock was acting in kind, trading to the downside. This recent run's been predicated on a couple different things. Robo-taxi. I also think, and I don't want to talk about politics, I want to move on, but I also think a lot of this move is potentially on the back of another Trump administration, which historically has not been favorable, but they seemingly have changed their tunes towards EVs and Tesla specifically. So we'll see.
Well, hold on. I mean, like, one of the first things that former President Trump said at the RNC is that he immediately wants to get away from these EV subsidies. And when you think about that, I mean, Tesla would not have had the adoption of their cars in the US over the last 5 or so years without those subsidies. And I guess Elon, who's already committed, tens of millions of dollars to a super PAC to help get Trump reelected, said, well, maybe we don't need them. Like, he's kind of kowtowing to it a little, which I find very surprising, especially as they're competing on price with some really low end, Chinese or high end cars at a low price. They have to make their cars, especially where interest rates are, that much more attractive. So I don't get that whatsoever. And you make the point, like, they diverted so many of these H100 chips from NVIDIA. You remember, like, about a month ago, and over to XAI, Elon's other company. Well, wouldn't you think that they need those high-end chips to power supervised full self-driving? I mean, they don't use LiDAR. They use basically what is, generative AI to kind of see what's out there or whatever. So I just kind of find it pretty curious, and I'd be surprised to see a meaningful gap unless you see guidance that talks about margins going back up above 18.5% or so. But Carter, enough of the fundamentals, as you like to call it. What do you see in that chart? This is the 5-year. You can draw that down.
Let's go back to the shorter term. And so we have essentially a doubling, right? The stock has this sort of very powerful recovery, jumping. What was the low there in May? It was probably 140.
I think.
It's 138, and it goes to 270 here, 95% or thereabouts. And now normal reaction, meaning after something gets steep and uncorrected, some people sell into it. They think, oh, I've got profits. Other people try to short it. That halts the advance, and then it starts to flag. That's why they call them pennants and flags. You can see the minor series of lower highs, higher lows. It's pointed. It looks like a flag. That's what it's called. It's nothing other than consolidation. And then 50-50, does it get resolved, the standoff, the consolidation, by the next up leg, or does it fall out of the pattern and drop? My hunch is that it's not going to do well. I don't like the action in Ford and GM. I would be not wanting to be long going into the print.
Take a couple questions here from Jody Edmondson. I know Jody's here every day. Speaking of falling knives, is ASML a buy? I think ASML is the largest tech company in Europe still. Obviously, it's had a pretty precipitous drop. The answer is, I don't think at 932 it is, but if you were to get it down to 875, which was at the time the prior all-time high in September of 2021, and you can throw that chart up longer term and you'll see what I'm looking at, then it gets interesting, and you can see that sort of prior high. So, it's actually higher than I thought. So 880 or so. So, right here theoretically should be support. I didn't realize it got that low the other day. So maybe we actually did capitulate on the downside. But you see what I'm looking at in terms of the horizontal line from the prior high. Maybe I didn't realize it got that low. I guess it was yesterday. So maybe this is one to take a look at here, Dan.
Yeah, Carter, and this is maybe a question for you too. So this stock last week gapped down on fundamental news. Okay, they reported their earnings, and investors in a raging bull market for semis did not like what they saw here. So you just mentioned in Google, and I've heard you say this before, that when you have a powerful gap to new highs, the way we did on the 52-week highs, with Google after its results last quarter, that you commonly see a second, gap there. Does that hold true? Obviously, for, I mean, I'm assuming it does for downside gaps.
Sure, absolutely. And the risk here is that we fall to 800. That's where real support comes into play, and that would also constitute a gap fill. If we look at the 5-year chart, or the longer one that we had, this is. I mean, think about it. From the COVID low, just to put this in context, it goes from 200 to 800, a four-bagger. And then in the 2023 bear market, it drops 59%. The Qs dropped 37, the S&P dropped 27. It just shows the beta, the risk reward associated with this great winner. A four-bagger leading up to then a 60% decline, and now it goes up 5x from its lows of 2022, right? 400 to 1,000, and here we are. What's important is that means it's a cyclical business. And it's important to say that if you were to just put CTAS, for instance, Charlie, Tom, Apple, Sam on here as a 5-year chart to make a point about non-cyclicality, you'll see an entirely different chart. And if that can come up, if not, I'll make the point without the visuals. But the point is, this kind of variability, it means one thing, right? This is not, it's a growth business till it isn't, right? It's a cyclical business all the same. My hunches would not be long here. I would be worried about the next drop and gap.
Mitch is asking about Robinhood, Carter. I think it's down a couple percent today. It's had a it's had a tremendous run over the last 6 months. Feels like it may be sort of running out a little bit of steam here. Let's take a look at a Robinhood chart. By the way, full disclosure, I still think there's some upside here, but I understand, when you have these sort of nonstop moves, lower left, upper right, at some point it's going to take a breather.
Yeah, I mean, I'll jump.
Sorry, I thought you were. I'll go. Yeah, I mean, look, pull this back a little bit so we get a little more perspective to just show where it came from. And again, this is the real story. This took forever to base and bottom, and sometimes they're value traps, if you could even use the word value in a stock like this. And then finally, of course, it does start to turn. So is it nascent, young? The implications 60, 80, all the way back to the high, or the short-term chart again, is it already shot the moon? It's so steep, and it's both. There is no answer. It is overdone in this term, in this time frame. I would trim or reduce. On the longer base, one say this is just getting going, and that is the conundrum.
Well, here, and let me just kind of weigh in from a fundamental standpoint, Guy. I know that this is one that you've been pounding the table. I remember hearing you talking about it on Fast Money below $10. Okay, and again, what a heck of a run this year. And when I see a company, okay, inflect on the earnings front, they just went from negative earnings last year to an expected earnings, so down 61 cents in earnings and up 53 cents this year with growing revenues. And I think about what are some of the catalysts that might be. We just saw that Ethereum ETF that has been approved. We know that this is a preferred platform to trade crypto, and I think giving folks who are interested in crypto more opportunities or more options to trade it, I think that's pretty interesting too. This is a company that's growing, expected to grow revenue this year 34%. So to me, it definitely looks like a buy on pullbacks. I see what you guys see. The idea of a back and fill guy makes some sense, and they don't report, at least I think, until August 5th or 6th or 7th.
This is a tough one. Eva Wu's asking about ServiceNow. Dan, I know you've looked at this. What I'll tell you is, this stock in February traded north of $800 by, I want to say, Dan, and you know this better than I do, but by the end of May, it was $650 stock, traded right back up to that level. Now we've been selling off recently. I look at this and say it's probably a no touch here, but that's just me.
Yeah, you know what's interesting, and we've talked about this a bunch, is that as most of an investor focus has been on generative AI, and listen, ServiceNow, Workday, Adobe, Salesforce, all
Anybody
these
take this,
companies are gonna
man?
be
Anybody
using
get on this
generative
Coinbase
AI
short
to
or
kind of
what?
make better
Y'all,
products and
what's
services
going
and
on with
integrate
y'all?
with other products
Huh?
and services that their customers
Let
want.
me know.
But for whatever reason, right now,
Let
they are
me
just
know.
out
Anybody
of favor
end up
relative
taking
to
this?
some of those other larger names. You know, if I look at Salesforce is down in the year, Adobe's
Cakework.
down in the year, Workday is down in the year, ServiceNow is only up 8% on the year. But here's the thing about ServiceNow, you know, expected, 25% earnings growth this year, 20% next, trading at 56 times this year and 42 times next. And I just say to myself, okay, well, we know that enterprise budgets, you know what I mean? They're not going up materially right now. If budgets are being diverted towards spending on generative AI, they're probably coming out of some of these enterprise software companies, you know, butts, if you will. So if the expected growth, earnings and sales, above 20% for the next 2 years, then maybe that's something that you want to buy on a pullback, but I'm not sure you want to buy it now, despite what looks like a pretty long-term base. Carter, thoughts on the chart here?
Yeah, pair of twos. It's and one could say, but yes, but wouldn't you play it for the breakout? It's better to, I'd rather pay 800 and forego. I'd rather play it if and as, right? It's in motion and starting to threaten and tempt and get through the former highs. Here and now, no trade.
Elf Beauty is the last one we'll talk about. We got a question here. Does it look like a classic double top? I think Elf made an all-time high in March of this year, like 220 or so. Had a pretty precipitous drop-off, like many stocks. Traded right back up to that level, I want to say at the end of June. Here we are at 180. I look at this and say, you know what? The setup suggests we're going to touch the prior support around 155 or so. Carter probably looks at Elf and says, you know what? No touch here. We're basically traded down to the moving average. What are your thoughts here, if any, Carter?
Bro, this chart's pissing me off, bro.
Well, on a long term,
Come
this went
on.
from 20 to 200, right? So there are 10 baggers do exist. But here now, I'm with you. I would say
10 baggers
no
are
trade.
like
just
double
is so
D's.
unclear.
Love to
Waiting
see
for
'em.
clearly
Just
defined
love to
setups
see
where we
'em.
can say, all right, we know if and as this breaks out, why we're in the trade and what we're playing for. What are we playing for here? A bounce, but we just bounced off the moving average. We couldn't make that new high. Now we're back at it. It all feels a bit sluggish. And yet, does that make it a short? No, particularly, it's just no trade for me.
Dan, the time goes by extraordinarily fast, and I believe we are now find ourselves in week 10, not of the NFL season, but of something that we call Market Matrix.
Yeah, so this was a new podcast that we introduced
Man, this
2.5
sucks, bro.
months ago.
There's
Really
fucking
excited about it. They
nothing
call it
going
the
right now.
MRKT Matrix. You know who reads it. It's Brunson. It's not Guy or it's me. We curate the stories, what we think are probably the most important market stories, business stories generally. So it's an AI-generated podcast. We bang that text into a voice spot. It's called Brunson. So check it out. We're really excited about it. We think it's a pretty useful thing. At the end of the day, it drops right after the market.
It won't all go into Hershey's, but that's the kind of magnitude of the move. They've gotten so top heavy that even 5 or 10% coming off those can really make a difference in the mid and small cap market.
So we've talked, Hershey, what are the specific areas where you think there are maybe stock-specific stories or things
Sure.
that can do well right now?
Sure, I call them the left behind. So we're talking about stuff that wasn't caught up in the tech AI bubble.
The rise of the rest.
Right, exactly, right. And so they're great companies, but capital, like it did in the internet bubble, got sucked away towards tech. So Hershey's would be a great example. Airbus Industry, the European plane manufacturer, it's having some supply chain problems in the short term. Long term, their backlog is just terrific. You've got United Health Group, which is suffering through an election year. Tough to be a healthcare company in an election year.
That's had a good couple weeks as
yeah,
well. I mean,
so
do you think
again, it's playing the same wave. And finally, Take-Two Interactive, which is going to come out with Grand Theft Auto. So it's a variety of lots of different stocks. The commonality is only that they haven't been caught up in the AI AI boom.
That's really interesting. So you think this is kind of the catch-up of the rest. It doesn't have to be small caps per se. It doesn't have to be a call on energy or financials or anything like that.
No, my favorite way to look at it is equal weight versus market cap weight. The equal weight stocks have languished for 18 months now. And historically, the equal weight actually outperform the larger stocks over a 35-year period by an average of about 1%. They've underperformed over the last 18 months by over 25%.
Now I'm like, should I put equal weight in the 401k then? I mean,
I'm not telling you what to do.
This is not investment advice.
But yeah, it certainly, the pendulum swings and it always comes back. So I'm more attracted to the equal weight than I am to the Mag 7.
Quick last question then, what happens with the Mag 7? I mean, the reason why I'm so sympathetic to their outperformance is because look at the earnings differential. First quarter, they were up, Fab 5 up 84%, rest of the market 5%.
Well, if there's anything I want to do, I don't want to leave your viewers with the thought that I don't like the Mag 7. Terrific cash flow generation, as you're pointing out. The problem is they've just sucked up too much of the capital. So my thought is stop overweighting them, stop even equal weighting them, take some money off the table, and get to the other folks fast before the market really shifts that way, and you can make some money.
I think you've made a persuasive case. As always, Chris Crisanti, thank you so much.
Thank you, Kelly.
Appreciate
Good to be
your
with
time.
you. Sure.
MAI Capital. Much more ahead, but want to draw your attention to shares of Southwest. The FAA is launching an audit of the airline following a number of potential flight safety incidents. The shares are down nearly 2%. Southwest says they're working closely with the FAA and have an exceptional safety program. Meantime, the Department of Transportation is investigating Delta as the fallout from Friday's CrowdStrike outage continues. Delta canceling 460-some flights and delaying more than 800 today. They've now canceled over 5,700 flights since Friday, outnumbering the total cancellations they had in 2018 and 2019 combined. Delta shares are flat today, but down 2% since the outage. A check on the day's other big movers next. we're watching the potential election impact on the consumer. We're also keeping an eye on semiconductors, which are broadly lower today, with NXP the worst performer after earnings, down 9% after giving softer than expected guidance, citing weakness in its automotive segment. We heard that concern from an analyst yesterday, and concerns over growing competition in China in the wake of increased restrictions in the U.S. Flip side is Supermicro, set to snap a 6-day losing streak where it's down 13% in that time. VanEck Semi ETF broadly down 1%. Coming up, we've got the trade on payments, planes, and panels. We're talking Visa, General Dynamics, and Enphase and earnings exchange. We're back after a short break. Welcome back. We're going to gauge a little bit what the upcoming election could mean for the consumer, also for today's earnings exchange. For the action, the story, and the trade on Visa, General Dynamics, and Enphase, we're joined by Victoria Green, G Squared Private Wealth founding partner and a CIO and a CNBC contributor. Victoria, it's great to see you. So we have a wide range of companies, and after what happened with UPS today, we're brave. Anything could. And NXP, I mean, some big movers. Okay, Visa is tomorrow. The shares are flat amid a murky consumer picture. Got Fed rates, spending, analysts gaming out how swipe fee litigation and late fee regulation could fare under different administrations.
Yo, I might actually take along on the SPY
one I
here.
still like here, Kelly, because I think there's a lot of upside to this stock.
Yeah. Hold up. You're gonna wait a minute. You're gonna wait a minute. I'm gonna take the stage for a minute.
Saying it benefits most from increased presence in the Indo-Pacific region because of its naval contracts.
Yeah, I'm thinking about a long here, guys. We gotta hold this 555 though. 555 though. 555 though. We gotta hold 555 though. Look at the Q's already taking off. Q already taking off. Already taking off. Taking off. I'm on vacation and I ain't done shit. Done shit. I ain't this like I'm just making up words, you know what I mean? Freestyling. I have not taken a vacation in my life. We out here getting it. Vacations. Never mind. Let me not even offend. This is a very low volume bounce, but I'm all with it. I'm all with it. You guys ever seen Nutty Professor? Come on with it. Come on with it. Or like, what's his name? Shit, not Dave Chappelle, but damn it, he had a brother that hung out with Dave Chappelle or some shit. They made a movie about him with like Prince and shit. Damn it, I forget his name. Anyway, that's what they said in the movie, Nutty Professor. Come on with it. Come on with it. The grandpa. Come on with it. Come on, Cletus. Come on. Alright, let's look for this rally. Let's, you were right. You were right, Mo. Get him. You were right for the rally in the end of the day. Oh, yeah? I know you guys gotta hear my cat. You hear her? She just comes in here and just yells at me. Sweetheart, what is it? She said, Dad, I just want you to play with me. She's got the window open. She can look at the birds and stuff and hang out next to me. Come here, love bug. Come here, love bug. Come here, love bug. Why is... Oh, that's why. 24. Alright. I was wondering why these things were so expensive. Alright guys, hit the like button, subscribe if you haven't already done so. I appreciate you guys. Have we gotten any likes today? I'm just curious. Not a single one, it looks like. God damn. That's crazy. That's crazy. That's crazy.
Trump meeting with Netanyahu tomorrow, Wednesday. Don't sell or lapse your policy without going to abacuspays.com first. There are no fees and no obligations. Get the real value from your
We're going to begin with this earnings season. More signs pointing to that rotation we've been talking about the last few days. More signs pointing to smaller earnings growth this and next quarter for Mag 7 names. Our next guest believes this earnings season is going to determine market leadership going forward. Let's bring in Jeremy Bryan. He's portfolio manager at Gradient Investments. Jeremy, welcome. So I'm looking through your picks here, and the consumer plays big into this, whether we're talking about housing overall or just discretionary consumption. I'm thinking specifically about Sherwin-Williams and Coca-Cola. Sherwin-Williams did well in its last report. It's up 6% today, but it's also getting back up to recent highs. So why are you sticking with it here, and what does this say about what you believe the consumer is going to do in the back half of the year?
Yeah, I think it lends to both of what we talked about with regard to the consumer is these are resilient companies. These are companies that still get spend even if the consumer starts to soften a little bit. And you saw that in this earnings results for Sherwin-Williams is that, you know, their competitors were down more than that. And there was a lot of fear that this quarter was going to be a reset quarter, if you will, and then a potential acceleration going forward. And while the revenue was still a little soft, the earnings came in significantly better than expected. And I think the overall guidance and the thoughts on the stock itself seems to be relatively positive to where they can recapture some of that, let's say, loss from the interest rates that have been so high here recently, that if rates come down, we could see more housing transaction velocity. And that could lead more painting, obviously, as a result of that. And so that's why we really like the execution of Sherwin-Williams, and we're going to stay the course here on that name.
But that brings me to the real question for me about the consumer, which is, even if rates come down a bit, sure, we see a little pickup in mortgage activity, refi activity, people getting some cash in hand, needing to do stuff. But if they stay generally higher for longer, doesn't that keep a bit of a brake on the economy? And, you know, there's only so many cost cuts that companies can do before they have to either restructure or just say, hey, see us when we got some top line growth, right?
Yeah. You know, we've often said here, you can't cost cut yourself to prosperity. You just can't do it. You got to have growth at the end of the day. So in that side, if the consumer, now again, in rate cuts, if it's 25 basis points, does that really do anything for the consumer? We would argue not a whole lot. 50, if you're talking about 2 and 3 by the end of the year, could have a little bit of an impact. But for us, it's much more the reason of why we're cutting. Are we cutting because inflation we've done the job in inflation and the consumer remains resilient? Or are we cutting because economic and earnings growth is starting to show some cracks? Now, our best case and base case scenario right now is that it's the former, that we're cutting because inflation is getting normalized, if you will, while the consumer is still relatively resilient, even if they're starting to slow a little bit. If we see a change in that to where an earnings season will be, frankly, a large determinant of our thoughts on this, is if we start to see enough of these companies saying, we need to start adjusting our growth metrics because the consumer is weakening, then we'll pay more attention and we'll have to pivot as a result.
Yeah, and we spoke last hour with Chris Grisanti, who is convinced that this is kind of the happy kind of rotation, and that it's not a sign of a market that's
be careful. Be careful.
Kind of ending its run. It's really a sign
I'll
that
let you guys know what I
it's
do
broadening
here.
out, and a lot of other kinds of stocks can do well, the kinds that haven't done as well in the past 18 months.
Yeah, we're in a massively concentrated market, right? I mean, 37% of the top 10 of the S&P 500 was in the top 10. We certainly have been calling for a broadening out for a while. Frankly, we were early on that. What we still think, in our best case scenario, is that a little bit of both doesn't hurt. Is that you don't have to eschew the companies that got you here, if you will, but you probably want to think about their revenue and their earnings profiles decelerating. I'm not saying declining by any stretch of the imagination. Those top 10, those Mag 7 companies are still phenomenal growth companies, and I still think they will grow. The question is as they decelerate, are there other companies that have more reasonable valuations that are better long-term opportunities? And that's what we've been looking for the better part of 3 months. We think Coke and Sherwin-Williams kind of fit that group.
All right, Jeremy, thank you. Jeremy Bryan.
Yeah. Let's get to today's three-stock lunch now. We are diving into three names set to report after the bell. Chad Morganlander joins us. He's Senior Portfolio Manager with Washington Crossing Advisors. Chad, it's going to be a busy and interesting session. So Alphabet is first up, reporting Q2 this afternoon. AI ad spending front and center. Obviously, they're no longer going after Wix. What's your trade here?
So we own this in our rising dividend, or actually our all-cap value portfolio, and I personally own it, and we would be buyers of it. Overall, it's got a reasonable price of valuation, 21 times 2025 numbers, 10% kind of revenue growth rate. It's attractively valued, high-quality properties regarding YouTube, as well as its position, we believe, exceptionally well when it comes to artificial intelligence and able to push that out to all of their broader applications. So we think they have a competitive advantage for the long run.
Okay, up next, Tesla also reporting Q2 results after the bell. The EV maker is lower by about 1.5% today. During the first quarter, Tesla reported its biggest revenue decline since 2012, but deliveries were actually better than feared for the second quarter. So, Chad, what do you think about this one?
So this is a valuation issue. Multiples of over 50 for 2025 when it comes to EBITDA multiples. We'd be somewhat more cautious on this. This is an auto company. The hope is that they can move up the application spectrum to higher profit margin businesses like robotaxi. But look, I mean, Waymo, which is owned by Google, already has an operating functional network that they're rolling out. So we believe that they may be somewhat behind their competitor at this inflection point. So we would be a hold at best.
Which competitor?
Waymo, that's their competitor, which is owned by Google.
You're right, exactly. That brings us back to Alphabet. Okay, let's move along to Visa then, Chad, which analysts are expecting the company to report higher Q3 results. But the shares are down 1% today. They're up 10% or so over the past year, kind of steady Eddie. What do you think about this one?
So this is the perfect steady Eddie. It's actually owned in our rising dividend portfolio. We've owned it for many years. We think it's attractively priced. The multiple has come down a bit over the last several years. We believe that still that transition from cash to debit and credit is happening. It's about 75% penetration here in the United States, which is mature, but it's nearly about 50% within the European Union. So we think that they have still a positive tailwind behind them over the next 3 to 5 years. It's a high margin business, 70% EBITDA margins, and we believe that they'll have top line growth of roughly about 10%.
And then if I'm kind of reading between the lines here, Chad, would you agree with Jeremy Bryan, who we were just speaking with, who says this is a rally that, inflation's coming down for good reasons, expansion can keep going, rally can keep going, and maybe the stocks that were left behind start to play catch up?
Yeah, my partner, Kevin Karan, just published a piece about this regarding that. The concentration of the large cap tech names was so out of whack with historic norms that you could see a broadening out overall, and that will give a positive tailwind to all stocks across the board, in particular high quality stocks.
Yeah, that makes sense. Chad, thanks so much. Appreciate it today. Chad Morganlander. Yep.
Well, coming up, climbing the social ladder. Should public figures, or companies for that matter, allow intermediaries to speak on their behalf on social platforms? Well, you can get a positive reaction like we saw with Vice President Harris's Brat Summer, but on the other hand, it can lead to issues around authenticity and accountability. We will discuss next.
Welcome back. Welcome back to Power Lunch, I should say. President Biden's move to withdraw from the 2024 election via a post on X has got a lot of people buzzing about the weight social media carries these days. We spoke yesterday about Harris's team reaping the benefits by hopping on the viral brat trend. And we're not going to get into that again. But there are also big risks. Just take a look at the impact of Bud Light's controversial online marketing collaboration last year. The brand ended up losing its spot as the top U.S. beer. It also leads to the question, do companies and public figures generally need to be more careful with their social media accounts and personas? One of our next guests says it's taking companies
Nope.
way too long to
Speak your
realize
goddamn
just
mind
how
and who give a
successful
fuck who
social
like
media
it and don't
really
like it.
is.
Who
For
cares?
more, let's bring in Tony Ponturo, CEO of Ponturo
Speak your
Management.
shit.
And
Get it up
Tony,
off
what
your
did it
chest.
tell you? I mean, we all thought
say
Twitter
it
in some
with
ways
your
was a
chest.
platform
Say it with your
somewhat
chest.
dormant, maybe a little bit off its heyday, although they always insisted engagement was still at
Oh, this
all-time
fucking
highs.
guy.
Then the president uses the platform to put out his
Sits out all day long in his
notice that
fucking
he won't be
out of
seeking
his pool and
and now it feels like it's as or
fucking
more
red as shit
essential
from drinking all day, getting
Yeah,
baked
I
in the
think,
sun,
you know,
falling
sort of
asleep,
unfiltered
baking
media.
his body.
You know, I mean, social media has become sort of the people's platform. It's
Of
sort
course,
of
I'm
a direct
joking.
message.
Like, I don't know anything about this person.
What he
It was just a
did
joke.
was
Speaking
sort
my
of be
mind.
non-political in
Not
a way,
giving a shit.
even though X, you know, the old Twitter can sometimes have controversy.
All right,
Sort of,
Nvidia's
let me get
underneath
this message
123.
out without
Let's
sort of
take this
picking
dirtbag
sides
stock
of
to
a
122.
traditional broadcaster, if you will.
Right.
And I think we've all seen the power of the social media
Damn,
and
it's
how
probably
it sort
really
of
gonna
takes
get
a
a try
life
and attempt
of
to go
its
again.
own and really has this everlasting life in many respects.
There's
Which
just
is what
like
happened
nothing. There's just
with
like,
my old
sorry,
company
what's up, Mel?
overnight,
Sorry
is
about
they
that.
sort of didn't
I just,
anticipate.
I'm thinking that it's just, there's like nothing. There's just nothing. I wanted to get long there, and it just kind of happened that I never really got the pullback. Coinbase, 255. 255 on Coinbase, probably a 262 entry. $265 if you could get it. I'm not sure if you'll get it anymore, but looking for 255 on Coinbase. You might even get 245 over the course of a couple days. But Coinbase, right? That's where I'm looking. Coinbase, like names that are moving. Other than that, I don't know anything that's moving. You know what we could do? Let's go over here to breaking news. So you have Google, DJT, or DJI, Dow, Love, Disney, Amazon, Microsoft. Give me 1 second.
Those are government leaders just, you know, tweet stuff out on their phones without anybody else looking at it or strategizing around it.
It's a really good question, and
Yeah,
I
who
think
gives a shit?
absolutely yes, because what we're seeing is the mistakes and the gaffes, and we pay a lot of attention to that. But if we consider the entire package, on one side is occasional mistakes and gaffes, and they can be very painful. They can be embarrassing in the moment. On the other side, if you take someone like Elon, he has grown an absolutely massive following. With that comes leverage, with that comes power, with that comes freedom. And the other thing to note is when people get mad at him, they're getting mad at him now for things he's actually said. I would rather, maybe this is a personal preference, I would rather people get mad at me for my own mistakes and own those than to have people get mad at me for something that isn't accurate and that I didn't actually say and was paraphrased wrong.
Okay.
And so I think the two factors are the leverage and the power that he's gotten, even at the expense of some of those mistakes, makes it all worth it. And secondly, the mistakes are at least his own and not some other person's.
Right. But Tony, weigh in here. I would rather not make mistakes. I would rather not say things that piss people off unless I really intend to do it. And isn't that why people, often leaders, have somebody who's buffering in between them and actually letting that thing come out of their mouth that tanks the stock price?
Totally. CEOs and even top marketing executives are petrified
mostly of PR, because in their mind, all they can do is mess it up. And it's one thing for Elon Musk to be critical and have people, criticize him in the case of X, a private company. In the case of Anheuser-Busch, they've lost billions and billions of shareholder value by mismanaging the process. So you have to get executives comfortable. I think that's going to take a bit. But clearly, as Lulu says, the opportunity of messaging and where certainly anyone 35 to below is spending time on social media, and they trust it. Even though it's themselves talking to each other, they may actually trust that media more than they may, the major broadcasters.
No, I think that's a great point, Lulu. And how should companies be thinking about this when they're looking to get a message out? Often the social media manager is someone who's more junior, in part because they seem to be more native to the platform and understand it. And there's some messages that are maybe a little less impactful that they can be responsible for putting out. But in other ways, if social media is now the tip of the spear for any engagement with the public, that message that's going out there needs to be vetted through every level of the organization.
So I would say that's often a mistake, because what we're not considering here is that omission can be a mistake in itself, and being overly corporate and overly sanitized and coming off as tone deaf and insincere can be a mistake in itself. So there are times when a mistake made by a CEO saying the wrong thing is actually not as bad as a mistake made by being too slow, too insincere, too corporate, or too out of touch. And so I think it's worth weighing these things against each other. You might choose to do the latter, but you might choose to do the former. And the way you would try to get the best of both worlds is the CEO has to at least own the message. I think great CEOs take advice from people. Elon takes advice from people too. I think we picture it's just tap, 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 hit post. But a lot of times he does consult with people and does get input. So I think one is a lot of people should be involved in the process, but the CEO has to also be involved, because I've seen situations in companies where the CEO literally doesn't know what he just tweeted and doesn't know what the company is saying. So that's one. Two is for the person who hits post, you do need someone who's overqualified, who seems more senior than you would think.
Tony, last word here. It strikes me that all really good marketing is planned, and comms and marketing aren't the same, but they are cousins. Good speeches tend to be written down first, not just sort of freestyled up from behind a lectern. So is social media fundamentally different?
I think it's it's definitely different. It has to be prepared like a good speech or a good advertising campaign. I think it in some cases can be a little loose, because it's, let me just get something out, let me make a comment, let me say something. But I think if it's going to go up to a senior level, it has to be prepared, thought out, and strategized no differently than any other communication that company does.
It's so difficult, because that it's like death by committee, but at the same time, it's so important that it needs that touch throughout the organization. Well, thank you both very much for now. We'll leave it there, and we appreciate your time today for joining us, Lulu Cheng Meservy and Tony Panturo.
Well, coming up, spot Ether ETFs making their trading debut. So could this open the floodgates for more crypto funds to come? We will get the details when Power Lunch returns.
NBC.
Welcome back to Power Lunch. U.S. spot Ether ETFs are making their market debut today in what could be another major win for the crypto industry. Our Bob Pisani is here with more. Bob?
John, good to see you. 9 spot Ethereum ETFs begin trading today. These ETFs invest directly in Ether. Ether is the cryptocurrency that's used in the Ethereum network. It follows the very successful launch of spot Bitcoin ETFs 7 months ago, which have already seen roughly $17 billion in inflows. That's a lot of money for a new asset class. But Ethereum is very different from Bitcoin. Both utilize the blockchain, but Bitcoin uses the blockchain as a digital currency. Ethereum is a platform for building smart contracts, which are self-executing programs that enforce a pre-existing contract or agreement. The most common use is for decentralized finance. It's called DeFi. It's a fancy term for using financial services on the blockchain. So you can lend or borrow money. You can trade stocks or derivatives or even other cryptocurrencies. Ethereum enthusiasts are hopeful the ETF launch.
Lee, shit, it's humid outside.
And Ethereum. The big argument is Ethereum is really a tech play, different than Bitcoin, which is a digital gold play. So will this open the floodgates for more crypto ETFs outside of these two? You will still need to show that the underlying market was not subject to manipulation. There's legal requirements here, and the SEC may want to see regulated futures markets for other crypto assets developed. But if there's a regime change in Washington, it is quite possible you'll see a lot more crypto ETFs coming. Back to you.
I thought it was interesting, Mike Novogratz's comments this morning about how some people in the Bitcoin community are hoping former President Trump would announce a Bitcoin national reserve or something to that effect, which would go much further than I think many are contemplating.
No, I'll tell you how big this has become. The big Bitcoin conference is happening in Nashville.
Bitcoin. I can only speak for myself.
And former President Trump is speaking at that. Now, that would never have happened under any circumstances a couple of years ago, and it goes to how big the potential audience is for. I personally find Ethereum intellectually much more interesting as a smart contract and DeFi platform than Bitcoin, but overall, there's no doubt that there's a lot of momentum behind cryptocurrencies in general.
Is there any kind of supply-demand issue here? I mean, I notice it looks to me like Bitcoin is down a bit more than Ether is down today. Anything to that?
This is a question about whether the flows will be the same. Bitcoin is 1.3 trillion in assets. Ethereum about 440 billion. So Ethereum is about, in terms of AUM, it's about 1/3 the size of Bitcoin. And most of the people I'm talking to think that we're going to see proportionally smaller flows going into it. But again, it may not be just, oh, can you take money away from my Bitcoin account and put it in Ether, and I'll put 30% in Ether. The Ethereum enthusiasts really are hoping to sell the Ethereum platform as a distinct intellectual concept, different from Bitcoin, and sort of broaden the pace out. I think intellectually they have a very good point. I don't know if they can succeed, but all I can tell you is 17 billion in inflows into Bitcoin. That's a big success, and if they get 5 billion in a couple of months, that would be extremely successful as well.
All right, Bob, thank you. We appreciate it. For now, Bob Pisani. To the bond market now after a mega record-breaking nearly 2-year auction top of last hour and with key GDP and inflation data this week. Rick Santelli, what does that tell you?
Well, it tells me that yields probably are close to an area they're going to hold because we had super weak data. Philly Fed non-manufacturing, the service side, the lowest level since Dec of 2020. Everything we had today, including existing home sales, was weak. We had a super strong auction. All those should push yields down. And granted, they pushed a bit more on short maturities like 2s, 3s, 5s. If you look at an intraday of 2s, then open it up to a 2-day, we're trading below yesterday's lows on that maturity all the way out to the 7-year. But down 3 basis points in a 2, 30 years are almost unchanged. The point is that these dynamics are not only built into the market, they're built in plus when you account for the Fed. And there's another central bank whose meeting's coming up, the Bank of Japan, and that's next week. Now look at a dollar-yen chart. The yen is on pace to have its best close since the 6th of June. We'll call it 1.5 months. Why? Well, because there's a significant amount of nervousness that should the Bank of Japan raise, you know what that does to currencies. So
I don't know what happened here. The top screen just keeps getting messed up.
Attention to all central bank meetings
gotta
next
fix
week,
it every time.
especially the Japanese with the big Asian carry trade. John
I have to
Ford,
save it, save
back
it,
to
save
you.
it, save it.
Santelli, thank you. And turning now to the energy
It'll
market.
work for like
Crude
2 different
prices falling
refreshes, and then
to
I
their
gotta
lowest levels
refix
in
it.
6 weeks. Our Pippa Stevens here with more. Pippa, what's going on?
Yeah, that's right. So WTI is at the lowest level in 6 weeks. It is off the worst levels of the day, which had it down more than 2%, but it's still around the 77 per barrel level. Much of this is thanks to the ceasefire talks and the sense that maybe there has been some progress there. We've also seen very weak numbers out of Asia. Industry firm Vortexa says that the Asian refining nations have decreased their imports by about 900,000 barrels per day so far this month relative to last month. And so that is having an impact. Then nat gas down another 2.5%, hovering around its lowest since May. So with that, energy stocks are the worst group today, down more than 1%. But there are some movers ahead of earnings later today, including EQT.
I was going to say, well, in Enphase, you came back just in time.
I know. So let's start here, though. Let's get to Enphase next. But EQT, so JP Morgan actually upgraded the stock to overweight ahead of that report. They said that they've really underperformed their peers so far this year. You see, we have another chart that shows that they're the only name in the red so far, with their competitors like Chesapeake, Antero, Southwestern all in the green. So maybe a little bit of a catch-up trade there. They also completed their acquisition of Equitrans yesterday. That's the Mountain Valley Pipeline, of course, ahead of schedule. So other names to watch are Matador Resources and Range Resources, as well as Neighbors Industries. They provide drilling equipment. And then finally, Enphase. Enphase has traditionally swung a lot the day after earnings in both directions. And of course, the solar industry has been so challenged. So their guidance will be watched very closely.
Energy impact of U.S. politics and Vice President Harris looking like she's going to be the nominee, though we don't know.
Yeah, I mean, we saw the stocks rise yesterday, so clearly some optimism there. But I do think that the IRA, which has been so instrumental for clean energy, has had bipartisan support. And when you look at what elements of the IRA could be at risk, people I've spoken to so far say that it really comes down to things like the EV incentives. The bigger things like the solar ITC and then the PTC are not really quite as much at risk. Also, if you look at where the majority of the funding has gone to build these factories, well more than 50% is in red jurisdictions. And so it's a little bit of a tougher stance to want to repeal it when you're getting a lot of benefits there.
Yeah. Well, I'm a Gen Xer, so when I hear IRA, I think about Ireland.
The terminology Pippa has to know. I'm like PTC.
It was a poor name choice.
Pippa, thank you. Let's get to Julia Borston now for a CNBC News update. Julia?
Convicted Senator Bob Menendez will reportedly resign from office. Sources tell NBC News the New Jersey Democrat informed some of his staff today he would step down effective August 20th. A jury found Menendez guilty of bribery and corruption charges 1 week ago, finding he accepted bribes from 3 businessmen to derail several criminal investigations and act as a foreign agent for the Egyptian government. 2 powerful Democrats just offered their endorsement of Kamala Harris. Senate Majority
Keep
Leader
going with them
Chuck Schumer
Democrats.
and House Minority Leader Hakeem Jeffries held an afternoon press conference to formally back her for the presidential nomination. She already received a flood of endorsements yesterday on her first full day of her campaign.
He got to be
including
the
from former
ugliest
House Speaker
mother
Nancy
I
Pelosi
ever seen,
and
bro.
former President Bill Clinton.
It's so
And former
funny that they
President Donald
actually
Trump
think
says he
that
will meet with Israeli Prime
Kamala
Minister
could do a better
Benjamin
job or has a better shot than Biden.
This comes the same day the Israeli Prime Minister is due to deliver a speech to Congress, and 1 day before he's scheduled to sit down with President Joe Biden. Kelly, back over to you.
All right, Julia, thank you very much. Still to come, China's economy in turmoil, a real estate collapse, and its biggest single-day stock market drop in 6 months. We will dig into it when Power Lunch returns.
Welcome back to Power Lunch. Chinese stocks taking a beating on economic pressures. The country's blue chip index closing down more than 2% today, which is the biggest single-day drop in 6 months. Now, our next guest has been warning that China's economy is in trouble due in part to the real estate collapse. And Dennis Unkovic is a partner at Meyer, Unkovic and Scott, and he advises U.S. companies doing business in China. Also out with a new book this week called The Fragility of China, Breaking Points of an Invincible Regime. Dennis, great to meet you and have you here. I know you and Kelly know each other well, but tell me, is this China thing going to get that much worse?
Yes. You like long answers, but the answer is yes. The China has been in a declining position for at least 4 years. It wasn't just COVID. There were a whole bunch of things that came together. And in my opinion, the economy that they have is really going to continue to deteriorate for the foreseeable future because a third of the economy.
Sorry, guys, I had to use the restroom. I'm
going
gonna grab a bottle of water, and I'm kind of just being patient. There's nothing really going on. You might find some small caps at the end of the day, which we can go through real quick and see if we can find something there.
Chinese.
There was some news on safe. So what I did was I was looking at some of the volume to see really where our volume was at. And RY, what the hell is that? Royal Bank of Canada? UPS. DHR. Baby, what is wrong? Why do you keep yelling like that? What is wrong? There's nothing wrong with you. So I was watching the volume. There's just, bro, it's just a poop day. Just a poop day. CrowdStrike ended up working out. That's up 6%. CRWD. 4%. I'm sorry, 3.5. 6 million in volume. I guess that's what that was. Let's see, 6.17. So yeah. ARM had a good day. ARM is still green. It's up 5.5%. I don't know if there was any news. So if anyone has news on this, let me know because I would like to know why that thing popped off like it did. Out of nowhere, it just seemed to have like ripped. What else? CJET. Let's go through the scanners really quickly. MGOL. This is a double top here. That's a poop looking chart. It's not bad, but it's a poop look. Yeah, I don't like that chart. I don't care for this. What else do we have? MGOL, AZTR, CTR. That would have been a nice short right there. Would have been a nice short.
So if the past is any suggestion for what's coming in the future, that's my answer.
Would be any signs to watch for that perhaps this is moving in a friendlier way? And what is the takeaway for U.S. corporations who still rely on it for supply chain, and we're hoping to have it as a big market?
U.S. companies, I think, are naive in thinking that the relationship
MGOL.
are going to be the same in the future as they have been in the past. We're going to continue to buy things that are from China, but China is now essentially offloading their overcapacity on the world market. EVs is one good example, and they are desperate for money. And so as a result, Kelly, I just don't think there's a lot that they can do.
It's just one of them days, man. It's just one of them days. This one's falling apart. That would be a nice short. That would be a really nice short there. Hold on. She's getting froggy here. She's getting froggy.
At least for now. Dennis, thanks so much for your time. Appreciate it. Well-timed book, by the way. Thank you. Dennis Unkovic. Coming up, regional banks rallying in a
day with the KRE springing up 20% in just the past month. Can it continue? More on that when Power Lunch returns.
So KRE is up 20%. I guess pretty much since I called it out 2-3 weeks ago. 2 weeks ago. It's pretty crazy, isn't it? I made some really good money with that trade. That was probably outside of Goldman Sachs. That was probably one of my best trades this year. I think Goldman Sachs would still top it off at probably one of the best trades from entry to, not really entry to exit, but just one of the, just catching the huge breakout, 406, 404 long with a stop loss under 402, recognizing what was going on at the time. It was a beautiful thing. Beautiful thing. Let's look at Apple. Since Meta doesn't seem to want to move. Like, look at my 3-minute chart up here at the top right. Like, what the fuck is going on with this shit?
Gusto is the #1 choice for small business payroll. It's fast. It's trusted. It's a great value. And Gusto does a lot more payroll to make running your business easier.
Time access. Keep time. Zoomed in. Apply. Okay. Shall study. Let me make sure there's nothing like to the left or something stupid. What is overlap volume? Overlap volume. What does that mean? What does overlap volume mean? Let's see. Oh, that gayness. Oh God, that. Oh shit. I mean, it's not bad, but I don't dig it. I'm not digging it. I'm not digging it. When the chart starts out, you gotta freaking have it flat, and can't have it up because you can't see because of the freaking volume's huge out the gate. So that'll never work. It's just, it could work, but it ain't for me. Apply. Okay. Let's go back. What other changes can we make? What are some other cool changes we can make to this? Data box. Fixed rate. Data box. Fixed rate. Data box. Synchronized crosshair positions. Nah, I'm good. I'm good on that. I don't need to go crazy with all 4 of the charts. Price access. Price. Time.
Deregulation among the banking system if President Trump were elected, and all of that has created this spur rally in the sector. In the current administration, a more active consumer financial protection bureau.
Line width. What the hell is line width?
And a lack of M&A appetite have limited the upside in many regional bank stocks, analysts say. But the KRE has also gained more than 4% in the last 2 days.
Oh shit. Oh damn. Okay. Okay. Why did I never ever not? Ooh, I don't like it. Oh, it's all cloudy. Ew, it's all cloudy. That's ew. Ew, look at that. Look how dull it looks. Ew. It doesn't look sharp and bright and just like healthy. Yeah, go back. Go back. Apply. There we go. Yeah, just keep it right there. If you're gonna do anything, could probably fill my cup up. Could do something like that. Could do that. That's not bad. Anyway, it's one of those days, guys. This is what happens. This is what happens. I actually might go smoke a cigarette for the first time in a long time during the day. I didn't really smoke yesterday until like 8 o'clock, 7:30 at night. I could probably be done. Probably, but I'm no quitter, so. I'm not the one who likes to start something just to stop doing it. Alright, Apple is actually trying to turn red here. See if it's trying to pull back. I'm trying to zoom in on the daily chart because it's my shit's frozen. You okay, Abby? You okay, sweetheart? You okay? You got them eyes. Whoa, Missy. Missy, don't do that. You okay? It's okay. All right, so we have CrowdStrike. That's up. We have some airline news with Save. We have crypto. So I would keep looking at names like Coinbase, CrowdStrike, and the cybersecurity names. We'll look at airlines. You have Tesla and Google this afternoon for earnings. What else do we have? General Motors. General Motors reported earnings this morning. And what else? What else? So, like, these are the catalysts. This is what you can say. You got to think about. Like, where are you supposed to be at? If you're just picking random spots to be in the market, you're probably, probably in the list of, let's see, what is Caspi? Ryanair. Ryanair was up, I thought, or at least had a lot of volume. I don't know if they did okay or not. Logitech is down. Spotify is up. Spot's always been having good earnings. I think I just heard Jay-Z. A minute ago. Oh, Jay-Z is a stock. Yo, we got to get Jay-Z trending, bro. We got to get Jay-Z trending. This thing is still a stock. What about two Jay-Z's? I wonder if there's a two Jay-Z. Like, Jay-Z. There's gotta be.
Trump said we'll go ahead with debate with Harris and is willing to do more than one debate.
Welcome back. It's time for today's Power Check, and we'll start with UPS, tumbling 13% on those disappointing earnings, signaling its freight business still in the midst of a downturn, lower shipping volumes, weaker pricing, higher labor costs weighing on profits. Their margins are down 4 points from their high in 2022. Meantime, Meta unveiling its newest AI model. Llama 3.0 comes in 3 different versions, with one variant being the biggest and most capable from Meta to date. The announcement also highlights a close and growing partnership with NVIDIA. Then GE Aerospace. We don't talk about it a lot, but it reported better than expected results, making more money servicing engines than on selling original equipment. That business paying off nicely with a nearly 7% gain right now. And Wiz has walked away from a $23 billion deal to be bought by Google in what would have been their largest ever acquisition. Wiz telling employees they'll now pursue an IPO as had been previously planned. It would have been a boost to Alphabet's cloud segment, which has faced more competition from the frontrunners Microsoft and Amazon. Alphabet stock is higher, however, though, and we'll hear from them after the bell today. Speaking of earnings, NBC's parent company Comcast lower by 2%, beating on earnings, but revenue coming up short, and the main drag was actually its film studio business. Revenue in that segment tumbling 27% from a year ago, which some say could be a negative read-through for Disney. Both company shares are down about 3% today. John, that's your Power Check.
Kelly, thanks. Well, still ahead, hackers now duping folks out of the down payments on their homes. That's a lot of money. We will get the details when we return.
Thank
I'd
you.
warn you there.
Catch more of that story,
Great to have you.
CNBC.com. We appreciate it.
Yes.
And thanks for watching Power Lunch.
Closing bell starts right now, and overtime's right after it.
Welcome to Closing Bell. I'm Mike Santoli in for Scott Wapner. This make or break hour begins with the key indexes caught in earnings season cross currents, while money continues to flow into small caps and bank stocks from traders willing to bet the revival of first half laggards can persist a while longer. Let's get a check on the scorecard with 60 minutes to go in regulation. The S&P 500 holding on to Monday's 1% gain and had a modest further rally earlier today. It's not flattened out as earnings winners such as GE Aerospace and Sherwin-Williams helped to offset sharp drops in the likes of GM and UPS. GM, which had really rallied into the number and had good ones, but down 6% on the day. The NASDAQ flattish with some pressure on semis after that group's strong bounce to start the week. And the small cap Russell 2000 once again demanding attention. Now 1.4%, second day in a row where an indifferent open drew in some buyers and they started to ramp that index. Regional banks continue to track those smaller stocks. The KRE ETF up another 2% today, ahead by some 18% this month alone within the Russell 2000. It is also financials that are the strong area. That takes us to our talk of the tape. Will earnings season serve as a support or a stumbling block to a fully valued market working to digest a strong year-to-date rally? Here to kick that around is Dan Greenhouse, Solus Alternative Asset Management Chief Strategist. Dan, good to see you.
Thank you, sir.
So there's really a lot of, I guess, back and forth within this market right now, which actually seems kind of placid. The S&P, 2% off its high, no big deal. What does earnings season hold for this fundamental story, which I think is really riding pretty high on soft landing confidence?
I think this is the point where I'm supposed to tell you it's not about earnings, it's about the guidance.
Well, yes.
Of course, I'm joking. I actually don't think there's much to this earnings season that I'm concerned with. I mean, normally the answer is it's about the guidance. And obviously in the case of large cap tech, you care about CapEx, you care about margins. There's a lot. I don't mean to dismiss it entirely, but I think the issue right now, of course, is rates and the Federal Reserve. And I don't always feel that way, even as someone who invests and looks at markets from a top-down perspective. We have the Fed meeting in 2 weeks, and I think how they characterize the environment in front of what we assume will be a rate cut in September is every bit as important as what's going to happen in earnings season, with the caveat, again, that large cap tech, CapEx margins, et cetera, are going to be crucially important.
Well, what about the market behavior in the last couple of weeks indicates which way the market's leaning? In other words, have we basically priced in 100% September cut, 100% they're going to stick the soft landing, and therefore the direction of surprise isn't anything that deviates from that, or we have a cushion?
That's probably right. Listen, it's hard to look at the level of credit spreads, it's hard to look at valuations and not assume that they're telling you the market thinks that we're more or less going to stick this landing. And I'll repeat my long-held view that it is not a soft landing until the Fed has actually reduced interest rates and the economy and markets have been able to sustain that move. But I would also add, you look at the companies that have already reported, and you alluded to it already, that GE is offsetting GM, let's say, and you see that in a number of places. I mean, again, getting back to my original point, I don't think that there's anything particularly to worry about in this particular earnings season. And you've heard from Pulte that, yeah, there's a little bit of wobbling in demand, but Lennar told you, D.R. Horton said everything was fine. And Kimberly Clark said there was some trouble at the lower end, but Coca-Cola was able to raise price and have volume. So you have very much
if anything, do you think might disturb things? I mean, if you think that the swing factor now is we need the Fed to do what everyone expects it to do, what's it going to take?
Well, on the valuation front, I've been at this for some time now. And I don't recall.
As we've established, not quite as long as me, but
not quite as long as you. That's right. But listen, do you remember a time in the last 20 years, let's say, when the regular parade of those of us who come on the network regularly were saying the market's a screaming buy? No.
Actually, I know, but I remember in the early 2010s, when we were at 12, 13, 14 times earnings, people were like, that's fair. That's what it should be.
It's fair,
because
but
there's a lot of uncertainty.
Because we were waiting for the shoe to drop, and every rally was a fake out, and certainly pre-2011 and around that time frame, new lows were always just around the corner, and so even at fair value, the market wasn't screamingly attractive. So I don't know that, listen, 21 times is obviously not as cheap as 15 times, but right now I think the earnings in the market backdrop is justifying those high levels. Now that said, to your point, if something changes narratively, and in my forecast horizon, I do not have that.
Yeah.
But if something were to go awry, the weakness we see in the labor market spreads out, or the weakness we see at the lower income consumer starts to spread to the middle or upper income consumer, then sure, we can have a conversation that certain pockets of the market for sure are too richly valued, credit spreads too tight, et cetera, et cetera. But that's not what we're seeing right now. We're seeing a deceleration from unsustainably high levels of growth in the third and fourth quarters of last year, back to something akin to normalization. The CRE troubles, which we were told were imminent, have not come to pass. You had
It's crazy. $3 million funded. This dude been on YouTube for a long time. If he don't have his own money to be funded himself and has lost his money throughout the years, please watch who you watch. Please take notice of who you are taking advice from. There's no reason, I'm gonna tell y'all right now, with the amount of views and everything that this dude has going on, I'm not, I don't have anything against Patrick and stuff, but like 3 million funded. Why?
50 contracts sitting at the 990s. What do you think?
No. What are you doing? The market's not moving. Stop trying.
The guy, I just learned that Joe Biden's middle name is Robinette. What is Robinette?
Do you know what's wrong with so many people? Something with Apex.
NASDAQ trying to break out, I feel like, to the upside right now, but very just choppy here below the VWAP. We get some buyers trying to step up here. VWAP right there, the 85.
Don't worry,
if
they'll
we
be
can
met
get
with
this
some
breakout,
sellers.
put in a higher low up above that 990 level.
Just
I think it might be
how
a
the
good
day has
idea
felt.
to, oh God, what did I just do? Oh, thank
But
God. Control Z.
so like probation status not
Control
met,
Z,
getting
baby.
locked out of accounts, like funded
Patrick,
accounts.
do you just bash Biden every day on the stream, or do you
Of
actually
course, let's
trade
hope so.
or give trading analysis? No, this. Did you not see the title of this live stream? It says, "Bashing Biden every day, no day trading allowed."
I love it. I love it.
Getting real tight right here. There's a big move to come for Power Hour. Right now, I think we're.
I love it.
I think we're gonna make this move up, boys. I don't want to get too overly confident here, but I'll be waiting to see if we get above that 990 level. Put in a higher low there for a move
I
up
love
through the
bashing
20,000s
Biden.
here.
Keep it
today.
up.
Will it happen?
But for anybody out there, just take your time and grow your own money. Seriously. I mean, you want to go get a funded account? Cool. Go ahead. I would suggest even like learning how to do it. set your ass up with a one-on-one with me, and I'm going to take care of that ass. All right? Without giving you a pitch, without upcharging you, without blowing up your phone, without blowing up your information, selling you information. You got to remember that a lot of these motherfuckers out here are little sharks. All right? They're going to fucking pass your information around. They're just going to rinse. They're just going to just wear that shit out. Go to the bank, and if you ain't got good credit or all that other shit, then you need to focus on that. I get it. A lot of people want to make money. This is a place to do it. You can do it. But I would just say learn how to do it and use your own money. There's no reason why you shouldn't be able to grow your own money. The only reason people use these accounts because they have not been able to grow money. They don't know how to keep the money and grow the money over a period of time because they trade during days like this. I haven't made a trade. I wanted to trade CrowdStrike, but I was a little slow on that. You know what I'm saying? So I'm gonna have to make my live stream. I'm gonna have to turn my camera back on and try to figure out how to make a whatchamacallit, something like he had. But I'm gonna make my title that Bash Biden Day. Bash Biden and Kamala. She is so hot.
About breadth
I don't
for
care
this
what
whole
anybody
year,
says.
but we're starting to see some of that come out a little bit, and not just in the Russell 2000, but small caps I would be a little bit concerned on because 90% of the return we're seeing in the Russell 2000 right now is from PE expansion. It's not being supported by earnings yet, so I would wait until I saw the earnings support come in. We're seeing that in the large cap, so I think that's where you would put some money to work, but really you're seeing some of those sectors that have been so down at the beginning of the year start to come back. I think that's where you would put some money to work, focusing on that quality factor.
Yeah, quality, interestingly, is where money has been coming out of at the moment, I guess, Victoria, in favor of some of those, less financially strong companies in the small cap. Dan, I mean, I guess the question from here is, we came into this phase when we started talking about this rotation, by the way, when the CPI really came in convincingly in retreat a couple of weeks ago, we came into it narrow rally in the S&P, but with this idea that we were due for some kind of seasonal break. You mentioned early July, things were looking a little bit stretched technically. You did see sentiment started to get a little happy. Positioning, we now know, was very crowded in those areas. So what are we looking for to figure out if a lot of that has been sorted?
I think when you when you talk to the desks around the street, their opinion is a lot of this has been sorted. And what are we talking about? In early July, a bunch of us on the desk would talk about, in a very simplistic fashion, the spread between how far the indices had gotten from the 200-day moving average, let's say, was probably suggestive that some digestion was in order. My argument was in front of the Fed meeting at the end of the month, you'd probably digest for the entirety of the month. That appears to be bearing out now. And the data that I think the street would advance is you had incredibly offsized positioning. Everybody was only long one sector of the market, not another. And what you've seen since that is retail inflows have been enormous. Some of the positioning has been corrected, if not entirely corrected. And so there's a view here, both historically, in terms of when the IWM outperforms the SPY by X percentage over Y dates. Going forward, you have a little bit of a digestion. And then in conjunction with how those positioning figures have adjusted themselves, the argument is in the next, call it month or two, you'll probably reverse some of this because it's been such a dramatic outperformance. But I would add, from an investor standpoint, and this has been phenomenal for funds like Solis's, because we don't do large cap tech investing, more or less. We're not sort of benchmarked into the S&P in that way. So when you see the IWM, when you see the other sectors of the market outperforming, it's terrific for us because we can do better, to put it over simply. And when you go back to that July 11th CPI report, what's done best since then? Well, we've talked about the financials, but it's been REITs. It's been home builders. It's been a couple of interest rate sensitive areas of the market. That allows managers to perform much better because it's not only 4, 5, 6, 7, 10 stocks that are driving all the gains.
So we can stop weeping for the active managers. That's what you're saying.
Some active managers, please weep for us and send us your flows. But besides that.
Marcy, Dan mentions just, the rate sensitive parts of this market and just really the general fact that.
This is so dumb. I don't know who the hell would do this, but it's a damn shame. Look at this. 3-rotor 20B swap to McLaren P1. Are you fucking insane sound? Bro. That's not insane. It was like you would have been better off. You would have been better off just buying the shell. Just buy the shell.
Row 1. What exciting benefits do you get as a person?
Holy shit! You can't use it to move. It ain't going anywhere. Oh my god, it sounds so menacing. He revs it at 9,000, 10,000 RPM. So menacing. Until you actually hear something that's actually menacing. Hold up. Some news here.
During Q2, the stock at a 4-year low. And Danaher rising 6% following upbeat earnings from the medical
hold on
company,
1 second, guys.
which also reaffirmed its guidance. Danaher's CEO pointed to sustained positive momentum in the company's bioprocessing business. The stock at its highest level in 2.5 years. Mike?
Pippa, thank you. All right, we're just getting started. Up next, the mega cap earnings parade is kicking off with Alphabet results set to hit in under an hour. We'll hear from an Alphabet shareholder, Ayako Yoshioka, and tech expert Alex Kantrowitz about what's at stake for that stock when it reports in overtime. That's after this break. Plus, what to expect from Tesla's report after the bell today. We are live from the New York Stock Exchange. You're watching Closing Bell on CNBC. Welcome back. We're less than an hour away from Alphabet earnings, kicking off a critical 2 weeks for the mega caps. Those results coming on the heels of its rejected attempt to acquire cybersecurity company Wiz. Joining me now for what's at stake is Alphabet shareholder Ayaka Yoshioka of Wealth Enhancement Group and CNBC contributor Alex Kantrowitz of Big Technology. Welcome to you both. And, you know, Alex, it's remarkable. Alphabet stock over the last 2 years has outperformed the S&P and the NASDAQ 100. And that's even with that kind of initial scare after ChatGPT came out and people thought Google was going to be a net loser in that. What does that tell us in terms of where the company sits right now?
Yeah, you're right. 32% increase year to date. The company is rolling. And it shows you that it's really survived this first era of generative AI. You know, a year ago, the conversation was all about how search was disrupted and we weren't going to see Google survive this era. And we just haven't seen the migration of consumers to generative AI applications the way we expected in the beginning. And by the way, as this was happening, there's this thing that everybody ignored, which is that we were in this moment of looking for efficiency. And search advertising provides that efficiency. You spend with search, you have a really good way of tracking where your dollars went. And so for Google, it's been a moment where it survived a massive threat and its main product is doing great for advertisers. And so it's a complete narrative reversal for Google and the company is performing extremely well.
Aya, what are the key themes you might be looking for clues about in the results today? You know, it seems as if the way Alex presents it, the way the market seems to be treating it is, you know, they're able to defend the franchise that they have. I wonder what else it means for the future, though.
Sure, and I think in this environment in which we've seen some softening in terms of, you know, economic growth or some moderation here, you know, I think people expect that some of the ad revenue would follow in terms of moderation. But we are seeing that some advertisers are actually, you know, picking up and dialing up some of the advertisement in order to spur the consumer demand, you know, in this softer environment. So we'd like to see that come to fruition. And then cloud growth, I think, is the other area that we would like to see additional detail on and how generative AI is really, you know, impacting that growth.
And you know, CapEx or general expense management sometimes becomes a bit of a concern when it comes to this company. I mean, you know, CapEx, I guess, is set to go from $32 billion to around $45 billion year over year in 2024 and then higher still. You think the market is going to embrace that idea and be happy to reward?
Let's go. I didn't know we have 5 legs. Let's get it.
Well, you know, they talked about having CapEx being at least $12 billion per quarter in 2024. And I think if it's going in the right direction, if they're getting that return on the investment, and I think this is why the attention will be paid in terms of the impact of generative AI on the cloud growth. So we need to see that spend come through and generate revenues.
Are we nearing a point, Alex, where it seems like you're going to want to have better visibility into what the payback is going to look like for these investments?
Yeah, that's the key question, right? So Google has beat earnings expectations and revenue expectations for 5 straight quarters. But they've had pullbacks in some of those quarters, except when they start talking about AI. When they've talked about AI, all of a sudden spending $12 billion in a quarter or $45 billion in the year isn't so bad. But that's been until now. And over the past few weeks, we've started to see companies, including Goldman Sachs and Sequoia, start to say, hey, where's the cream filling here? Like, where is the ROI on this AI spend? And of course, we're real early. We're starting to get better compute. We're starting to get bigger models. So we are going to see a more exponential improvement in the models the AI industry hopes over the next few months. But that being said, it has to start translating directly into revenue for these companies. Otherwise, telling the market you're going to spend $45 billion this year, it's about AI. Oh, and by the way, that revenue might return an investment in 25, 26. That's going to be a lot tougher to sell, and it might actually cause some problems for these companies.
Sure. And then when it comes to this potential acquisition that seems now is not going to happen of Wiz, I mean, it wasn't going to be big ever relative to the size of Google, but tell us anything about you know, the freedom to move and the freedom to expand by acquisition for this company right now.
Sure. I mean, they've got the cash on their balance sheet in order to, you know, acquire something like Wiz. I mean, they've got a net cash position of $80 billion. I think perhaps some of the regulatory scrutiny that Google has been under for several years may have played into this as well. And so we'll have to see, you know, exactly what type of acquisitions they can make and actually close upon in the future.
Alex, you think that there's broader implications of this this squandered deal here?
Well, I don't know 100% that this is because of antitrust.
Yeah,
like they were
exactly. We
in
don't really know.
negotiation.
Yeah.
Are they throwing this out there to try to get a better deal from Google? That's always a possibility. But I will say, right, there's two theories of this. The VCs want big tech companies to be able to acquire startups because they get their return faster. What the government said recently is like, look, let's let this breathe a little bit. Maybe we push a company like Wiz to IPO where they can get more than $23 billion. And this is the philosophical divide and debate that we've started to have around these companies. And honestly, I think it's not a terrible idea to test out the second option, which is to say, okay, you don't have to decide that your exit is going to be with an acquisition. Why don't you see how far you can get and go public? And it's honestly worked in a few cases so far. So let's see what happens.
Especially if the deal would have taken a long enough time to actually get the payout and close. You know you can probably execute this IPO relatively quickly.
And maybe we see a change in regulatory regime in a few months, and then they try again.
Exactly. It's happened before. Alex, I appreciate it. Thank you. All right, up next, gearing up for Tesla, the EV maker preparing to report results. Top analyst Dan Ives is with us, revealing what he's expecting and how to play the print. He'll join me at post 9 after this break. And don't forget, you can catch us on the go by following the Closing Bell podcast on your favorite podcast app. We'll be right back.
Jim.
Welcome back. Shares of Tesla sliding as the company prepares to report results after the bell. The EV maker experiencing a rocky start to the year in which it cut more than 10% of its headcount, and so its second quarter deliveries decline. Here with me at Post 9 to discuss what investors are focusing on and what lies ahead for the company is Wedbush's Dan Ives. You see there Tesla down 1%. So Dan, year to date, it's actually kind of flat. It's been quite a ride. You know, it goes down to 175 and pops back up to current levels. Over the course of the year so far, also because earnings estimates for the year have gone down, it's, you know, stated PEs from like 65 above 80 now. So where does that leave us? I mean, what does the company have to show in order to convey that there's some progress on the important stuff?
I think two dynamics going on. One is the demand story, specifically in China. It's that turnaround. I think we saw it so far in 2Q. The big focus will be Musk talking about that second half of the year. And then the biggest thing, too, is pricing. I mean, you're talking about a company that, as we've talked about a lot, cut prices a lot the last year. Now you've seen a stabilization on prices. That's important in terms of the gross margin, call it 16.5%, 17%. But then the big reason the stock's up, it's about that AI robotics play. Robotaxi day, I'd expect Musk to actually give a date. We'll call it early to mid-October. And these are the important things right now that have really been, I'll call it a bit of a renaissance of growth for the comeback kid, Tesla.
They're important things definitely for the stock and how it trades. I mean, how important, at least anytime soon, is that going to be for the company itself in a tangible way?
Yeah, I think from a stabilization, it's about EV demand. Demand clearly has started to stabilize. And you saw GM clearly pulling back a bit from an EV strategy. Tesla's doubling down. Do they talk about that sub $30,000 vehicle, call it in 2025? Do they give the roadmap to where you could look per quarter, get on that run rate to we'll see 2 million into 2025? Then investors, that stabilizes the story. And then really the cherry on top of the sundae, or really what could be the sundae, is the AI story, the robotics play, FSD, autonomous. That's really ultimately how you get to a $1 trillion, $2 trillion valuation.
500,000 per quarter is like up 10% or so from here, we'll call it, right?
Yeah, and up better than down, right? I mean, that's the most important thing in terms of that trend that we're heading toward.
And what are the assumptions about overall EV demand, right? Because the whole story has been, sure, market share of Tesla is going to go from near 100% down to something else as everybody else rolls out EVs. But what's the overall pie growing at this point, or is it growing anymore?
Yeah, clearly slowed. I mean, you saw the boom come off the rose, and we've seen Detroit, in terms of GM, Ford pull back, others have pulled back. A lot of the startups have really fallen, you know, off the cliff. Yeah. And that has led to Tesla gaining share, but China's really the story. I mean, China's the hearts and lungs of the Tesla story. Stabilization there, despite what we see BYD, NIO, and others, that's going to be the key, showing that we're seeing strength in terms of the second half, but also stabilization from a gross margin. I'm sure LeBeau will talk about that in terms of where you feel like the worst is behind you. If that happens, that's also why right now a lot of bears, they're in those caves, not understanding what's happened to Tesla over the last 3 months. It's really now about that stabilization happening from Musk and Tesla.
When it comes to the policy piece of this, of course, Musk obviously very provocatively is out backing Donald Trump for president again, kind of doesn't mind, or maybe thinks he'd be okay with getting rid of EV credits or whatever might happen in that scenario. How would that play through with Tesla's business?
Yeah, so if you think about the Trump trade, so if Trump ultimately got into the White House, the view is negative for EVs because the $7,500, the rebate would go away. Yeah. Negative for GM, Ford, Detroit. The reason bullish for Tesla, that would give them a price and scale advantage. The other thing it's viewed is that if Trump got in the White House, could that fast track FSD autonomous relative to what we're seeing in terms of playing out versus China? On the other hand, if you look at a Harris ticket, could that be pro-EV for Detroit, maybe anti-Tesla, just because it goes back to the view that Musk has really been a background noise under Biden administration and Trump administration? Is that something that'd be more front and center? And that's why I'd say Tesla's part of that Trump trade to some extent.
And when you say, you know, the potential for fast tracking full self-driving, is that because you feel as if, or the company feels as if, you know, currently regulators are just very skeptical about permitting any of these, you know, further rollouts?
Yeah, well, clearly a lot of noise around Tesla story, and a lot of it, you know, warranted. But the regulatory environment. It's viewed, if a Trump White House, you maybe have less regulation, potentially could fast track, some of that FSD autonomous, depending where that goes for Tesla. But then it also speaks to what's happened in China. China is the opposite, where you're really seeing that kind of fifth gear in terms on the FSD autonomous side. And that's why I'd expect Musk to talk about the political race going to November tonight in the call. But no doubt, even though bullish Trump where he is, ironically negative for EVs.
Yeah, right.
And that's all part of this Rubik's Cube that investors are trying to figure out.
Yeah, of how the competitive setup plays out. All right, Dan, good to see you.
Thank you.
Talk to you later. All right, up next, we're tracking the biggest movers as we head into the close. Pippa standing by with those. Hi.
I just want to have
Michael,
some
two
people
consumer
get
stocks are moving in different directions
just to get some
after
people
earnings.
feeling
We've
some
got
type
all the
of way.
details coming up next.
I'm fucking bored. What, Turkey? Let me do that in a second here. Let me do that in a second. Oh, fuck. Guys, I think I'm out of here. Alright, Tesla, Google earnings after the market closes. I still don't think that that's going to be enough to just like pick a direction. I really don't. So hope we just have to hope that we get some type of news and that my cat finally stops yelling and screaming at me. Here, do you want to say it into the mic? Here, do you want to go in the mic and say it? I'm not sure if you guys heard that or not. Come here. You probably heard that one. Anyway, Ford. Wait, today's Tuesday. Today is Tuesday. So we have Visa, actually. Visa, you're going to get a look into some of the credit. I know Visa had something with like some fraud shit. Chubb. So we got some decent earnings coming up here after hours. Let's see. So yeah, end phase should be fun to trade. You have a few more airlines coming up. American Airlines, I think that's later, American Airlines, Southwest. Yeah, American Airlines is Thursday. So I don't know. We're gonna get Google, so we'll see what happens here. It's fucking boring. It is what it is. So if I see something, I'll let y'all know.
.com.
18 minutes till the closing bell. Let's get back to Pippa Stevens for a look at the key stocks to watch. Pippa.
Hey, Michael, Lockheed Martin is jumping 5% after the company beat Q2 numbers on the top and bottom line, while also raising its full-year earnings and revenue guidance. The defense giant said demand remains robust and that it has a backlog of nearly $160 billion. Sherwin-Williams adding 7% after topping earnings estimates, although revenue did come up short. The paint maker also raised its full-year earnings guidance, but still, the company noted a choppy demand environment, adding that general industrial demand was lower in all regions, with heavy equipment and transportation down most significantly. And Kimberly-Clark in the red as a revenue miss is offsetting higher than expected earnings. The Huggies and Kleenex parent said it's navigating a dynamic consumer and retail environment, including value sensitivity more broadly across staples. The stock down 5.5%. Mike?
Pippa, thank you. Procter & Gamble down almost 1%, it seems, on that Kimberly-Clark news as well. Up next, a media stock triple play. We are tracking some major movements in key media names. Spotify shares popping with the likes of Comcast and Disney dropping. We'll tell you what's driving those moves and what it could signal for the broader space. That's just ahead. Closing bell, be right back.
I have the worst migraine, guys. I have the worst migraine. I'm ready to get a